and Bloomberg Market Intelligence. Find out more at BloombergLaw.com.
All right, Jeff, thank you. Now another legal story we're watching. The new Supreme Court term starts today, and this week the court will hear an important case involving redistricting and the new districts being drawn around the country to govern the next decade's elections. This case involves Alabama's congressional maps drawn by the Republican legislature, which pack black voters into one of 7 districts in the state. For more, Bloomberg's June Grasso speaks to former United States Solicitor General Gregory Garr, a partner at Latham and Watkins.
Merrill v. Milligan, Alabama's congressional map, about 27% of Alabama's residents are black, but there's only one majority black district out of 7 in the state.
So this is another election case, and the question in this case is vote dilution under the Voting Rights Act. And the allegation in this case is that the legislature has impermissibly diluted the black vote by splitting up black communities and drawing the congressional districts. And this is obviously an important and recurring issue in drawing districts across the country. And in some respects, it overlaps with the admissions cases, in that, all of these cases involve questions of how race can be used by government decision makers. And the Voting Rights Act is an area that this court has been fairly active in going back the past decade. And with the newly constituted court, there are a number of recent justices who've come onto the court before the last big voting rights case. This is an opportunity for the court to re-examine its precedents in this area and consider the proper role of race in adjudicating a vote dilution case under the Voting Rights Act.
So in February, the court in a 5-4 vote put a hold on the lower court's order, which had required Alabama to redraw its map. And in her dissent, Justice Kagan said that accepting Alabama's contentions would rewrite decades of this court's precedent about the Voting Rights Act. I mean, if they did that, that wouldn't be particularly surprising considering what they've done to the Voting Rights Act even before the addition of the 3 Trump appointees.
I mean, that's certainly true. If you go back to the Shelby County case, it was one of the more contentious cases.
Coal is the single biggest contributor to climate change. It is not only bad for the climate, it's also really bad for public health. The Beyond Coal campaign is
in Southeast Asia, speaking exclusively to Glint's co-founder and CEO, Oswald Yeo.
Plus, Brazil's presidential election heads for a runoff, the latest on an unexpectedly tight race between President Jair Bolsonaro and his leftist rival. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Well, as we have been reporting, China closed for Golden Week. It's also being seen as a crucial test for consumer confidence and closely watched by investors indeed for any signs of economic recovery here. Well, certainly when we've seen these other public holidays, we've seen not the kind of mass tourism, seen a huge fallback in what's been going on in tourist numbers and spending. There we go.
Yeah, so it might not be too good this time around, just given what we've been seeing basically for the past year or so. There has been, obviously the borders are still shut. They're not really encouraging domestic travel even too. So, yeah.
Yeah, but how does it affect things? Chetan is still with us, Chief Asia Economist from Morgan Stanley. Chetan, OK, we're seeing big falls in just the number of tourism spend, but that's, of course, not the only leg the economy's on. We've got a housing crisis. All of this really creating, arguably, a big headache. It is for the ruling party. Now, give us a sense of how this is playing out from an economist's point of view, and, of course, we can't ignore the lockdowns.
Right. So there are, three things that are affecting China's macro outlook. One is the export slowdown, and we are expecting DM growth to be below 1% over the next 5 quarters. So that will mean that Asia and China's export growth will be weak. Over 60% of China's exports come from SME. So there is going to be a job market implication out of this export slowdown that's ensuing us. And then the second problem is the property sector. Now we are hearing a lot of actions being taken by the property for the government for the property sector, but that's a very complex problem, and it's going to take some time to resolve. So the only policy lever the government has is to get ahead with this transition to living with COVID and revive consumption, which is a sizable proportion of GDP. And so it is in that context is what I was mentioning to you guys in the earlier session, that they're going to have to make that transition. Now, look, the pushback that we get is that the government has been managing it so far, and what's the trigger? Well, the trigger is that if you look at 2 important statistics related to China's labor market, one is that the youth unemployment is running at around 19%. And then the second is that the wage growth, if you look at the household income growth, that's decelerated to just 2.6% on a year-on-year basis. It used to be 8.5%. So we think it is in line with the government's objective to achieve common prosperity by taking care of reviving economic growth rate with this transition to living with COVID.
And maybe beyond just China, if we do see some kind of turnaround next year with COVID-0, what sort of economies are you looking at that might benefit from that reopening? Are there particular economies that you think are more resilient or more vulnerable in the next year to come?
Well, in general, I think independent of China's COVID policy decision, I think the economy that is standing out in the region is India. And secondly, I would say Indonesia. So those 2 countries are doing extremely well because we think that they are able to generate domestic demand alpha through their own domestic policies and the business cycle situation. And if China does get through to this transition, the economies that will benefit really are the North Asian economies. So Korea, Taiwan, and then Japan are the 3 which are more exposed to China.
Chetan, great to see you again. Thanks so much for joining us. Chetan Iyer from Morgan Stanley there. Just some lines that are crossing here when it comes to Sony. Now, they are betting big, set to target 2 million PlayStation VR2 units by March of 2023. This is according to our sources and our reporting. So that is quite an ambitious outlook that really kind of defies what we're seeing globally here, too.
Absolutely. But no official price yet. We don't have a release date for this PSVR2. Slips off the tongue, that one, doesn't it? Current plan is to start selling the headset in the early part of next year to coincide with the expected relief of the supply chain bottlenecks that have really, I suppose, hampered the availability of the PlayStation 5 console. I think that was launched in late 2020. There we go.
So yeah, of course, there's a lot of offerings out there when it comes to VR goggles, HTC, Meta, of course, with Oculus. So how the Sony one really fares in all of this here, pretty interesting. But yes, apparently they haven't faced any supply chain constraints yet. That's according to our sources. We see the stock up some 1.6% here today. We got plenty more ahead. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Welcome to the world of decentralized finance. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
All right, there we go. That is the scene in Brasilia, Rio de Janeiro, apparently. It is at the time 11:24 p.m. there. We are talking that is the current president, incumbent president of Brazil, Jair Bolsonaro, speaking after he just came shy in the runoff election against Luis Inácio Lula da Silva. It's going to be an election which goes to a runoff after Lula fell shy.
Yeah, it's going to be a competitive one. Goldman saying already this runoff poll is key to determine the market direction, but that may lift Brazilian assets. We'll see how things fare when they wake up as well. Your latest business flash headlines now. RWE has agreed to buy Consolidated Edison's renewable energy assets for $6.8 billion. One of the biggest ever green energy deals in the U.S. The deal will almost double RWE's U.S. renewables portfolio to more than 7 gigawatts. It sparked criticism, though, from one activist investor. Earncraft Capital says it's, quote, incomprehensible that Germany's biggest energy company can pursue such a large deal when the country is in the grip of an energy crisis. Dubai has set a new property sale record with a mansion on Palm Jumeirah Island selling for more than $82 million. The luxury home is still under construction and will feature 8 bedrooms, 18 bathrooms, a cinema, a bowling alley, and underground parking for just 15 cars. Property prices have risen in Dubai over the past year as the government seeks to attract more expats. Crypto exchange Coinbase says it has fixed an issue which prevented the company from processing transactions with U.S. bank accounts for more than 5 hours. The company tweeted that it was unable to take payments or make withdrawals involving U.S. bank accounts.
Quick check market-wise. Let's have a look at what's happening. This is a look at some of those suppliers and EVs companies which supply to Tesla. It had deliveries, global deliveries, missing forecast in the third quarter, and it's affecting, of course, the supply chain here. Nevertheless, let's not accentuate the negative and accentuate the positive and say that vehicle delivery is still at a record there as well. Consumers switching towards EVs.
Right, and we're taking a look at the energy plays here this morning, just given what we heard from the likes of OPEC Plus, are set to be considering maybe cutting output here in the Wednesday meeting. So we saw, Brent and oil and WTI all up some 2 or 3% here this morning. We're not seeing a whole lot of upside, but you are seeing Shell Oilfield Services up some 2% here right now. Coming up, we're talking a little bit more about that OPEC Plus, that big cut that they're considering here. An update coming up next. This is Bloomberg.
Is it possible the industry is in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry crossed $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
.29 a.m. there in Tokyo. Japanese markets just going on break here. Seen a recovery there, but barely 0.7% up at the moment. The Nikkei 225 eking out a gain there after, of course, starting the day in the doldrums. Having a look at, economic data which showed that confidence among Japan's big manufacturers was weakening. It does signal concerns about the global economic outlook and the fragility that we've been witnessing thus far with other data points for the country's recovery. This is according to the Tankan survey, where sentiment among those big manufacturers edged down, worsening for a third straight quarter. There we go.
And we're taking a look at when it comes to FX. Yes, the dollar seems to be, you're seeing a little bit of on the back foot here today for some, but it's a mixed picture across the board. There's not much conviction in these markets. You have Korea, you have China, markets closed for the Golden Week holiday as well. 713.27, so it'll be interesting to see. We're going to be watching, of course, offshore HIBOR on any signs of any intervention, maybe. Not yet, as what we've been looking at. Eurodollar's at 98, still below parity, and we're looking at sterling still seeing a bit of pressure here today at 111.28. There seems to be this petition that's going on for a UK election now after this kind of UK fallout, Rish.
Yeah, and of course, a lot of this is really been roiling markets, not just in the FX space. So let's have a listen to some investors when we've asked them where they see the next currency crisis.
Yeah, look, it's hard to put a pin in the map really where the next one going to be.
This is a dollar story. Emerging markets actually are still looking relatively solid.
We're certainly watching what's happening in China.
The yuan, I think, is getting close to its bottom. Probably sort of in a semi-currency crisis at the moment. If you look at what's happened to the pound and the euro.
I'd be concerned about Italy. The pound gave a pretty big alert to countries that want to toy with fiscal imprudence.
I don't think the pound is done correcting.
At least the UK doesn't have that much foreign currency denominated debt. I'm confident that the UK will come through this.
Eventually, it might even need some central banks coordination if this continues. And very short term, it basically looks like the US dollar will have further to go.
So, the question which is posed, of course, is which is a country likely to experience a currency crisis by the end of next year. Britain, the standout, 45% seeing the pound heading for trouble, almost a quarter pick the euro area.
And of course, everyone wants to know what's going to happen with dollar. Is the Bloomberg spot dollar index trading higher or lower from now? Almost 70%. Yeah, I think it was pretty resounding, saying it's going to go higher from here. A sign many believe that maybe King dollar is really here to stay. All right, how this roils into the commodity market is still a big question as well. The big news here today, at least oil getting a pop on the OPEC Plus group, will consider cutting output by more than 1 million barrels a day when ministers meet in Vienna on Wednesday. Let's bring in our energy reporter, Stephen Sapchinsky, joining us now. And maybe to tell us, why do you think OPEC is leaning towards this direction?
There are a few reasons why, but I mean, I think the main thing is you look at this economic slowdown later this year, and there is room to cut. They've been kind of, Saudi Arabia especially has been more vocal saying that the physical market, especially the physical market right in front of us, is much tighter than where the futures prices are. With oil, Brent oil around the $80 level, Saudi Arabia and others have said that that isn't priced correctly, and prices should be higher to indicate the tighter supply. Now, going into later this year, with the hawkish Fed and higher interest rates, there is a fear of recession in the U.S. and around the world, which will sap demand for oil and oil products. Because of that, OPEC Plus has the room to really cut back supply. This is the first major cut since 2020, and to do this, 1 million barrels a day. That is a lot, but you also have to remember that OPEC had been struggling to hit their production targets. So by cutting 1 million barrels a day, maybe only 6 actual OPEC Plus members will have to do cuts. The others can just kind of keep doing what they're doing, which is not being able to increase their supply as much as they had previously. All of that together does provide more, volatility for the oil market going forward, because while prices had been falling, now with this cut, we saw the pop today. What's going to happen Wednesday? What's going to be discussed Wednesday when all these folks meet in person in Vienna?
Steve, was there really a supply glut? I mean, there's a lot of scorn being poured on that theory, and if there genuinely was one, would 1 million barrels a day shortfall perhaps make up the difference?
I think it depends on really who you ask, but the supply glut hasn't really materialized per se. I think a lot of folks were trading, and the reason why the oil market was falling is the view going forward. The market was tight, and it was quite tight earlier this year. China provided some relief because they weren't consuming and importing as much as they normally would because of the COVID zero policy that provides some relief in the market. But when you do look at the whole picture, a lot of people were trading and looking at later this year when there is a much harder recession. If that's going to materialize, what does that mean for oil demand? And that's what people were trading. Now, OPEC Plus, by cutting 1 million barrels a day, does risk potentially causing more tightness in the market. It does trigger perhaps higher physical prices, but it really is going to depend on what happens from Wednesday and how traders kind of analyze and interpret what's being said at those meetings.
Thank you so much, Steve. Steven Stepczynski there, energy reporter there, joining us from Singapore. Right, let's move things along. Let's get to New York and join Vonnie Quinn for the First Word News.
Rich, thank you. Billionaire JD.com founder Richard Liu has reached a settlement with a Minnesota student who accused him of rape in 2018. It brings her civil suit to a close less than 48 hours before a trial was set to begin. Details of the settlement were not released. Liu Jingyao had been seeking at least $50,000 in damages, plus additional punitive damages in the lawsuit. Indonesian President Joko Widodo has suspended the country's football league and ordered a full inquiry into a fan stampede that killed 131 people. Police are facing criticism for firing tear gas after a pitch invasion, which caused people to panic and rush to narrow exits. The sport's global governing body, FIFA, prohibits police or security from carrying or using crowd-controlled gas or firearms. The US is said to be willing to provide $1.5 billion a month to Ukraine to fight Russia's invasion and is pushing the EU to pledge similar help. Our sources say Congress is set to demand that allies share the cost burden for long-term aid during the conflict. The IMF has previously calculated that Ukraine needs about $5 billion every month to keep its economy going. Iran says it's getting closer to recovering billions of dollars locked in foreign accounts due to US sanctions. State media say the funds will be released after a UN announcement that 2 Iranian Americans were released from detention in Tehran. The Biden administration denies any link between the two issues. Iran says it has about $7 billion from oil sales blocked due to US sanctions. Global News, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. Rich.
Thanks, Ronnie. Let's just check in with the EU futures at the moment, pointing to negativity, really. And let's have a look. There we go. We've recovered a little bit, but certainly at the moment down. And sentiment, perhaps in some senses, not really being helped by what's going on in Swiss banking, chiefly Credit Suisse. The new CEO trying to shore up investor confidence. That we saw the CDSs after those credit defaults spiking there. Of course, that's in essence an insurance against this bank going under in many ways.
And some people saying liking this is what we saw with Deutsche Bank just a few years ago. Let's bring in Sue Keenan joining us with more. And Sue, this is a bank struggling to recover from a string of scandals and losses. What is its latest strategy now?
Well, it is to assure and calm the market, which is asking questions, can this bank survive? The stock fell to a new low late last week. That's what spurred the spike in the credit default swaps. And we know the CEO issued the second end-of-week memo in 2 weeks to try and assure the investors and the staff about the liquidity and the strong capital base that the bank has. If we drop into the Bloomberg, you get a better idea of why this bank is struggling for survival. You had the Greensill scandal followed by the Archegos scandal, and then you had a number of events, the departure of the prior CEO. The current CEO installed in July is trying to assure staff that he will continue to send them regularly updated updates on what's going on until they can issue this official turnaround strategy at the end of the month, October 27th. And again, if you look at this chart here, a year ago it had a market cap of more than 22 billion. Right now it's less than half that, just above 10 billion. Now, Ulrich Korner was named CEO in late July. He has had to deal with market speculation and exodus of talent and capital doubts, all as he tries to turn things around in very short order. His latest memo admits, quote, it is a critical moment for the bank, and he also urged a lot of the staff to consider that there's going to be a lot more speculation about the bank's future, a lot of it negative, and this noise is going to get louder. Importantly, last week, Rich mentioned the CDS. Last week, the cost of insuring the firm's bonds against default climbed about 15% to levels not seen since 2009.
So what are analysts saying about it? Because, the Credit Suisse is trying to accentuate the positive, talking about their capital Tier 1 ratios being very healthy, 13.5 there. But then you look at the price to book of the bank, and it's so ridiculously low that it's got to be, at the moment, ringing some alarm bells. So, what is the main takeaway from these analysts?
Well, they're concerned about the crisis of confidence, some similarity to Deutsche Bank 6 years ago, although there are some differences. They've also looked at the plans. The bank has announced that it's going to look at spinning off certain units, everything from possibly spinning off its securitized product trading unit, its wealth management ex-Brazil in Latin America. But even with these sales, if they go through with them, KBW analysts say they'll still need to raise about $4 billion in capital to fund the restructuring. So a lot of focus on this stock as the markets open in Europe and again in the U.S. on this.
Right. Thanks so much, Sue, with an update here. It'll be interesting to see how European markets kind of react to all this as well. And it's interesting, too, if you take a look at just, globally speaking, if you put kind of the European story aside, you take a look at who is really kind of the top share sale arranger, I guess, when it comes to the IPO market, the likes. It used to be Goldman that was kind of in the top ranks here. And look, number one that we saw recently is CITIC Securities.
I think you've got to put this in context here as well, because the amount of deal-making taking place outside of China has been quite slow compared to previous years. So, CITIC, of course, benefits from this, raising what, I think, $326 billion in global share sales this year. It's one bright spot, I guess, for the Chinese economy in some ways. The CEO I suppose, dark clouds above those seas.
Yeah. At least we're seeing, the capital markets are still quite strong, despite what we're seeing with COVID-0 restrictions, the impact on that way, and the property market still in shambles as well. But yes, CITIC Securities making that top.
Yeah, amazing. Again, the pipeline does remain promising there as well. Right, to come, we're going to update you on the labour market in Southeast Asia and the future of remote work post-pandemic. Co-founder and CEO of talent and recruitment startup Glints joins us. Oswald Yeo is up next on ASEAN Ahead, and we'll find out what Glints stands for. This is Bloomberg.
Policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect. How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
Well, the demand for talent is intensifying across Southeast Asia as economies slowly emerge from the COVID pandemic.
Yeah, countries including the likes of Thailand, Malaysia, and Singapore really stepped up their game to attract skilled labor. Hong Kong, certainly, we've been talking about this expat exodus as well, as we start to see a little bit more of that talent crunch. Also, Singapore imposing some more visa relaxation for attracting seriously the top talent. So there's still a lot of challenges remain across Southeast Asia and regionally, of course. Let's discuss this with Oswald Yeo, co-founder and CEO of Glints, one of Southeast Asia's largest jobs platforms. Oswald, great to have you. And maybe just talk a little bit more about this talent crunch that we're seeing across Asia. How bad is it right now, and how do you think this is all going to play out?
Hey, Richard and Yvonne. Great to be here. Thanks for having me. So we definitely see a talent crunch in Southeast Asia at the moment. There's a couple of interesting trends that we're seeing. The first is the opening up of the markets, and so there's been a surge in demand, especially for tech talent. And this is not only amongst the small startups and SMEs, but even the large companies have realized that coming out of the pandemic, digitization is really important. And so they have also jumped into this bandwagon to hire tech talent in large demand. So there's been a huge surge in demand for Southeast Asia tech talent within the region. And even outside of the region, we're seeing that a lot of companies from the US, from China, is now interested in expanding to Southeast Asia as well. And that sort of adds onto the demand and the constraint of talent supply in the region.
That must make for very high salaries as people trying to attract that talent. And that's where you come in, don't you?
Yes, we definitely see rising tech salaries in the region. And with increasing demand, we actually see an interesting trend here in Southeast Asia as well, which is really the rise of remote work and cross-border jobs. So now that companies are realizing they cannot rely only on local talent supply, more and more companies are starting to tap onto regional talent supply. So we have companies based in Singapore who will be recruiting large teams of tech talent in Indonesia, in Vietnam, and in Taiwan, for example. So that's a really interesting trend that we see the rise of remote work and cross-border talent demand in Southeast Asia.
Oswald, we talk about how COVID restrictions in Greater China, Hong Kong in particular, is where we're getting a lot of that talent sucked out of here. Does Southeast Asia actually have the capacity and the jobs out there to really sort of take in this exodus that we've been talking about?
Thanks for that. Yeah, we definitely see a lot of influx of talent into Southeast Asia, and oftentimes they'll often land in Singapore, and there's huge interest in the region as well. We definitely see that there's a lot of capacity in Southeast Asia, and what tends to happen is that the senior talent will come into places like Singapore, and they'll build up the regional management team here for the region, and they will then tend to build up the on-markets team in the different markets like Indonesia, Vietnam, and Philippines. So this is actually a really, really great trend for Southeast Asia, and we're really, really glad to be in the region right now.
Also, when you see this lack, it must mean that you must have ambitions now to spread beyond Southeast Asia. That way you can get true cross-border work and we can unify things here in a much more constructive fashion here. So with that in mind, which is the sort of bit within tech that is most lacking people?
Great question. So we see that the parts of tech that are most lacking in people right now tend to be for senior tech talent. So over the past few years, the junior tech talent ecosystem in Southeast Asia has been developing quite well, and the senior tech talent demand has far outstripped the development of the supply. And so what that means is that there's a lot more demand than supply, especially in places like Singapore right now. And so we have seen new initiatives where the government has actually opened up visa restrictions and have new visa programs to attract senior tech talent into the region. And that's actually a great trend where this senior tech talent can come into markets like Singapore and they'll build up the on-markets development teams in different parts of Southeast Asia, such as Indonesia, Vietnam, and Philippines.
We've seen tech layoffs globally, in the U.S., China in particular. There's all of the recession risks out there too. I'm just wondering, how bad is the tech layoff situation now in Southeast Asia? Is it getting better? Could it get worse? What's your take?
We do see some belt tightening in the markets here on the ground in Southeast Asia, where companies are starting to do layoffs and slowing down hiring. But what we see on the ground is that the sentiment is still very much bullish in the long run. And one really interesting trend that we see of these layoffs is that a lot of companies are looking for different ways to be even more cost competitive and be even more cost efficient in building up their teams. And a lot of these companies are now starting to build up tech teams in the region, so not only in a single market, but looking at alternative sources of talent supply. So one example is one of the largest insurance companies here in Singapore, which is now partnering with us to build up their tech teams in Indonesia. They started first with 3 people. They have now grown it through the pandemic to a team of 150 people.
Also, very, very quickly, 20 seconds. Are you making money? Probably not. Probably on an EBITDA basis, no doubt. But where do you need more money from, and when do you plan to come to the market, and where?
Great, thanks for that. On the group level, we're not profitable yet, but on the market level, we're already profitable in the markets like Indonesia and Vietnam. We continue to see really strong growth. So this has actually been the 4th consecutive year that we have grown top line by 2.5 times to 3 times year on year. And we're really excited about some of the opportunities in the market right now. Firstly, with the rise of remote work, there's a lot of demand for regional recruitment in the region, and we're well poised as a regional recruitment platform to tackle this opportunity. We've just raised $50 million from investors in the region.
Also, sorry about that. Just haven't got time, but coming on again, also there from Glintz. Now, coming up, we're talking Sony.
Yep, set to be rolling out new PlayStation VR2 headsets as soon as next March. Our coverage of that coming up next, setting some pretty ambitious targets too. This is Bloomberg. Well, Bloomberg has learned that Sony is planning to make 2 million units of its PlayStation VR2 headsets by March next year. For more, let's bring in our Asia tech editor, Vlad Savov, with that scoop. And Vlad, put that 2 million number in context for us. How big is it for the sector?
Well, in the grand scheme of consumer electronics, it seems like a small number, but in terms of VR headsets, because that is still kind of an unproven territory, it is big. It is substantially bigger than Sony did with the PSVR 1, which took 8 months just to sell 1 million units, and Sony's planning to do that production for the first 3 months of availability, essentially, because it's going to launch the PSVR 2 early in the new year. That's what we've heard. And that 2 million is aggressive. It's saying that Sony believes it's going to get through that inventory quickly.
Vlad, what about Apple? It's coming out with it has the confidence to come out with a competing product. What are people saying?
Well, I mean, Apple's competing product is targeted at something in the thousands of dollars. It's going to be kind of in an entirely different section. So I don't think it's going to be a threat to Sony. Meta, with its Quest 2, is the real leader in virtual reality headsets. It sells the bulk of them today. And really what Sony is doing with this forecast, what it's planning to do is kind of take more of Meta's share. It's trying to claim more of that more consumer-oriented, gaming-interested audience.
Vlad, thanks so much for bringing that to his team, Vassava, there when it comes to Sony. So, yeah, they have a lot of confidence that maybe they can defy this economic slowdown that we're seeing in the demand picture there and selling those 2 million as their targets.
We don't know the price, though. I mean, that's the thing. The price one's going to be important.
Yeah.
We have to know when it's going to be released as well. But, I mean, let's have a look at markets, generally speaking. A recovery in some.
Yeah, you could say. I mean, it's a mixed picture. There's not a whole lot of really direction. We're mostly low when it comes to equities, but you're seeing some upside when it comes to Japan. Hong Kong is also turning around a little bit, but although we're lower now by 0.6%. China's closed, Korea's closed. And yeah, we're continuing to see dollar moves to the upside here today against most Asian FX. Commodities, though, it's all about oil markets here after that, what OPEC is considering cuts when it comes to output on Wednesday. Plenty more in the next hour of Bloomberg Markets Asia. Stay with us. This is Bloomberg.
Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you've really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we're seeing more and more people say, I have to worry about me as a person, I have to worry about my family, I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with their head, heart, and hands, not just head and hands, the heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee. Be an employee and be a person of the community and family. The stakes are higher.
While Teslas and the like make for good headlines, the reality is that even if every car on the roads today went electric, it wouldn't be enough to curb global emissions to avoid catastrophic climate change. Greenhouse gas emissions from transportation account for about 29% of total U.S. greenhouse gas emissions. So what about the other 71%?
Buildings across America burn fossil fuels to operate. What we want to do is make that all electric. Instead of burning oil and gas to give us the energy and the electricity we need, we want to do 100% clean energy, all electric. We want to turn buildings into Teslas. Just like a Tesla or an electric vehicle is all electric with no fossil fuels, we want to do that with our buildings. And if we can do it in one building, we can do it in all buildings. And if we do it in all buildings, we'll reduce 30% of U.S. greenhouse gas emissions.
It's almost 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin.
I'm Rashad Salamat in Hong Kong. Let's have a look at our top stories. We've got oil surging. That as OPEC Plus considers slashing production by more than 1 million barrels a day, the biggest cut since the pandemic began. Now, this is sapping already scarce risk sentiment. Asian stocks struggling while U.S. futures are fluctuating on persistent fears of a recession. Plus, rebellion even brewing in the UK Conservative Party over controversial tax cuts. Prime Minister Liz Truss pinning some of the blame on her Chancellor.
Well, Rich, investors still on edge. The concern remains that tightening may lead to a recession. And on top of that, that could impact earnings for companies as well. Add to that concerns about the UK assets. That's adding to the stress that we're feeling in the market. Taking a look at where we are in terms of benchmark here in Asia, pretty muted session given that we have a holiday in Sydney, in South Korea, as well as in China. China on Golden Week holiday, so it is for the rest of the week. In terms of the benchmarks, the Nikkei 225 up 0.7%, lifted pretty much by semiconductors. Tokyo Electron among the biggest gainers. Of course, Hang Seng under a lot of stress. We have Citi saying that it is cutting its projection for the benchmark by about 15%. The issue is earnings outlook. In the FX space, we're seeing some easing in the mighty dollar. That's giving some reprieve for Asian currencies. New Zealand currency as well as the Aussie getting a lift ahead of course, the central bank meetings this week. And of course, in the commodity space, it is about Brent. Brent crude higher by almost 3% right now. WTI crude also up as much. We have OPEC saying, you know what, it is considering a cut of 1 million barrels a day, and it could be much worse than that if we see a recession coming. And in the bond market, we have Japan 30-year yields currently down by almost 6 points. We have the yields in New Zealand also trending downwards.
Okay, let's just check in with Bangkok, have a look at how Thai stocks are doing as the set opens there. Looking at negativity, generally speaking, though, across this part of the world, but just about flat. Seeing dollar again just appreciating against its Thai counterpart. In fact, the Thai baht has lost about 12% of its value thus far, but there was a little bit of a consolidation. We do have inflation data out later this week, and look at consumer prices to slow down from 7.8% to about 6.5%, according to our survey. India also very much in the mix. The economy there, we get Indian PMI manufacturing details, but don't forget we've got that high price of oil right now, which could take its toll on the rupee when the session there does begin in about, 28 minutes. Let's get to Mark Cranfield, have a look at the market action. And Mark, what are you watching on a day where there seems to be a bit of diffidence amongst investors?
Yeah, I think the Fed speakers towards the end of last week and those who are coming up really are going to catch a lot of attention for people here. The high end of the Fed target range is already 3.25%. There are 2 more meetings to go this year. If they follow with the kind of large rate hikes they've been doing already, we will reach the 4.5% target rate by the end of the year already, which the dot plots were suggesting may only be reached next year. So no wonder we've got a few Fed people suggesting that between the lines that a pause could be coming in terms of Fed rate hikes. It's a little bit early for them to really say that is a definite thing to happen, but they could be talking more about it once we get the next Fed hike out of the way. So no wonder traders are really looking at this very carefully, because if we get a slightly earlier pause than the dot plots are suggesting, that obviously will be beneficial to risk assets in general. Plus, you've got the US earnings seasons coming up in the next couple of weeks. The big banks will start reporting. They will have a lot to say on the outlook for the real US economy. They get a better picture than most people, and they may support the view that what you're seeing in the employment situation is actually a good reflection of what's happening, or they may have something different to say. But certainly, there's reasons for people to be a little bit more cautious in the aggressive stance that they take towards risk assets over the next couple of weeks until we get a clearer picture on what the earnings have to say and what Fed speakers have to say in terms of possibly taking a pause in the rate hike cycle.
Mark, we're also keeping a very close watch on the RBA, RBNZ. Of course, it's in the indication of when or where rates will peak. That is what, that's the guidance that we're looking out for, no?
Certainly, traders that could take that as an early warning sign. If we get the RBA and the RBNZ saying that they're pretty close to the end of their hiking cycle, traders may read that as also meaning that the Fed isn't too far behind. We've seen in previous cycles where New Zealand in particular is often first in, first out when it comes to either a rate cutting or a rate hiking cycle. So certainly there are preconditions that we could extrapolate from whatever we see from the RBNZ, and we may think that that's good for the G10 markets in general. RBA, of course, as well, they've been keeping up with other central banks. If they suggest that inflation is starting to get under control and they don't need to do too much more, again, that could be a read-across signal for other markets. So certainly, anybody in the G10 space who has a central bank meeting coming up is far more important than we may have seen in the past, where traders will be willing to look at everybody, whether it's New Zealand, Australia, Europe, the UK. Everybody has a part to play here because traders will want to be able to jump on the fact that rates could be peaking, and they want to get ready for the next stage of what that means for bond markets.
Quickly, Mark, on oil, has it this 2.8% gain playing out market-wise?
Yeah, it's certainly a big jump, and the expectations that OPEC will do something, but it could all be priced in by the time they meet later this week. And of course, you still got Russian oil seeping into the market, underpricing the rest of the market. So it's not easy for OPEC to maintain the high prices, although they will do their best in that respect. But certainly, the market has already found ways to get Russian oil into the system, and they will continue to do so.
Mark, thank you. And Life strategist Mark Cranfield. Now, speaking of oil, the OPEC Plus group of oil producers will consider cutting output by more than 1 million barrels a day when ministers meet in Vienna on Wednesday. Let's bring in energy and commodities editor Andrew James. And Andrew, of course, this could be a reflection of the slowing global economy.
Yeah, that's right. So 1 million barrels a day is the number that we're hearing from delegates. I mean, the fact that they're going to cut production is not really a surprise, given what prices have been doing recently. But perhaps the magnitude is a bit of a surprise. 1 million barrels a day is a fairly big number. So the OPEC Plus meeting is on Wednesday in Vienna. It's actually their first in-person gathering since the beginning of the pandemic, and that is an indication to a lot of people that they were preparing a fairly big cut. It's obviously having a big impact on the market today. One factor that may sort of blunt the impact of the cuts a bit is there's been an increasing dislocation recently between OPEC Plus's promised levels and what they do actually pump. So that could blunt the impact. The other factor is we have the EU ban on Russian oil, which will come into effect early December. So that kind of may complicate how the market interprets this as well.
Yeah, so you're talking about this supply-demand, I suppose, dynamic here. You know, we don't really know how much Russia's selling currently. That's one part of it. But what about Iran? Could it possibly resolve its differences and get a deal done?
There's always a possibility that will happen, but the Iranian negotiations have been dragging on for a long time, and there's been periods where people have said we're very close to a deal, and then it hasn't happened. So kind of hard to predict what is going to happen there. But certainly, if they do get a deal, you're talking about a significant volume of oil. Iran has quite a lot of oil stored on ships that could immediately impact the market, although it would then take a period of time for it to sort of get its domestic industry geared up to produce more again.
Andrew, thank you very much. Andrew James, our energy and commodities editor. So did mention Ukraine there. Of course, Moscow may have suffered another military setback. Let's get that story in the rest of the First Word News with Vonnie Quinn in New York.
Absolutely. Now, it's plans for annexation in question, Rich. Russia surrendering another operational defeat in eastern Ukraine. Several thousand Russian troops withdrew from Lyman in Donetsk over the weekend after becoming surrounded by Kyiv's forces. The town was a key logistics hub for Moscow. This all comes just days after the Kremlin announced it had annexed the region after holding referendums the West labelled a sham. Meanwhile, the US is said to be willing to provide $1.5 billion a month to Ukraine to fight Russia's invasion and is pushing the EU to pledge similar help. Our sources say Congress is set to demand that allies share the cost burden for long-term aid during the conflict. The IMF has previously calculated that Ukraine needs about $5 billion every month to keep its economy going. Brazilian President Jair Bolsonaro is headed for a runoff election on October 30th against leftist candidate Luiz Inácio Lula da Silva. Lula took 48% of the vote over Bolsonaro's 43%, both falling short of the simple majority needed for victory. The outcome still puts the former president within reach of another stint at the helm of Latin America's largest economy. UK Prime Minister Liz Truss says a controversial decision to remove the top tax rate was made by her finance minister, Kwasi Kwarteng. Truss told the BBC her administration should have laid the ground better for the mini-budget announcement. A source says the Chancellor is privately trying to head off a potential rebellion, with at least a dozen government MPs going public with their opposition to the plan.
And I do stand by the package we announced, and I stand by the fact that we announced it quickly because we had to act. But I do accept we should have laid the ground better. I do accept that.
Global News, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. How's Linda?
Ronnie, still ahead this hour. India's central bank delivers another half-point interest rate hike to sustain its battle against inflation. HSBC joins us later to offer their terminal rate prediction and more.
Plus, we've got In Touch Capital Markets telling us how the dollar strength is likely to persist, pressuring risk currencies, including those commodity producers in emerging markets. All that and more on the way. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Welcome to the world of decentralized finance. Bloomberg's covering all things crypto. The people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
Yeah, look, it's hard to put a pin in the map really where the next one going to be.
This is a dollar story.
Emerging markets actually are still looking relatively solid.
We're certainly watching what's happening in China.
The yuan, I think, is getting close to its bottom.
Probably sort of in a semi-currency crisis at the moment if you look at what happened to the pound and the euro.
I'd be concerned about Italy.
The pound gave a pretty big alert to countries that want to toy with fiscal imprudence.
I don't think the pound is done correcting.
At least the UK doesn't have that much foreign currency denominated debt.
I'm confident that the UK will come through this.
Eventually, it might even need some central banks coordination if this continues. And very short term, it basically looks like the US dollar will have further to go.
Well, some of our guests on where the next currency crisis might be. That was our MLive Pulse question last week. Of course, Rish, it feels like a crisis. It looks like a crisis, but some say perhaps it is not a crisis just yet. We asked investors which country was most likely to be hit next. The UK was a standout. 45% saw the pound heading for trouble. Almost a quarter picked the Eurozone. But of course, we heard from the CEO of Deutsche Bank. He says he doesn't see an FX crisis. The UK in particular will sort itself out, at least in the next 6 to 12 months, he said.
Yeah, we're also looking at what the Bloomberg spot dollar index would do as well. Would it trade higher or lower than currently? And almost 70% said higher. Now, that's a sign many believe that the strong greenback is here to stay.
All right, talking about the dollar, let's bring in Todd Elmer, head of FX and macro analysis for Asia at InTouch Capital Markets. Todd, good to have you with us. It is normal for the dollar to strengthen amid a crisis, but what's slightly different this time around is that the Fed is trying to contain inflation, no sign of it easing, so the premium will continue to be maintained.
I kind of take issue with the question that you just asked, because I think we are still in a crisis in the UK right now, despite the fact that the Bank of England came in and intervened in the gilt market. And I think, kind of what you allude to is absolutely correct, that the macro factors which have been driving the dollar higher, the Fed tightening, the risk aversion that we're seeing on the basis of the war in Ukraine, the weakness that we're seeing in global economies, these factors are still in place. And that probably means that the dollar is going to continue to trade higher. We aren't getting indications as of yet that it's trading as if positions are stretched. I think that there probably is significant further room to run.
The concern is, Todd, EM currencies, how vulnerable are they still to all these wild movements from the dollar, from the pound?
I think the policymakers are certainly not happy with the instability that this is sparking across many global asset markets, where we've seen pressure on asset prices in recent days. And they're not happy with the underlying impact of dollar appreciation, because it's feeding inflation in these economies where we're seeing local currency weakness. And I think that presents a relatively tough framework for policymakers in many emerging markets, in many other major economies across the world. I think it's going to be a big topic of discussion moving forward. I don't think that the Bank of England will be the last central bank that is going to have to come in the market and act. Certainly it would be interesting to be a fly on the wall of the upcoming G20 meeting of finance ministers and central bank governors.
I mean, it defies belief in some ways in orthodox economic thinking that you've got a central bank which is in a tightening cycle right now. I'm talking about the Bank of England, and then it's having to come in and stop or not start their QT program, instead offer QE, when you've at the same time as a rising interest rate environment, you've got a fiscal policy which is being loosened. It doesn't make much sense. And do you think that Andrew Bailey is going to get chided for this at this meeting?
I think that we certainly are in uncharted territory, but the Bank of England will probably go to pains to suggest that it was just coming in to tamp down potential market instability, and that the temporary extraordinary operations are not indicative of where monetary policy is going to go moving forward. And I think when we look at what's going on in the market, market that the government, the new Truss administration, bears much more responsibility for the developments across markets, and we're not going to see a sustained easing in terms of these pressures until such point that the market either digests this or we see some backing down from the government on its tax cuts and fiscal easing. It doesn't look like the latter is going to happen anytime soon because of the politics, and I think that means it's going to be a very interesting few weeks.
Todd, also, I mean, of course, we've got that all-important jobs report at the end of the week. It's probably in second place to inflation numbers in terms of importance. That we're seeing a few cracks emerge in the sort of united face of all these Fed officials who are now perhaps just edging towards how quickly should we be raising interest rates.
You know, it's really interesting that has snuck into the Fed rhetoric over the past several days, where we're starting to get some indications that policymakers, you know, they're looking for more impact from the tightening already done. So I think that the market is going to be more sensitive to any turn in the data, particularly those labor market numbers, which have been very strong. I mean, if we do start to see softness in the data, there is the risk that the market will start to price back in that eventual pivot from Fed policy at the end of 2023. I don't think that that's something that the Fed's necessarily going to want to encourage outright at this point, but the likelihood is that we will have a bit more sensitivity to softer data, I think, than has been the case in the preceding several weeks.
Todd, just one final question. It is about risk management. How do you protect yourself in the FX space?
I think you have to stay defensive. So I think you stay long the dollar. You know, the likelihood is that we see continued appreciation against a range of currencies. I think that the pound and other European currencies are particularly vulnerable, given the likelihood that it's going to be a very difficult winter for those economies.
Todd, thank you so much. Todd Elmer there from InTouch Capital Markets. So we're going to be looking at FX, the markets in general, and also, of course, on top of that, the trials and tribulations surrounding Credit Suisse. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Welcome back. Mohamed El Arian says liquidity risks need more attention as central banks navigate balancing inflation and market instability. The chief economic advisor at Allianz and Bloomberg opinion columnist spoke to Bloomberg about his concerns on central bank interventions.
So that's an important addition, I think, for certain countries, especially those who are importing the U.S. monetary policy but do not have anywhere near the robustness of the U.S. That's a real issue. Yeah, and we've got to somehow figure out how to go through this. John, you and I know that we tend to focus on interest rate risk, particularly what the Fed's going to do, and on credit risk, economic conditions, etc. We tend to ignore liquidity risk, and that is something that we need to pay a lot more attention to.
Well, we've been paying attention to that in the UK in a major way this week. Mohamed, we've seen the Bank of England driven to intervene at the long end of the gilt market. We saw the BOJ in the last week have to come in and step into the FX market, support the Japanese yen. The ECB, before any of this, had to set up an instrument to get ready to put a lid on Italian yields as they set to raise rates even further. China's been warning investors that they're willing to step in. Mohamed, we talked about this earlier this week. Who's next? Who's willing to blink, and can we get to that equilibrium, that new equilibrium, without central bank intervention every step of the way?
That's the major question. And these interventions, to be clear, are temporary. I think you used the word Band-Aid. We call it plaster here in John, but these are just Band-Aids. And it tells you that the global economy is not clearing on its own. Or if it's allowed to clear on its own, there's going to be a lot of collateral damage. You know my view, when you distort an economy for so long, getting out of the distortion is by definition problematic. And that is what we're learning. But we have no choice to get out of the distortion, because if we don't, the inflation issue is going to be even more problematic. I think you and I have been warning people, all of you who are looking for a pivot, be careful what you wish for, because this pivot only happens if you have an economic accident or a financial accident. And the journey to an economic and financial accident is a very painful journey.
Bloomberg opinion columnist Mohammed El-Erian. Okay, let's have a look at the business flash headlines, and we've got Credit Suisse certainly making them. We've got CEO there asking investors for less than 100 days to deliver a new turnaround strategy, saying the bank is at a critical moment. In a memo to staff, Ulrich Körner saying that Credit Suisse has a strong capital base as well as liquidity position. Singtel saying it's engaged lawyers to advise it about the cybersecurity breach at Optus. It has not received any legal notice of a class action suit and is continuing to evaluate the potential financial implications of that hack. Tesla worldwide deliveries missing estimates in the third quarter, with the company blaming challenges in securing vehicle transportation capacity. That as it continues to ramp up production. It was a record number of cars delivered though in the third quarter, but still falling shy of the 358,000 the market was expecting.
Well, on the back of that Tesla missing delivery estimates, let's do a check on Tesla suppliers and other EV companies. There you have it. They're under pressure right now. Hota Industrial down by 1/10%. Li Auto down by 0.2%. Of course, Li Auto, those September vehicle deliveries rose 62.5% on the year. In the commodity space, in the property space, Country Garden up by almost 4% there, although China cutting loan rate for first home purchases to boost sales. Still to come, UK Prime Minister Liz Truss. Keep it here with us.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. Welcome to Bloomberg The Lineup.
August jobs were right on target.
Pretty much in line with what Wall Street expected.
A Goldilocks jobs report.
This Friday, the surveillance team brings you the crucial jobs data and expert analysis at terminal speed.
Does this imply that central banks will blink?
They want to see a little bit more slack in this labor market.
I don't think the Fed wants to see unhappy people.
There is a lot of monetary contraction and austerity coming down the pipe.
The September jobs report, Friday on Bloomberg Television and Radio. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
You're back with Bloomberg Markets. Normally we'd be just marking the lunch break for Chinese equities, but of course it's a week-long public holiday for Golden Week there. Seeing at the moment just a bit of pressure just being piled upon these benchmarks in this part of the world. In fact, the Hang Seng is 1.3% to the downside, and that despite the fact we're seeing some of the property stocks moving to the up in an upward trajectory. Looking at what else is happening, commodities being dominated by the price action with WTI and Brent crude, and this of course as the OPEC Plus meeting is expected to deliver 1 million barrels a day as an output cut, and that would be on Wednesday when they meet in Vienna. So we've got also in prospect, probably in a week or so, the earnings season, haven't we, Haz?
Well, that's right, and some investors pitting their hopes on the upcoming earnings season to help fuel a year-end rally in stocks. Let's bring in our market reporter, Annabelle Drulis. And Belle, could global equities get a boost? I mean, after all, most of the bad news, they say, already priced in.
That is the hope has, yeah, but certainly people are going to be clinging on to any sort of good news here in this environment. Of course, it makes sense after the third quarter we just had. But looking in terms of whether history could also help us here, where you can see from this chart, there's only been 3 times over the past 2 decades where we've seen a drop for stocks in the fourth quarter. This is the All Country World Index. But as you said, yes, we do have earnings season coming up, Richard, as well there. But just US banks will be kicking us off in just under 2 weeks here. There'll be a few factors to be watching here for. Firstly, whether they put a more optimistic outlook for the economy here. Also, whether we see things like higher rates helping things like margin loans on their balance sheets. That could be something else that could give stocks a bit of a boost. But in terms of what else we're watching, basically, as you said, yes, how much of it has been priced in. And Sanford C. Bernstein is one of them, saying that we actually could see a bear market rally from here until the end of the year, and their custom sentiment gauge now flashing a buy signal. Rich, this is also about other factors as well, including the technical indicators. A lot of stocks, as you know, looking very oversold.
Yeah, but other strategists downright pessimistic, aren't they? Or should I be more diplomatic and say that they're less optimistic?
Yeah, glass half full, Rich. Well, yeah, one of them is JP Morgan's Kolanovic here. He put a note out on Friday, and basically he's saying that there are growing risks here from central banks and also from what's going on with the war in Ukraine, because he's actually one of the most vocal bulls, or had been one of the most vocal bulls on Wall Street. But what he says has now changed is that the assumptions that he was going off here, firstly, that central banks could avoid a policy mistake, and that also that there will be a de-escalation in tensions in Ukraine. Well, he now says perhaps that's not the case. And of course, we have seen an escalation around Ukraine just over the last few days. But let's take a look at the terminal chart, because also we're looking at what's going on in terms of bond yields. Looking very attractive for long-term investors to park their money in this investment tool. Treasury is this line in blue, offering around 4% across the curve. So, of course, when you have that sort of money going into this market, then it's also not a good thing for equities either.
Well, that's right. And adding to stress in the markets, UK Prime Minister Liz Truss facing growing unease within government ranks about her plan to slash taxes for high-income earners. She's continuing to defend the strategy while admitting some mistakes were made.
And I do stand by the package we announced, and I stand by the fact that we announced it quickly because we had to act. But I do accept we should have laid the ground better. I do accept that.
Meanwhile, Bloomberg has learned that Chancellor of the Exchequer Kwasi Kwarteng is working to reassure rebellious party MPs the plan will fix the UK economy. Bloomberg's Leanne Gerrans now joins us from London. The Tory party conference starts today. Now, tensions within that party seem to be really high and not particularly helped by what some have seen as Liz Truss throwing her Chancellor under the bus.
Well, we just saw Liz Truss there speaking to the BBC yesterday, outlining that she's sticking by these plans, even though the controversial 45p cut on the top income earners is dominating the front pages of the newspapers today. And that's where she appears, Rish, as you just said, to really throw the Chancellor Kwasi Kwarteng under the bus. She said it was his decision for this 45p tax cut for the high income earners that has caused the rebels to really come out in force. And even Michael Gove, he's really a grandee of the Tory party, said yesterday that he might not vote for that, which also means that he could lose the whip. So now we're seeing rebels mounting up. And as you said, this comes ahead of this Tory party conference, which could be slightly uncomfortable for Liz Truss, who hasn't been in the job very long at all. But of course, we saw the mini budget announced just over a week ago, which sends the pound plunging, and a lot of MPs questioning where the party is going next.
Leanne, there's been a warning. Any Tory MP who votes against the move may be kicked out.
Yeah, you're absolutely right, Haslinda. So yesterday, Jake Berry, who's the chairman of the Tory party, he said if they voted against this, policy and plan that's in place, they could lose the whip, which means they could be kicked out. But that could spell like bad news for Liz Truss, as she's just put together a cabinet. And also, another thing we must point out is that we've got latest polling here in the UK, and Labour, for the very first time since the 90s, is really leading the Tories by 33 points. So now I think what the Conservatives and all the speculation in the newspaper today is that they're going to try to delay the vote on this top income tax until next year and not have it in November, really to quell discontent, and for Liz Truss and Kwasi Kwarteng to keep pushing that the UK tax cutting budget will help growth and will grow the economy in the long run. So it's damage control right now. And I must say, a lot of Tory MPs are going to the conference, but there's a lot not going there either, which is really a quell of what's happening in the party. And I'm often in touch with Tory MPs. I talk to them a lot on the ground because it's really what we do cover here. And I must say, a lot of them have not wanted to talk to us. They've not wanted to have discussions at the Tory conference. And I think, once again, highlighting unease in the party.
Yep, all to play for there. Thanks a lot for that, Leanne Gerrans in London for us. We're going to move things along, have a look at what's going on with the oil market and get to the first word news now with Vonnie Quinn in New York. Vonnie.
Well, Rich, we'll know for sure later in the week, but OPEC Plus delegates say the cartel will consider cutting output by more than 1 million barrels a day. A larger than expected reduction will reflect concern that the global economy is slowing fast in the face of rapidly tightening monetary policy. A 1 million barrel cut would be the biggest since the pandemic began. A final decision won't be made until ministers meet in Vienna on Wednesday. Iran says it's getting closer to recovering billions of dollars locked in foreign accounts due to U.S. sanctions. State media say the funds will be released after a UN announcement that 2 Iranian Americans were released from detention in Tehran. The Biden administration denies any link between the two issues. Iran says it has about $7 billion from oil sales blocked due to U.S. sanctions. Billionaire JD.com founder Richard Liu has reached a settlement with a Minnesota student who accused him of rape in 2018. It brings her civil suit to a close less than 48 hours before a trial was set to begin. Details of the settlement weren't released. Liu Jingyao had been seeking at least $50,000 in damages plus additional punitive damages in the lawsuit. Indonesian President Joko Widodo has suspended the country's football league and ordered a full inquiry into fan stampede that killed 131 people. Police are facing criticism for firing tear gas after a pitch invasion, which caused people to panic and rush to narrow exits. The sport's global governing body, FIFA, prohibits police and security from carrying or using crowd-controlled gas or firearms. President Biden will visit Florida on Wednesday to survey the damage left behind by Hurricane Ian. The massive storm has killed at least 47 people in the state. Biden says the damage, well, it's likely to rank among the worst in U.S. history. Florida Senator Marco Rubio says many popular beach destinations and tourist towns were completely ravaged by the storm. Global News, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. How's Linda?
Vonnie, Brazil's presidential...
Global News, 24 hours a day on air and tourist towns were completely ravaged by the storm. Global News, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. How's Linda?
Vonnie, Brazil's presidential race will go to a runoff after a surprisingly tight general election. More from Bloomberg Markets editor Aline Oyamada in Sao Paulo.
Brazil's presidential election is headed for a runoff on October 30 between former President Luiz Inácio Lula da Silva and President Jair Bolsonaro. The outcome of the first round vote showed a much narrower lead for Lula than polls had been anticipating. Latest polls had indicated a gap of more than 10 percentage points, so that's a big surprise. It's good to remind that this election will likely have profound implications for Brazil's economy, as the next president will have to balance between growing popular demand for social spending and, at the same time, convince investors that the government will be fiscally responsible. Neither Lula or Bolsonaro have given much detail on their economic agenda, but Bolsonaro is defending a liberal agenda with more privatizations, while Lula has vowed a big infrastructure plan and to boost the role of state-owned companies. As for markets, the short-term reaction will likely be positive because investors are now expecting Lula to lean a bit more toward the center to gain more votes until the runoff. So we may see local assets rallying on Monday when the market opens. For the longer term, investors are a bit still afraid to call it a rally because the fiscal outlook will be imperative to determine whether Brazilian assets will do well in the next years or not. This is Aline Oyamada in Sao Paulo for Bloomberg News.
All right, let's have a look at what's going on with the rupee, because we're looking at that as it just comes online, and certainly at the moment we have the Indian currency trading on 81 rupees 75 paisa, just a move to the downside there taking place, opening half of 1% lower. Okay, coming up though, it is going to be certainly a subject to the Indian central bank as it delivers another half-point interest rate hike in its battle to rein in inflation. HSBC joining us next to offer their predictions, not just at least the terminal rate, but much, much more than that. You're with Bloomberg.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by these flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
All right, India starts trading in about 3 minutes from here in what is a tentative start to the week. Well, in India, let's look ahead to key stories investors are watching today. S&P Global is set to report India's manufacturing PMI data for September. India's central bank will hold state government bond auctions later today. And billionaire Mukesh Ambani says Reliance Industries' 5G network will cover the remotest corners of India by December next year, providing services more affordable than anywhere else in the world. Nifty futures pointing to a low open, down 0.5%. Rish.
Yeah, we've got the central bank there as well, Haslinda, delivering its third straight half-point rate hike. I guess sustaining its battle to rein in inflation, while, of course, flagging calibration action to shield the economy from recession itself. And our next guest is expecting a series of hikes from here on in, taking the repo rate to 6% by the middle part of next year. HSBC's chief India economist is Pranjal Bhandari, and she joins us now. Pranjal, is the RBI raising interest rates simply because the Federal Reserve is, and it's got to defend its currency, rather than actually looking at the indigenous inflation position, which is quite clearly not going to be affected by what they're doing?
Well, great to be here. I think it's mostly about inflation. The fact that, when the rupee depreciates, which it has been, about 3 to 4% since the last policy meeting, then it does add to inflation. And there are many other inflation pressures in the system already. We had the commodity price shock in March. And then the grains through the monsoon this year haven't been very good. So we're seeing both wheat and rice price inflation. So there's a lot of inflationary pressures in the system. And I would believe that their primary focus when they raise interest rates right now is actually inflation control.
So, Pranjal, okay, if it's inflation control, that's okay. But how do you see inflation actually, coming in the next few months and thereabouts? And, have you seen the worst of it yet, possibly?
Well, it's not going to be a pretty print in September. We still think it's going to be about 7.2% in September. Remember, the target is 4%, the upper bound is 6%, so higher than both of these. But hopefully, by March 2023, inflation could go under the upper bound and could be just under 6%. And I think that will be sort of like the first victory. And then over the next couple of years, they can think about bringing it down to 4. I think 4 is really long way off right now, but they can easily come under the 6% upper bound by March if no other big shock comes into the system.
Pranjal, the RBI did acknowledge that the tightening policy in developed countries is the third crisis for emerging markets like India. How big a crisis is this for India?
Well, look, we know that the RBI has had to intervene aggressively in the FX market, selling dollars both in the spot market and also the forwards market. And that's basically kept, rupee as sort of, relatively decent performer so far amongst the EM currency basket. But it's come at a cost. FX reserves have fallen quite sharply. We still have enough reserves, but this creates a problem because a lot of people don't look at the stock holdings of reserve. They look at the burn rate, and the burn rate in India is high. So the RBI now has to become careful, and I think that's what they have done over the last 10 days or so. They've let the rupee weaken. Today, the rupee has weakened 10% since the start of the year. The dollar has strengthened 17%. So our sense is that a little more rupee weakness is possible from here. But the RBI is now realizing that it can't intervene as aggressively as it has over the past couple of months. So that is a price the RBI has had to pay, burn a lot of its reserves.
Is growth now a priority for the RBI? There seems to be a shift somewhat now.
My sense is that the RBI is very comfortable with growth. In fact, if you look at the final print, they actually increased their growth forecast for the second half of the year, which honestly is a little surprising to me. I am not as optimistic about growth remaining as strong as it is right now. My sense is that after October, which is like the big Diwali season in the country, after that we will see growth slowing. Couple of reasons. Exports have been a huge driver of India's post-pandemic recovery, particularly high-skill exports like mobile handsets, drugs and pharma, IT services. And we're finally seeing signs of those export volumes slowing, especially in July and August. So I think if that happens and that continues, that's not great news for India's growth. And also, we had a lot of pent-up services demand-led growth earlier this year. But my sense is, when I look at a lot of the fast-moving indicators, that some of it is now beginning to slow. So my sense is growth is going to slow. And from that perspective, I also believe that December will probably be the last rate hike of the RBI, because beyond that, there will be a lot of growth concerns.
How are you assessing the risk from higher oil prices? Already we're seeing oil prices rising today on the back of OPEC saying that it may cut production by 1 million barrels a day. Could that be the risk that you're not factoring in right now?
Well, look, oil has been very volatile, and so it's sort of hard to take a very clear stance on rates on the back of just oil. But my sense is that even if oil had fallen to $80, $85 a barrel and stayed there, even that would be higher than pre-pandemic levels. So my sense is we're not getting too much comfort from the commodity price cycle just yet. And on top of that, we've had bad monsoon season. The fact that, earlier in the year, we had wheat price inflation going up, and now that's sort of fed into rice inflation. We've had a not very good vegetable crop. So there are a lot of tensions on the food inflation front as well. So my sense is, given very volatile commodity prices, bad monsoon rains, and therefore food inflation in India, I think the overall mix of inflation is not very good.
Panjul, thank you so much for joining us. Panjul Bhandari, the HSBC's chief India economist. We've had about nearly 5 minutes of trading there for Indian markets. Just checking in with what is happening, and as predicted, it is a down-arrow story. We do have a lot of the banks under a bit of pressure because of some liquidity concerns coming through. Mahindra, Kotak Mahindra Bank amongst the biggest fallers. Meanwhile, we're looking also at some of these energy companies which are doing a little bit better, as one would imagine. That's a look at the Indian Open. A lot more is on the way. This is Bloomberg.
CFOs are reshaping the C-suite, breaking out of traditional roles to become Chief Future Officer. Global logistics is complex. It takes plenty of capital and plenty of focus. Deutsche Post DHL Group CFO Melanie Kreis makes sure her company has both.
My role is essentially saying what is working well in this company, where do we have challenges, and what should we do going forward.
Chief Future Officer, Wednesday on Bloomberg. Brought to you by Workday. Welcome to the world of decentralized finance. Bloomberg's covering all things crypto. The people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
Welcome back. Let's do a quick check of the latest business flash headlines. Sony is said to be planning to make 2 million units of its PlayStation VR 2 headset by March next year. It is an ambitious outlook that defies the global economic malaise. Sources tell Bloomberg mass production of the virtual reality goggles began in September and has not yet faced supply chain constraints. General Motors President Mark Rhea says demand for its vehicles remains resilient in the United States despite current macroeconomic headwinds. Speaking exclusively with Bloomberg, Rhea says he sees light at the end of the tunnel when it comes to the chip shortage, but wider supply chain issues continue to weigh on car makers in other industries.
The supply chain costs, and I think it's been reflected in some of the other industry competitors where the costs have gone up. We're seeing some of that as well, particularly in the supply base, because of the supply chain is very fragile right now. However, it's our job to get more efficient to offset those costs for the customer, and that's what we're working on.
Well, we've got a surge in Chinese initial public offerings, and it's propelled CITIC Securities to the top spot in the global league tables for equity issuance. Let's get to Bloomberg's David Morris. David, is this a function of the IPO side of things or in China, or more of a slowdown in deal activity around the world?
It's a bit of both, I would say. The global equity markets have had a very bad year. You're certainly seeing in IPOs a major slowdown, but IPOs in China have slowed down quite a bit less. So equity issuance overall is down 66%, but in China it's only down 10%. And so you've seen a couple of really big offerings. There's been a couple of Chinese state-owned companies coming back to the China markets like CNOOC, which is previously US listed. So they've just edged out Goldman Sachs. And it's the first time in, I believe since 2009, that a Chinese bank has topped the tables at the end of a quarter versus the Wall Street banks.
I'm just wondering how much of a boost China could get, because it is also reforming its IPO system, right?
Yes, that's right. They are still working on a bunch of IPO reforms. So there could still be a boost to come, and that could help CITIC maintain their lead. But I would say that you could also see, as issuance starts to rebound in the rest of the world, there's been a huge drought in the US, for example, which is just a gigantic IPO market. So as those things start to come back, I think CITIC would probably struggle to maintain its lead. But they are definitely keeping, they're expanding in Europe. There's been a lot of these global depository receipts that have been sold in Europe, and they're looking for ways to increase their global reach as institutions. So it's not just the China market they benefit from going forward, I think.
Yeah, very quickly, a lot of that money going to Switzerland. What about just the pipeline for IPOs? Very quickly, David.
The biggest one in China would be Syngenta. That's going to be quite huge. And we reported that they want to get it done by the end of the year, but I think given the way markets are going, that seems unlikely now. So that's certainly the biggest there. The ones in Europe have been relatively small, but I think it's a promising avenue for them. So we'll just keep watching and wait for a really big one to hit.
Bloomberg's David Morris, thank you so much for that. Let's do a quick check on where markets are right now. Tentative day here in Asia on the back of jitters, of course, to do with tightening, causing a recession. And of course, earnings outlook in question. The Nikkei 225, though, in positive territory, up 0.7%. The strong dollar taking a breather right now, giving a lift to Asian currencies. The Kiwi currently up by 0.5%. And in the commodity space, it is about Brent crude, WTI crude getting a lift. We have OPEC Plus mulling over a cut of 1 million barrels a day. So there you have it. That is it from Bloomberg Markets Asia. Daybreak Middle East is next. Keep it here with us. This is Bloomberg.
So you've built a successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is like you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And like frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Is it possible the industry is in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry crossed $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Daybreak Middle East. Our top stories this morning.
Oil surges after OPEC Plus considers cutting output by more than a million barrels a day.
At this week's meeting in Vienna.
UK Prime Minister Liz Truss attempts damage control with members of her Conservative Party threatening to rebel over tax cuts.
Brazil's presidential race heads to a runoff as former President Lula da Silva falls short of a simple majority needed for victory.
And Saudi Arabia is set to boost spending in 2023, looking to use its oil windfall to speed up diversification away from its reliance on crude.
It's gone 8 a.m. across the Emirates. I'm Yusuf Gamaluddin in Dubai. It's fantastic to have you back, Manus, after, a couple of weeks jet-setting around the world. I can't say I'm envious, but...
We haven't been apart for 2 weeks in nearly 7-8 years. It's one of those moments when you get a break. What do? You go when the entire market, Yusuf, the entire world convulses and in some ways collapses in terms of risk and neurosis. And the pound is the personification. We've been to hell and back on the pound. Yes, it's cheaper for me here in the UK, but this is the recovery. This is the hell, the nadir, the lowest in 30 years to hell and back. But we've bounced by 8% over 5 days. We still have a confidence and a clarity deficit in this currency, and that delivers the potential for vulnerability. A YouGov poll puts Labour, if we were to go to the polls now, Labour would win by 33 points. They're 33 points ahead. So the short end of the market is pricing in rate hikes. That's possibly what's giving you a little bit of recovery in the pound. It's day one of the Tory conference. Will the Prime Minister throw the Chancellor under the bus? That is the question that we will debate. Yusuf, how are your equities?
Well, it is a struggle, really, in terms of direction to the upside, because you have, of course, so many macro data points we're counting down to over the next few days that are going to help set the tone. I'm looking here at equity futures that are struggling to gain traction. A note by Goldman Sachs has really caught my attention, saying, you know what, you could be looking at some $200 billion worth of sales going into 2023. The headwinds are just tremendous, be it slowing growth, rising interest rates, or increased unemployment. That's going to force the households to move a little bit away from equities, and corporates are going to be the largest source of equity demand. Evercore says get ready for another bear market rally. I want to get to this chart, though, in terms of the yields on offer that are highest in a decade in the bond market. That's good news if you're just getting into some of these plays, right? Especially on the quality side of the spectrum. But $1 trillion burden looms for world borrowers that are refinancing debt. So Bloomberg has done the calculation, $65 trillion worth of government and corporate debt across securities. That is going to be needed to roll over, and that's going to be very difficult for some of these bond managers to kind of deal with. And here are some of the other moves in the bond market, specifically on US 2s and US 5s and 10s. We're seeing a yield curve bull steepening with the start of the final quarter. And the hedge funds, there have been heavy sellers of duration from belly out all the way to the long end of the curve. That's according to the latest CFTC data.
And of course, Yusuf, what we're trying to debate here is in 2007, it was about counterparty risk. The question here is about liquidity across the markets. We'll talk more about oil in just a moment. Of course, we're up by 3% on the oil market as OPEC Plus goes for an emergency meeting. And that is bolstering that market. Let's see how the Asian market is performing. European stocks are under pressure, but Asia outperforming on a relative sense. Annabelle.
That's right, but still, Manus, you've got to say, under a little bit of pressure this morning. You've got Indian stocks just online in the last 20 minutes or so. The Hang Seng, really the big laggard today. You can see those declines there. But overall, yes, we are struggling for a little bit of traction today. You've also got subdued trading because mainland China is shut for Golden Week, Monday to Friday. Korea is shut for a public holiday. And you've got large parts of Australia also seeing a public holiday. But yes, that outperformance really being driven by what we're seeing in the Nikkei as we head into the afternoon session. This is all about the big exporting names in the country, the likes of automakers, high-tech as well. But let's also take a look at what we're seeing in terms of the results to the Brazil election. Now heading for a runoff vote at the end of this month between Lula and Bolsonaro. That is being seen as a net positive for markets. So this ETF here we're tracking in Japan up around 5%. This company here, also an Australian-listed oil and gas explorer, derives all of its revenue from Brazil, also jumping this morning. But still, this is a story about the energy complex. And Yusuf, you're going to get through all the details now. But what I do want to just point out is that performance we're seeing in the energy index versus what we're seeing for the broader Asian stocks.
Annabelle, thanks for that. That's Annabelle Jewelers. We will check back in with you later on in the program. Let's talk about OPEC Plus, and Manus mentioned this at the top. They're going to basically discuss an output cut of over 1 million barrels a day when it meets later this week. Paul Walsh, who leads our coverage of Middle East energy markets here in Dubai, joins us now. So, Paul, it looks like they're going to come in with quite a radical plan to kind of get prices moving and stabilizing in their way.
Hi, Yusuf. Yes, it's been a pretty dramatic last few days as far as OPEC Plus and the oil market is concerned. And it seems as if on Friday night, all of a sudden, they decided to hold Wednesday's meeting in person. This will be the first in-person meeting for the group since March 2020 at the start of the pandemic. And while a lot of people were trying to figure out why they would meet in person all of a sudden, it seems as if that's because they are planning a pretty substantial cut, something that's big enough to prop up prices, and it looks as if that's going to be much easier to achieve if they're there, if they're all there in the room in person rather than just meeting via video conference.
Paul, good to see you. So it was September the 17th. It was 2020 when His Royal Highness said, "I want these guys on trading floors to be as jumpy as possible. I'm going to make whoever gambles on this market ouch like hell." The question is, Paul, what causes an oil trader to ouch like hell? 500,000 or $1 million? Give me the size.
Well, to be honest with you, Manus, I think it might actually take more than that. Prices have jumped, as you mentioned a little bit earlier, prices have jumped almost 3% today. And I think that's in anticipation of a cut of above 1 million barrels per day, perhaps even 1.5 million. What will be crucial is not just the overall cut itself, but the manner that it's going to be distributed across the OPEC Plus members. It's a little bit complicated, but essentially OPEC Plus is underproducing by so much at the moment, by something like 3 million barrels a day because of supply problems in so many of those members, that unless there's a unilateral cut from, say, Saudi Arabia and a UAE, it's possible that the market turns around and says, actually, this cut's not going to be a real cut. It'll just be a cut to the quota and not a cut to actual production. So we'll be looking very closely to see what Saudi Arabia itself does. It's possible that it might come out with a unilateral cut. And I think something like that is what would really move oil prices to the upside.
Okay, Paul, well, you're very welcome to the streets of Vienna with me when we're on the road this week. Paul Wallace there. Yusuf, we've got to mark the dollar yen breaking 145. This is significant. This could invoke additional wrath from the Bank of Japan. Don't forget that Japan spent $20 billion on its first intervention since 1998, unilateral intervention, which did nothing to either stop the speed of the drop in the yen or indeed the scale of the drop in the yen. Let's take those thoughts across to the MLive strategist, Simon Flint. He's in Singapore. So this is about, this is provoking the market, isn't it? This is how to test not just Bank of Japan, but maybe even G3. Simon.
Yeah, in fact, now we've broken through 145. I think there's a decent chance that you'll see the Ministry of Finance intervening at roughly these sorts of levels, certainly if it goes any higher than this. Having said that, the market, as you say, wasn't too impressed by the first round of intervention, despite the fact it was so large as to almost be unprecedented. People are calculating that they've only got 4 more times when they can intervene at this size before they have to start selling US Treasuries, which is arguably there's a bit of a hurdle to doing so.
Yes.
What about the movements in the sterling? Because we're starting a fresh week. There's been plenty of commentary over the weekend. But arguably, there's not a lot to speak in favor of, the recent rebound sticking.
Yes. I mean, the one thing you can say is that UK fiscal policies are so bad that maybe they're unsustainable. So I think some people are kind of hoping almost that when the Chancellor speaks today at the Tory party conference, that the reaction from the Tory party faithful is sufficiently negative that either he's forced into a position where his position is untenable, perhaps he has to resign, or he has to backtrack at least on removing the top rate of income tax. And that will give the market some hope that, as I say, things are so bad that they can only get better.
Simon, we'll leave it there. Thank you very much for that. That's the MLive strategist, Simon Flint in Singapore. I want to get to the most read story on the terminal this morning, and that is about Credit Suisse, the beleaguered Swiss banking giant. I mean, I have a part of me, as my mom's Swiss, that aspires to Credit Suisse not being in the headlines every single week. But over the weekend again and late on Friday, the CEO had to step in. He had to reassure not just his actual stakeholders within the business, but also external stakeholders as well, as the market capitalization of this bank goes under 10 billion Swiss francs. Year-to-date losses over 60%. We wait for the new structure, the new turnaround. Yet again, how many times is this going to go on for, Manus?
Yeah, I mean, you can't just rebrand the investment bank back to Credit Suisse First Boston, Yusuf. The question is the market. The market is now pricing in credit default swaps. So you've seen the swaps. Look, these are moderately illiquid, so we need to be very careful when we talk about these. But we have blown out on the CDSs, Yusuf, from 55 double nickel to 250. The point about it is that's the white line at the top of this chart. Now, it's still nowhere. Deutsche Bank's level of angst, I should say, back in 2016 is incredibly important reference point. And you're looking at Credit Suisse with a capital buffer at nearly 13.5% relative to Deutsche Bank, which was at 10%. So the CDSs are blowing out, Yusuf. The question is this about liquidity? Is it about a crisis of confidence or a credibility void, Yusuf? That's what we have in these markets, credibility voids in banking and governance.
Yeah, I mean, we'll see how they're able to string or not string things together. There's definitely a level of urgency and anxiety that is rippling through all levels of observers and investors alike. Let's run you through the first word headlines now from around the world, starting off with the Brazilian president, Jair Bolsonaro. He's heading for a runoff election on October 30th against leftist candidate Luiz Inácio Lula da Silva. Lula took 48% of the vote over Bolsonaro's 43%, both falling short of the simple majority needed for victory. The outcome still puts the former president within reach of another stint at the helm of Latin America's largest economy. Russia has suffered another operational defeat in eastern Ukraine, casting doubt on its plans for total annexation. Several thousand Russian troops withdrew from Liman in Donetsk over the weekend after becoming surrounded by Kiev's forces. The town was a key logistics hub for Moscow. It comes just days after the Kremlin announced it had annexed the region after holding referendums labeled a sham by the West. Iran says that it's getting closer to recovering billions of dollars locked in foreign accounts due to U.S. sanctions. State media say that the funds will be released after a UN announcement that 2 Iranian Americans were released from detention in Tehran. The Biden administration denies a link between the two issues. Iran says it has about $7 billion from oil sales blocked due to U.S. sanctions. President Biden will visit Florida on Wednesday to survey the damage left by Hurricane Ian. A massive storm killed at least 47 people in the state. Biden says that the damage is likely to rank among the worst in U.S. history. Florida Senator Marco Rubio says that many popular beach destinations and tourist towns were completely ravaged by the storm. Those are your first word headlines.
We're still ahead. Nomura's asset management for the Middle East. Tarek Fadlallah joins us shortly. We're going to talk about Dubai's leisure and hospitality sectors, the phenomenal upsurge that's expected over the next 4 months. What are the headwinds on the horizon? Plus, State Street tells us how global markets will continue to be challenged in the new year, with inflection points likely to appear in the middle of 2023 or earlier. This is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one, and through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the US shaped the 20th.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
Welcome to Bloomberg, the lineup.
I do certainly think we're living through a period of elevated risk in the same way that people became anxious in August of 2007. August of 2007. I think this is a moment when there should be increased anxiety.
Heck of a warning from the U.S. Treasury, former U.S. Treasury Secretary Larry Summers there on global risks. So let's take that warning about 2007. We're on the precipice of something like that. With what's happening in the dollar funding market, Yusuf, we've got Altaf Kassam with us from State Street Global Advisors. Altaf, here we are. It's in the GTV library. It is the constriction in liquidity in the FRA OIS spreads. Liquidity is deteriorating. Access to dollars is tightening. That is what the white line is telling me with bond market liquidity. My question to you is, how quickly can we move from a liquidity crisis, as shown on the chart, to what happened in 2007? Are we a million miles away? Good morning.
Good morning, and thank you for having me. Yeah, I mean, I wouldn't say a million miles away, but I think we're a long way away from that kind of crisis that we started to see unravel in August of 2007. And that's because of one key thing, which is leverage. And leverage is nowhere near in either the private sector or the public sector where it was at that time. And clearly we had at that point a consumer that was massively leveraged to housing prices. So there are some worrying signs. There are some similarities, but I think we're a long way away. And the key is the absence or the relative lower amount of leverage right now.
I mean, Altaf, you look at the economic pain that's beginning to crystallize, and you just wonder whether the Fed is going to be able to deal with maximum pain. And arguably, it is going to fold, just like the Bank of England did when push comes to shove. Here's a quote from Eric Robertson. He writes in his latest note from Standard Chartered over the weekend is that considering the risk of further intervention in other markets, they're shifting their bias on risky assets to neutral. We had turned bearish on the 21st of August. The S&P 500 was down 13% since then. It's time to step to the sidelines. Agree or disagree?
Yeah, I mean, I do disagree with a lot of that. I mean, we've been underweight equities for some while now, so we've agreed with that on a tactical basis, or we've been ahead of that on a tactical basis for a while. Staying on the sidelines makes sense. Holding a good buffer in cash makes sense, especially with cash rates as high as they are now relative to recent history. So it is definitely a time where we're going to see higher volatility. But talking about intervention, you know, the Bank of England intervened because there was a systemic risk to the pension sector caused, again, by leverage. I don't think the Fed is going to have to do that because there isn't that kind of systemic risk, or at least we haven't seen it appear at the moment.
Or maybe it is that we just don't quite fully comprehend where the dark corners of systemic risk are in 2022 relative to 2008. Just a thought. $1.45 on dollar yen this morning. The kites are going to fly on intervention for the Bank of Japan. Unilateral intervention has not been successful in slowing down the drop in the yen. Do you expect a concerted wave of currency interventions in Q4?
I think the Bank of Japan have given themselves a really hard task. To kind of coin a cliche, they're pressing on the accelerator and they've got the other foot on the brake. And with yield curve control, but still trying to manage the currency, that is very difficult to achieve. So one of those two has got to give. I think it's more likely that they will stop the QE, the yield curve control, and work to protect the yen. So I think, you know, at the moment, they've given themselves this impossible triangle that they're trying to complete.
I mean, you talked about how you have a preference for cash, and that is understandable given what some of the interest rates are, depending, of course, how long you're willing to lock off the money. If you had to allocate into an asset class worldwide right now with a little bit of additional cash, where would that go? Would it go into commodities? Would it go into emerging markets?
Yeah, I think commodities are a great hedge against inflation, so we also have an overweight there. I mean, not to push it too far up the risk spectrum, but I think if you move out of cash, looking at investment-grade corporates makes a lot of sense. Again, with the yields having increased, you've got really decent returns possible there with relatively low risk. Again, you're not going to shoot the lights out, but at this point in time, we think that's the right kind of risk-return profile to have.
I had a lovely weekend walking around London. It was lovely. It was great. As if nothing was wrong at all, Yusuf, honestly. The whole world just kept going. Are you worried about systemic risk emanating from the UK, or is the cataclysm, is the worst of it past? Is it all just in financial media?
Yeah, I think, you know, when you walk around London, you live in history. And I think, unfortunately, for the UK, its pivotal point in the global economy is history. So I think there's a lot of risk in the UK economy. I think the current administration has a lot to work out. But I don't think we're going to see systemic risk emanating from the UK because it's just not that important, unfortunately.
Well, it certainly didn't look as if they were harried in SW3 over the weekend. Altaf, thank you very much. Altaf Kassam.
Well, I know where you hang out. It's sort of the more, you know, the more prestigious parts of the city for sure.
Listen, I'll tell you what. The price of a hotel room in this city is astronomical. And you know why? Because there's people with dollars, Yusuf Kamel Eldin, like you.
Well, yeah, I'll come through for sure. With that kind of spread and differential, it's an opportunity. Where you hang out. It's sort of the more
over the weekend. Altaf, thank you very much. Altaf Kassam.
Well, I know where you hang out. It's sort of the more, you know, the more prestigious parts of the city for sure.
Listen, I'll tell you what. The price of a hotel room in this city is astronomical. And you know why? Because there's people with dollars, Yusuf Kamel Eldin, like you.
Well, yeah, I'll come through for sure. With that kind of spread and differential, it's an opportunity.
Okay. We'll swap
All right, I think we're both waiting for each other to kind of give much more ahead. This is Bloomberg.
of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan's society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
Let's get you a quick check on the very latest Business Flash headlines this Monday morning. Dubai has set a new property sale record with a mansion on the Palm Jumeirah Island selling for more than $82 million. The luxury home is still under construction and will feature 8 bedrooms, 18 bathrooms, a cinema, a bowling alley, underground parking for 15 cars. Property prices have risen in Dubai over the past year as the government seeks to attract more expats. Tesla's worldwide deliveries missed estimates in the third quarter, with the company blaming challenges in securing vehicle transportation capacity as it continues to ramp up production. It delivered a record number of cars in the third quarter, but still fell short of the 358,000 that the market was expecting. CEO Elon Musk says Tesla is aiming to smooth out the deliveries away from the end of the quarter rush. General Motors president Mark Russe says demand for its vehicles remains resilient in the United States despite the current macro headwinds. Speaking exclusively to Bloomberg, Russe says he sees light at the end of the tunnel when it comes to the chip shortage, but wider supply chain issues continue to weigh on the car makers and other industries. That's the state of play with your Business Flash headlines this Monday morning from London and Dubai. Yusuf, let's see how your markets open after the oil markets moved overnight.
Yeah, and especially since we did get a pre-budget, a bit of an indication of the Saudi Arabian government's thinking on what they are expecting over the next few months. And so in Saudi stock price action, that was reflected with an upside move of about 0.7%. You saw, of course, a little bit of a drawdown in Doha. Remember, Dubai and Abu Dhabi were not trading Sunday. They come online later on in the day. Manus?
Quick snapshot of the equity futures, Yusuf. You know, sometimes the fear of contagion might be worse than contagion itself. US equity futures down by 1%, 55.97.
I'm Kaylee Lines.
And I'm Damian Sassower. Join us each week on our brand new show, The Lineup. If you're betting on the Mets, it's a pretty good return.
We'll cover the latest trends in sports betting, the hottest matchups, shifting spreads, and the data you can't find anywhere else. It is crazy how much the money line has changed from the preseason to now.
Plus, expert insights from special guests.
The Eagles got a gem on their hands. I hate to say it because they're in the NFC East with the Giants.
Odds are it'll be your favorite way to stay in the game.
Catch The Lineup Fridays and Saturdays only on Bloomberg.
Markets countdown in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
This is Bloomberg Daybreak Middle East. Our top stories this morning.
Oil surges after OPEC Plus considers cutting output by more than 1 million barrels a day at this week's meeting in Vienna.
UK Prime Minister Liz Truss attempts damage control with members of her Conservative Party threatening to rebel over tax cuts.
Brazil's presidential race heads to a runoff as former leader Lula da Silva falls short of a simple majority needed for victory.
And Saudi Arabia is set to boost spending in 2023, looking to use its oil windfall to speed up diversification away from a reliance on crude.
Markets are moving. They're bracing for liquidity issues and dollar funding stress. Annabelle Jewellers is in Hong Kong. Oil markets are moving. That's kicking the currency's proverbial. Annabelle, good morning.
That's right, Manus. Actually, yeah, let's just kick it off there. You mentioned Brent crude, WTI. We're seeing both of those just gaining here in the Asian session. Of course, the expectation here is that OPEC Plus could cut production by 1 million barrels a day, which would be the biggest production cut since the start of the pandemic. As you say, that is playing out in the currency space. We can't see it here, but the Kiwi and the Aussie dollar both gaining off that. In terms of what we're seeing in the equity space, though, it's a bit of a different picture here today. Mostly, we're seeing losses for the Hang Seng, down 1.2%, so the biggest laggard in this region today. But overall, trading volumes looking a little bit muted because we do have mainland Chinese markets shut this week, Monday to Friday. That's the Golden Week holiday. Korea also offline, and then parts of Australia enjoying a public holiday. So that's a look at the broader markets. But one currency in particular we're watching this morning, if you just bring up this terminal chart, we're very much focused on the yen, and this hour it's just pushed past that key 145 level again. This is a key psychological level, but it's also a level at which we start to monitor again for intervention from the BOJ on behalf of the Japanese government. We just saw that around 10 days ago. So another watch for traders, analysts, investors in the market.
Yeah, I mean, it's no surprise. We were all pretty much well in line with what was expected from the Bank of Japan, that they would be tested again and that these measures were temporary to keep it under 145. Clearly, it hasn't worked. But I want to stick with Japan, where we're seeing the business conditions deteriorate as well.
Yes, this is the Tenkan survey. It came out earlier this morning for the third quarter. So essentially, it's a pretty gloomy outlook here. That's really down to what we're seeing in the global economy. There's also, of course, what we see across the markets today with the fears that central banks will hike us into recession. Of course, the BOJ, the outlier here, but not immune to those bigger picture issues. So in terms of the results, where you can see there, that's the headline there for the large manufacturers. The reading coming in at 8. The prior, you can see there for 9. But the estimate was for a reading of 10. And just broadly, this is a deterioration across the picture here with a lot of factors playing into that, as I mentioned. But some positives, CapEx is one of them. So CapEx plan still looking strong. And the other one that we're watching closely is what we see in terms of the yen. If you just bring up this terminal chart, we can see that large manufacturers actually forecast a yen rate that is much stronger than today's rate. So they actually saw it. There you can see 125.71 in the full year 2022. So, of course, that's well below where we are, as we were just saying, at that 145 level. So that does give us some room, Youssef, for positive surprises in the next earnings announcements.
Yeah, we will have our eyes peeled, of course. Thanks for that, Annabelle Jewellers, there with the roundup for the markets in Asia. Let's get to Saudi Arabia now, because the country has announced a spending boost that will sharply narrow next year's budget surplus as it looks to tackle the impact of inflation and accelerate the development of economic diversification projects. Abir Abu Omar is with Bloomberg Economics, and she joins us now. Abir, run us through then the important highlights from the budget statement.
Right, so I'll give you a brief overview about the figures, which what you just mentioned. The surplus has been revised to about 9 billion riyals. That's a sharp, revision from 27 billion that was estimated earlier last year. And the main reason for that revision is, as you rightly mentioned, because the Saudis are estimating that spending is going to increase, right? So spending is now at 1.1 trillion riyals. That's up from roughly 955 billion riyals that was estimated last year. Revenue 1.12 trillion for next year. Economic growth is estimated to be at 3.1 next year from 8% this year, obviously because of oil prices. Now, last I checked before I came, oil prices were at $87 per barrel. And it's worthy to keep a note that Saudi needs $69 per barrel for oil to balance its budget. That's according to the IMF's projections in April. So that's,
Abir,
that's
just on that point, what is the pre-budget, what does the actual budget say in regards to what they're benchmarking it at? Because this has been a boom for the Saudis and the Emiratis in terms of oil prices and their budgets. Maybe that's why Prince Abdulaziz bin Salman wants to take us all to Vienna to put a floor in the oil prices. What are they banking on in Saudi for next year?
Definitely. So the Saudis have stopped providing the assumed oil price in their budget since Aramco's listing, but we have estimates from people outside. So we wrote a story on Friday basing it on Arashhi's estimates, and they're basing the Saudi budget on an oil price of $76 per barrel, right? So that's in line with current forwards of oil prices, but that's way more bearish than a median forecast by Bloomberg analysts that places oil prices next year at just a little bit over $94 per barrel.
Abir, thank you very much for the initial analysis. That's Bloomberg's Abir Abu Omar. I want to flesh this out in a bit more detail and continue with the Saudi budget theme. Joining us around the set as well as Tariq Fadlallah. He's the CEO at Nomura Asset Management Middle East. Tariq, welcome back to the program. When it comes to big spending from governments, I mean, Saudi Arabia is one of the few games in town. So that is why this budget statement is so important. What was your net conclusion?
Well, first of all, it's a positive number. It's an increase on last year, as Abir has just mentioned. But don't forget that some of that is going to get eaten up by inflation. So on an inflation-adjusted basis, it's not as big as it might initially appear. And then the second thing is that it underlines the fiscal discipline which the Saudi Ministry of Finance has demonstrated over the last couple of years. So they're spending a little bit less than what they're earning. And that's despite having earned a lot more than they spent in the current fiscal year. So I think this speaks to the fiscal discipline that the markets, especially the bond markets, like very much.
Well, we've seen a lot of reckless bond behavior, haven't we, over the past 10, 15 days. Vigilantism is alive. Do Saudi assets, Emirati assets, escape vigilantes, specifically the bond vigilantes?
Well, I mean, there's a couple of things to say, Manus. The first is that clearly as dollar interest rates go up, GCC interest rates must follow, and that's, of course, due to the currency peg. But if we look specifically at the bond market and at the credit aspect of the bond market, we've got countries in this part of the world that are spending within their revenues and where total debt to GDP remains very, very low by global standards. And so to that extent, I think fixed income investors ought to be looking at this part of the world positively.
We're looking at the Saudi interbank rate at the moment, and initially surged. Then the central bank stepped in to try and kind of moderate everything. It was quiet a little bit over the summer, and now we're going up again, just like an F-35 at takeoff. Any worries on that front in terms of liquidity, which in theory, structurally within the economy is available?
Yeah, so liquidity as such is not a massive issue, to be honest. The issue is simply the interest rate itself. So as I just mentioned to Manus, interest rates are going up in dollar terms. They're expected to perhaps peak around 4.5% next year. And SIBOR, IBOR, and other regional interest rates necessarily have to be at least at those levels. So my guess is that a SIBOR will be close to 5% early next year. And that, of course, is a massive change compared to where they were just a year ago.
5%, it's quite hard to get your head around that, Tarek, isn't it? I mean, at some stage, 4-5% in the Middle East causes some kind of a quasi-hard landing, or is it just managed the flow is too big to deliver a hard landing? Let's start with Dubai.
Well, look, Dubai, of course, people always mention it because of 2009 crash that we had in the property market. I think there are concerns always when interest rates go up, especially in asset-heavy sectors like property. Having said that, I do think that the Dubai environment is much less prone to leverage than it was back then. Balance sheets are stronger. I think investors are smarter. Borrowers also have been more cautious this time around. So look, 5% is painful. It's painful for any company, whether you're a corporate or whether you're a real estate developer. But I don't think it's a massive cause for concern. And hard landing is not really something that I've baked into my expectations for the next year.
I mean, we're just counting down to get into higher gear of the earnings season in this part of the world and, of course, the rest of the globe. You've done a little bit of number crunching on the earnings yield, the dividend yield, and, of course, how that all adds up and compares to the 10-year bond rates. What were some of the highlights there, and what are you telling clients about exposure?
Well, as you can see, if you look at the earnings yields and dividend yields and bond yields, what you can see is that the Tadawul at the moment does not look particularly attractive. There are reasons for that. It's historically always traded at a premium. But at this stage, we think that there may be better opportunities outside of the Saudi market.
Well, speaking of Saudi, let's finish where we started. We're all off to Vienna. Hurrah! For the first time in 2.5 years. What do you think the purpose of this is? Is OPEC Plus panicking, or is this judicious management?
No, I don't think there's panic yet. Oil prices remain relatively elevated, especially if you consider what's going on in the capital markets. There's clearly concern about growth and about interest rates. And so you would imagine that commodities generally would be under greater pressure than they are already. So seeing oil at $85, $86 at the moment, that's relatively healthy. I suspect that they would want to put a floor at some point, maybe it's $80, I don't know. But I suspect that it's managing and trying to maintain levels that are within expectations for next year's budget.
Tarek, thank you very much. No panic yet as we all head to Vienna for an OPEC Plus meeting. Tarek Fadlallah, CEO at Nomura Asset Management. And don't panic yet, Mr. Manary. Plenty more ahead on Daybreak Middle East from London and Dubai. This is Bloomberg.
set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Let's dig deeper into Middle East equity markets with our resident expert, Farah Al-Bahrawi. So Farah, a bit more detail then about Salik's performance. We've had the weekend to reflect. What have analysts been writing about?
Well, with Salik, we're still waiting on those analyst ratings to come in, Yusuf. But let's just look at the performance since we knew that Salik was coming on to the market. Very strong demand. They increased the offering size, and the stock still went up in its first day of trading as much as 21%. So certainly there is a lot of demand for Salik in the market, and as it reflects Dubai's economic recovery from COVID, but also its growth in the future. If you subscribe to the 2040 plan of population growth and urbanizing the city further, that is a reason to make Salik quite attractive for investors. At the same time, there is some market turmoil, but it's just more so looking at the long term. I'm sure we'll be discussing when those analyst ratings come in, especially from the banks that were involved in the IPO.
Now, it's good to see Oman are not being left out of the IPO rush. It's not all about DEWA and TCOM, is it? What are the Omanis doing? What are they up to on the IPO market?
Yeah, so Oman Manas, it's very interesting. Last week, they took several steps to really deepen their capital market. Bloomberg reported that it's OQ, the energy firm in Oman, is looking to list 2 units, one of them raising as much as $800 million. But in general, just looking at what the Muscat Stock Exchange is doing, they hired 2 financial advisors, one based here in the UAE and the other based in Oman, to help look for different capital market initiatives to bolster investments and potentially look for, reach an MSCI upgrade. So Oman is one of only 2 countries not classified as emerging markets by MSCI and the GCC, as well as Bahrain. So if, it's taking all of these steps to increase its rating, that would eventually mean more inflows into the market. So that's one to keep an eye out on.
Yeah, I think they're going to struggle a little bit with liquidity. It's just the limited amount of capital available, especially in Oman. And, that means it's just potentially a little bit less of a target that they can work with. What about some of the other factors you're watching for the week?
Well, I think OPEC is just going to be the biggest one to keep an eye out on. See, the thing with Middle Eastern markets, we had Saudi enter a bear market, and the outlook is looking pretty dim for global growth, and that's starting to trickle down. The key thing supporting our markets has always been oil prices this year, and with that fading, any sign of lesser supply, any sign of improving prices could potentially see a little bit of a relief rally here in the Middle East, especially after the sharp pullback that we've seen, not just in Saudi, but across different markets. One to keep an eye out on, and any economic data from the U.S. as well. I know we have some employment data coming later this week. That's anything to really give us an insight into the health of the economy over there is going to be key, because again, it implies where the Fed is going to with their policy later.
Farah, thank you very much. Farah Al-Bahrawi there with the very latest on the Middle East markets. Let's switch gears a little bit. Excuse the pun. General Motors has given Bloomberg an exclusive look at the company's first ever electric truck, Silverado RST. The president of the company, called up Matt Miller at GM's headquarters in Detroit.
What people need to do is get into it and see what an electric truck really can do. And this is a dedicated platform with Ultium. We're just bringing our cell plant online right now in Ohio, and the second one will be in Spring Hill. But the center of gravity is different. We've got this will be on sale here in the spring with our work truck, which is what you're probably in today. And so for under $40,000, and that's a heck of a deal. And we're going to start off with about 10,000 pounds of towing with it. We'll follow it up with 20,000 pounds, and it's just a very capable truck.
What's demand like right now? I mean, not just for the EV business in general, the American consumer. What's demand like?
Well, we haven't seen a lot of demand fall off, even with some of the sort of the ups and downs of the economic situation that we're seeing in the United States. But the demand is there. I mean, we are selling every single thing that we make, and we're selling it deep into the pipeline. So our dealers have really done a good job of being able to show people what the truck or whatever the product is that they want, and then when it's built, and then when it's coming, and that'll just get better as the chip piece of this begins to level off and be more consistent.
Are you seeing any signs of that light at the end of the tunnel in terms of chips?
I think so. I think we're seeing fourth quarter here a little bit of leveling off. It's nowhere near what the demand is. The demand is still going to outstrip what we can actually supply, because the inventory levels are still extremely low. So it takes a while for us to get the inventory back.
But that means no incentives, obviously. In fact, people are paying more than MSRP in a lot of situations. How long can that last?
It won't last forever. There's no way that can last forever. But, you know, again, until we begin to fill the pipeline again with some inventory, that's going to be the case, I think.
What about the electric pickup? Not the pickup truck. I mean the pickup in terms of consumers buying electric cars. I drove the Bolt out here, and it was surprisingly luxurious for a car that you basically get into for $35,000 after rebates.
Right, and it's even lower than that now. We dropped the price on it here a few months ago, and you know, we're seeing. I think you'll see in our quarterly results that people are really interested in the Bolt as one of the probably the lowest cost EV that you can get into in the market. And you know, strategically, that's great for us because our dealers begin to learn how to sell EVs into the dealer footprint with our customers, and then our customers are looking for the cars. So you know, in their supply, and you know, we're matching that the best we can right now. So it's a very, very compelling vehicle, always has been, particularly with Super Cruise on the EUV, and we're seeing a lot of demand for that.
What about 2023? How does the business look to you as we see rising rates, as we hear concerns about a recession? How do you plan into that?
We plan into it with our cost structure, and so we, you know, 4 or 5 years ago, we really went at our cost structure, and you know, we're in good shape, but we can always be better, and so we'll continually take unnecessary, you know, costs out of the business from an efficiency standpoint, and next year will be better than this year, and that's what we're going to work at.
Mr. GM president there speaking with Bloomberg's Matt Miller. Investors are not convinced. They punished the stock 45% down year to date, underperforming some of the benchmark indexes in the U.S., of course. Much more coverage ahead. This is Bloomberg.
And I do stand by the package we announced, and I stand by the fact that we announced it quickly because we had to act. But I do accept we should have laid the ground better. I do accept that.
When you have additional billions of pounds in play, to have as your principal decision the headline tax move, cutting tax for the wealthiest, that is a display of the wrong values.
UK Prime Minister Liz Truss and former cabinet member Michael Gove speaking over the weekend as the fallout continues from the controversial tax-cutting plans that sent markets quite literally into a spin. We are at the Conservative Party conference. It's underway. It's in Birmingham. Lizzie Burden is on the ground this morning. Lizzie, so there you go. The Prime Minister metaphorically throwing the Chancellor possibly under the bus in terms of the tax cuts were his idea. What's the atmosphere there?
Nail-biting, to say the least. It's very different to last year's conference, which was a delayed victory lap for Boris Johnson. This time, Truss's honeymoon period is already over, and she's less than a month into the job. Labour's got a 33-point lead over the Conservatives in the opinion polls. As you say, the markets are febrile, and some of the biggest names in the Tory party aren't even here, including the former Prime Minister Boris Johnson and the former Chancellor Rishi Sunak. Today, the agenda is all about the economy. We're going to have speeches from Kwasi Kwarteng, the Trade Secretary Kemi Badenoch, the Business Secretary Jacob Rees-Mogg, and while Liz Truss is trying to stay defiant, the cracks in her resolve are already starting to show. You just saw that interview with her on the BBC yesterday. As you say, she threw Kwasi Kwarteng under a bus over the top rate of income tax. She said that the groundwork needed to have been laid better for these plans, and now the Telegraph newspaper is reporting that she's going to delay the vote on the top rate of income tax because they can't get it through Parliament.
Now, given the political and market reaction to Liz Truss's plans, where can she go from here in terms of her economic policy? What is on the table?
Well, the Chancellor and the Prime Minister seem to have sidelined the Office for Budget Responsibility, the official fiscal watchdog, when they first announced their plans, but then they went cap in hand to the OBR on Friday, seemingly to try and calm the markets. So the first order of business for investors is trying to put pressure on them to get the OBR's fiscal forecast pulled forward from November the 23rd. But even then, the OBR may not agree with the government's assessment of how much growth these plans are going to stimulate, and they may have to cut spending in order to balance the books. Bloomberg Economics said they'd have to cut spending by more than George Osborne in the austerity years. So there's very little room for Truss to manoeuvre here.
Indeed, Lizzie, have a good day. As you said, nail-biting at the Tory party conference, whiff of rebellion in Birmingham. Yusuf, we've got to talk about dollar yen. Break at 145. This is the market testing the metal of the Bank of Japan. They've already spent $20 billion on Union Data. Now, that's the pound, which is also under pressure as well. Well, there you go. Dollar yen, Yusuf. Will we test the 1998 peak?
Yeah, I'm thinking about the S&P 500's longest quarterly losing streak since about 2009. We're seeing that uncertainty still ahead. This is Bloomberg.
I'm going to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but you know, some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
This is Bloomberg Datebreak Europe. I'm Danny Berger alongside Manish Cranny in London, and these are the stories that set your agenda.
Tory tumult. Prime Minister Liz Truss and Chancellor Kwasi Kwarteng look to stem a party rebellion over the tax cut debacle. We're live to Birmingham for the Tory party conference. Oil surge. Crude prices jump as OPEC Plus weighs cutting output by more than 1 million barrels a day at Wednesday's meeting. Subdued debut. Stocks struggle for traction, Treasury yields drop as the fourth quarter kicks in amid ongoing concern over stuttering economic growth. You go away for 2 weeks, you arrive in London, what have you done? You've broken everything, quite literally, the gilt market, the currency.
Yeah. Look, Manus, I tried to steer the ship as best as I could, but it's clear a VAR shock meant you couldn't stay at the beach any longer. It sent you over to London HQ.
Well, I got to say, Mykonos was a little bit cheaper this time around with the strength of the dollar, but therein lies the point. Where are we in the evolution of a cross-asset VAR shock? In other words, are we done with liquidating and conserving our firepower in markets.
That's so true. An issue that starts with liquidity in the bond spills into equities. At least that's the word from Bank of America. Manus, let me show you what stocks are doing this morning, because Bank of America out over the weekend was warning that we are indeed having this issue where the risks are spilling over. There's been enough losses on Wall Street that there are now mass liquidations. A really, really ugly day on Friday for Wall Street. The third straight quarter of losses, the worst since the GFC. Asia Pacific down 0.5%. Eurostoxx 50 futures, those cash markets closed in the green on Friday, so they've got to play a little catch up, down 1.5%. S&P tumbles yet again. NASDAQ futures, they're worse off at the moment. Manus, we did have Tesla over the weekend. Their deliveries for the third quarter missed estimates. They're also blaming those supply chain snarls. They're not going anywhere. So overall, pretty decently risk off in equities.
Yeah, I think the biggest shock that I saw was Nike down 20% at one juncture on Friday. Now, we have been to hell and back. Bloomberg print copy writing that rather than me. But to hell and back, we're 8% up from the nadir that we saw last Monday on sterling. The question is, will there be a second assault on sterling as Liz Truss seems to backtrack from going the full mile, as it were, with the tax cut for the upper end and throwing the Chancellor under the bus? Will either of them survive until the end of the year? Is it that the market will again attack sterling because a confidence void and a void of belief in terms of strategy? Cable in focus up 8% from the lows. Crude up this morning by nearly 3%. As we're all going to Vienna, we could see a cut of 1 million barrels. Don't forget, Prince Abdullah's bin Salman has said he wants to keep traders ouching like hell. You could have 1 million barrels a day of a cut coming from OPEC Plus. Yields drop a little bit. You know, where are we on the rate cycle? 5%, 4%, 5% in the US. It sounds like the Fed is putting America first. They're keeping going, never minding about systemic risk from the UK. Dollar-yen intervention, we broke 145. Will the BOJ come in large and lumpy, or does it take more than unilateral intervention to stop the rot in dollar-yen? Danny.
Well, Manus, I think that last part about what the Fed is doing, continuing to hike despite fears of contagion, is really pertinent. I came in and you said to me, Danny, you know, sometimes this fear of risk, it gets elevated. It's bad right now. I know you're looking at the cross-asset contagion index there.
Look, we're trying to put everything in context. Dollar funding in 2007. Are we as stressed as that? No, we're not. So what we've got is cross-asset vol here. So this is where we are at the moment. This is when we were in the eye of the pandemic. And then I want to take you back to a pretty tenuous time. This was about liquidity crunch. This was about counterparty risk back in 2007. We're nowhere near there, is what State Street said to me this morning. But there is dollar constriction. When does dollar constriction turn to counterparty risk and concern? Where are the dark parts of concern in the world of cross-assets today?
Yeah, Manus, I don't think it's any mistake that Lael Brainard dedicated her Friday speech to financial stability, essentially saying they're monitoring it. It's not bad yet. Perhaps really indicative of that chart there. It's not bad yet, but it is a world monitoring it. Well, let's get to some of our top stories this morning. We got Lizzie Burden at the Tory Party conference in Birmingham. And Elizabeth Lowe, Manus, she'll be covering the reports out of OPEC.
Of course, Credit Suisse is never far from our attention either. We'll come back to that in just a moment. But we have ahead of her appearance at the UK's ruling Conservative Party conference, Prime Minister Liz Truss, she spent the weekend defending the government's economic policies after the Chancellor Kwasi Kwarteng's mini-budget triggered market right.
And I do stand by the package we announced, and I stand by the fact that we announced it quickly because we had to act. But I do accept we should have laid the ground better. I do accept that.
We're on the ground in Birmingham. Lizzie Burden is now at the Tory Party conference. Lizzie? So the question is, did that interview yesterday, did it set up enough to quell the mounting anger against her and her Chancellor?
Well, Liz Truss is trying to stay defiant, Manus, but you can see the cracks in her resolve starting to show. You mentioned that she threw Kwasi Kwarteng, the Chancellor, under the bus. She said that the groundwork hadn't been laid properly for these fiscal announcements. And behind the scenes here, the Chancellor is desperately trying to drum up support from Tory MPs, trying to persuade them that these tax-cutting plans are going to grow the economy. We also heard from the former Cabinet Minister, Michael Gove, yesterday. He said that these plans were not a display of Tory values. This was in an interview with the BBC. Take a listen to what he had to say.
When you have additional billions of pounds in play, to have as your principal decision the headline tax move, cutting tax for the wealthiest, that is a display of the wrong values.
So Michael Gove has become a sort of de facto leader for the rebels in the party who could potentially vote against these measures. There wasn't meant to be a vote until March, but the opposition Labour Party, ahead in the polls as it is, could try to force a vote earlier in the coming weeks. And if the government loses that, it would be hugely embarrassing. And then Labour could try to push for a general election.
And Lizzie, we continue to see the market fallout, the political fallout to Liz Truss's plan. So where can she go here in terms of her economic policy?
Well, we saw the Chancellor and the Prime Minister, highly unusually, going to the Office for Budget Responsibility on Friday, despite the fact that they effectively sidelined the fiscal watchdog when these plans were first being announced. Now, the assessment of these plans isn't expected till November the 23rd, but what they could do to try to calm markets, this is what investors are begging for, is to bring that forecast forward. The other point, though, is the OBR may not agree with them about how much growth this is going to stimulate. The OBR may reckon that they need to cut spending to try and balance the books. Analysis by Bloomberg Economics says that they'd have to cut spending by more than George Osborne in the austerity years if they're going to do that. So that's going to be very painful, especially when we're in a cost of living crisis. Liz Truss had said in a leadership campaign that there would be no return to austerity. So again, Labour would seize on that, and there's very little room for Liz Truss to manoeuvre.
Okay, Lizzie, thank you very much. Lizzie at the Tory Party conference there in Birmingham. Lizzie Burden. Now, OPEC Plus, it's set to discuss an output cut of over 1 million barrels a day when it meets later this week. For more, we're joined by Bloomberg oil reporter Elizabeth Lowe. So, Elizabeth, oil jumping around 3%, now just above 2.5% today off the back of this possible cut. So the market is reacting, but how likely is it?
So yes, OPEC Plus delegates, they're signaling that the group may cut more than 1 million barrels a day of production at the upcoming meeting this Wednesday. So just to put that in context, that's more than double of what banks such as JP Morgan have estimated that the group needs to cut to stabilize oil. Just stepping back a little bit, oil prices have been weakening in the past quarter after they hit nearly 125 a barrel this year in June. So that's been coming off the back of weaker demand across China and the US, and also worldwide recessionary woes hitting the market. So OPEC Plus has been under pressure to stabilize oil prices. It's also important to note that if they make such a move, it's coming ahead of a very closely watched winter for oil this year. That is, the market in Q4 is set to look very different from how it did in Q3. So we're approaching the year end when European sanctions on Russian oil are set to kick in, and there's a great amount of uncertainty over how that's going to affect the oil market, especially with gas also being still very volatile. On top of that, we do see other factors such as the US SPR drawdown coming to an end, and we do have China, on the other hand, which has also just announced that it's going to significantly raise fuel exports. So the latter is expected to cool product markets, but it's going to be pretty bullish for crude markets. So all of these are pretty bullish factors for oil, and an outsized response on supply this week from OPEC Plus could easily push oil markets into a shortage, especially the year end.
Well, certainly Secretary General, when we caught up with him in Vienna just a couple of weeks ago, talked about that ice-thin buffers that there are in the market. Elizabeth, thank you very much. Elizabeth Lowe there. Go big or go home seems to be the message we'll probably get in Vienna, cut in size. OK, Credit Suisse, Bahnhofstrasse, the air is thick with angst. The cost of insuring Credit Suisse's bonds against default, look at this, Danny, up 15% in a week. And the shares in this stock at a record low. And this is the challenge for the new CEO, Ulrich Körner. He's got 100 days to deliver a message. Stay with me. Trust me, I've got my hands on the wheel and the steering and the stick.
Well, Manus, I mean, this is the thing. We started this morning by saying, OK, we're concerned about a liquidity crisis. It's not a counterparty crisis yet, but it's something that Credit Suisse has had to go to investors, according to the FT, and calm them, saying, look, our positions are sound, our liquidity is sound. And that's the thing. At what point does this whole crisis morph into something different, where it's not just about liquidity, but of course we need to temper with how bad things are with the CDS, with the swaps here?
I could throw a couple of things out here. You know,
yeah,
we're fine, we're robust. Archegos, 5 billion. We're fine, we're grand. Leverage, prime brokerage, we're fine, we're grand. Our management systems are robust. I mean, this is a bank. Why would you if I was working at Credit Suisse, what are your options worth? I asked the chairman, what are you going to do for your staff that are long of options to stay here? Trust me, you need more than trust. You need more than a rebranding of the investment bank to the days of Brady Dugan, Credit Suisse First Boston.
Again, it's about confidence. But, Manus, I do go back to this point. Their financial position is different than once when we saw other crises. Their key capital ratio, 13.5%. Deutsche Bank, a few years back during this crisis, it was worse then. It was 10.8%.
Absolutely. The question that we are putting out there is, if you go from double nickel, 55 basis points to 250 basis points, that's not saying a bank is going to default. But what that is doing in a reasonably illiquid product is saying there is a warning shot out there, and you need to understand, is this where you want to have all your exposure?
Yeah, fair enough. Manus, let's switch gears a bit at the moment, because Kishida is currently speaking, outlining his key policies in a speech, talking about to use a weak yen in strengthening economic structures. Their aim is for 5 trillion yen in spending from inbound tourists. Manus, this, of course, comes as Japan is set to ease some of the restrictions.
Do you really think inbound tourism is going to save dollar-yen?
I don't know. I want to go to Japan, but that's besides the point.
You know what? Trade out of your house in London, buy yourself a snow chalet in Japan. That is the trade, apparently.
That is certainly the trade. Also, just want to say, Kishida saying they're going to seek benefits from a weak yen, return return them to the public. So essentially trying to say nothing to see here with the weekend.
Okay, well, they've spent $20 billion so far on defending the yen. It takes more than unilateral action to actually shift the direction. We'll talk about yen in just a moment. Coming up, we're going to talk more. It really is about dollar. The relentless rally, the speculation, several government interventions, several central bank interventions could be on the way. More on the markets.
Plus, Europe's energy battle with Russia escalates further as Gazprom halts gas supplies to Italy. Stay with us for that. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
We will never break, we will never break. Build on a foundation strong enough to stay. We will never.
Yeah, look, it's hard to put a pin in the map really where the next one going to be.
This is a dollar story. Emerging markets actually are still looking relatively solid.
We're certainly watching what's happening in China.
The yuan, I think, is getting close to its bottom. Probably sort of in a semi-currency crisis at the moment. If you look at what happened to the pound and the euro.
I'd be concerned about Italy. The pound gave a pretty a big alert to countries that want to toy with fiscal imprudence.
I don't think the pound is done correcting.
At least the UK doesn't have that much foreign currency denominated debt.
I'm confident that the UK will come through this.
Eventually, it might even need some central banks coordination if this continues. And very short term, it basically looks like the US dollar will have further to go.
Some of our guests there discussing the next currency crisis as the U.S. dollar's relentless rally continues. And Manos, of course, this morning we also saw the yen weaken past $145. It really is this liquidity fear spilling into markets as a dash for dollar means there's also funding stress beyond just other currency stress.
Okay, intervention. I mean, I think that's the question of when does that come. But we are looking at the cost of dollars and the constriction. There is dollar yen, Danny, 145. Let's get Simon Harvey into the conversation, head of FX analysis at Monex Europe. Simon, good to have you with us this morning. Let's start with the top line, which is we broke 145 on dollar yen, $20 billion in unilateral intervention so far. It's going to take a lot more than that to stop the yen. Do you reckon?
Yeah, it's going to take the Bank of Japan to move its policy stance. We've called it fundamentally when we're at 135, 140, 145 on dollar yen. Until you address the root cause of the problem, there's no point trying to just patch this over with cosmetic intervention. Now, the Bank of Japan is very clever in the sense that how it executed this 20 billion kind of buy order, it did it in a stealthy way to add that kind of risk into markets and to remove the possible speculation side of it, because all of a sudden you do have that kickback. But the problem is, as soon as the fundamentals come back into play, it's just going to drain Bank of Japan's reserves.
The problem is the strong dollar. You need to fix the root, as you say, of the issue. So until that happens, what will be the effect of Japan, potentially other central banks continuing to intervene to no permanent effect?
I think they're just laying out speed bumps. I don't think they necessarily have the intention here of completely reversing the course and strengthening their own domestic currencies. It's just to stop something that is a bit more synonymous with a crisis and to just really kind of slow markets down from getting that free money on what is quite an easy, short-sighted option.
It's about reintroducing two-way risk. That's all it is. It doesn't stop the truck. It just slows it down. OK, so we may get sizable concerted intervention. That's a new and live risk. The one thing we looked at this morning was the cost of dollar funding, the constriction in dollar funding, which is nowhere near 2007. So just let's everybody be very clear. We're not making some kind of radical call. But what we are flagging up is the risk. And this is the FRA OAS spread. It's back at pandemic highs. It's nowhere near 2007. When does that liquidity jolt turn into something much more manifest that you worry about from an FX perspective?
I think it's when we start to see central banks discussing it quite aggressively and then start to see some
liquidity?
Multilateral, yeah, exactly. We start to see some kind of multilateral communications on this before them swap lines are open.
To be fair, Brainard has mentioned it. She said in a speech Friday, cross-border spillovers and financial vulnerabilities are a consideration for the Fed.
They are a consideration. I think that's also looking at what happened on the gilt market last week and then the impact that had throughout fixed income markets. I don't think we're necessarily looking at it from an FX standpoint as something that's highly concerning, especially not at these levels. Now, if volatility stays high and then all of a sudden we see another 3-4% jump in the dollar, I think that's when people are starting to get a bit kind of twitchy.
Twitchy. Twitchy.
I'm a bit twitchy.
I tell you what, I want to see the Amex bill when it comes in. I don't necessarily know. It's got a lot better for me. I'm paid in dollars, I'm paid in dirhams, so, London was a breeze for me. But if I look at sterling, let's dig into this a little bit. We're 8% off the lows last Monday, so we're back at levels that we were before the catastrophic budget communication, mini-budget communication. We've got a confidence deficit, a clarity deficit, and a credibility deficit. Do you think they attack the pound again, even though it's up 8% from the lows last week?
I think so. I think this is very shaky ground, what we're seeing. And I looked at last week's price action and thought this is more of a technical reason for a rebound here. Month-end flows, some kind of adjustments in portfolios. I don't necessarily think it's all of a sudden that the storm's passed and all of a sudden we're in clear water. By no means. Once that current account deficit data starts coming through in Q4, more political noise in the background, and then all of a sudden, potentially another ramp up in European gas prices, which only just extends the government's liabilities.
So then what's fair value? What's fair value in the pound right now?
At the moment, bearing in mind the government's balance sheet could just completely stretch out even further over the winter. I mean, it's how long is a piece of string? It's just the easiest option.
Come on. You can't come on to Daybreak Europe and say sterling's as low as a piece of string. Come on. Is it going to break parity? Where's it going to go? What does a re-attack on sterling look like? What does a credible attack on sterling look like? Take us through it.
I think in the short term, 105 is kind of the big level. I mean, we're talking all-time lows at 103.40 in very illiquid markets. For a lot of people, they'd look at that and say that's just a synthetic price. Once you can start putting some serious volume through at those prices, then we'll actually start calling that a low. So 105 is really kind of the level that markets are looking at, thinking this is the next psychological barrier.
What is the risk of a BOE that disappoints in terms of a market that at the moment is pricing in over 100 basis points worth of hikes from a BOE? How realistic is that? And what happens to this market if they don't go through with it?
For what it's worth, I think 100 basis points is on the light side of things. I think the Bank of England really needs to come in and backstop this, especially if there isn't a U-turn from the government, either because of their own admission or...
The Bank of England have already told us that they've put a stick in plaster. It's a temporary reprieve in terms of the intervention in the gilt market, which broke, by the way. You wouldn't think that from walking around London the weekend. They've told us it's temporary. This is monetary policy must lead for a credibility void to be filled.
It has to, because one of the kind of main pillars of UK investment is the fact that there's institutional credibility. So if that's then lost, then all of a sudden it becomes a very tricky climate for foreign investors coming into the UK if all of a sudden everything's kind of being moved by the same lever, which is the government policy. So I think they do need to have a credible stance, but at the same time they can have a credible stance by ramping up interest rates, because you look at what the government policies are, they're inflationary. So the Bank of England will have to come out. If we roll back 2 meetings, Governor Bailey explicitly said the reason why they went up to 50 basis points is because they don't like the fact that businesses can pass through these costs to the consumer. Now the consumer's got a better balance sheet, then all of a sudden they are able to do this. So the bank has the kind of...
But are they able to do it because of all of the floating mortgages in the UK? I mean, hiking by 100 basis points, that would be some pretty extreme pain for folks out there in their mortgage payments.
Yes, but, it's the lesser of two evils at this point. Do you do that, or do you then have kind of a perpetual inflation problem that you have to catch up on over the next 5 years? So we actually think the bank's going to go big, but it won't be for long. We're not talking the Federal Reserve that wants to keep these interest rates restrictive for the next 12 months. We think it's going to be do it quickly, take the short-term pain, then start to ease as we come into the kind of more stable part of the cycle.
How does the dollar translate that? Hike, temporary hold. It's a very different context that you're putting forward. Other people are talking about a much longer and enduring holding pattern from the Fed. If you're looking for a rollover, when does the rollover in the top of the Fed come? And does the dollar begin to price that in? Are we near? I know we ask it every time you appear, but should I prepare for an exhaustion in dollar quickly?
Every time you ask me, I say it's not quite ready yet. I think we're looking at least Q2 next year if you need a quick answer on that.
The peak, it ain't here, Manus. Still not here, still on peak watch. Simon, thank you so much for joining us. I'm sure we'll ask you again many times to come. Simon Harvey, their head of FX analysis at Monex Europe. Well, coming up on the program with Manus and me, Europe's energy battle with Russia escalates further. Gazprom halts gas supply to Italy. Stay with us for that. This is Bloomberg.
A digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Monday morning, let's get the first word news with Leanne Gerrans.
Manus, good morning. Brazilian President Jair Bolsonaro is heading for a runoff election against leftist candidate Luiz Inácio Lula da Silva. Lula took 48% of the vote to Bolsonaro's 43%, falling short of the simple majority needed for victory. The outcome still puts a 76-year-old former president within reach of returning to the helm of Latin America's largest economy. The runoff election will take place on the 30th of October. Now, UK Prime Minister Liz Truss says a controversial decision to remove the top tax rate was made by her Chancellor, Kwasi Kwarteng. A source tells Bloomberg Kwarteng has met with about 25 MPs in recent days to attempt to head off a rebellion. In a BBC News interview, Truss admitted the government should have laid the ground better for the budget. Russia has suffered another operational defeat in eastern Ukraine, casting doubts on its plan for total annexation. Several thousand Russian troops withdrew from Lyman and Donetsk over the weekend after becoming surrounded by forces in Kyiv. The town was a key logistics hub for Moscow. This is Bloomberg.
There is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together.
Now I would have a much more experience about for those who says I love you and then betrayed you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
This is Bloomberg Daybreak Europe. I'm Manus Cranny in Dubai with Danny.
Infrastructure, and we need to remove the pain points, and so that's what we're doing.
Welcome back to Bloomberg Markets Europe. Half an hour to go until the start of cash equities trading. Here are our top stories. Tory turmoil. Prime Minister Liz Truss has scrapped her top-rate tax cut as she looks to stem a party rebellion. We are live at the Tory party conference. Oil surge. Crude prices jump as OPEC Plus weighs cutting output by more than 1 million barrels per day at Wednesday's meeting. Stocks struggle for direction. Plus, fighting the naysayers, Credit Suisse seeks to reassure investors it can surmount market turbulence as its shares fall to a record low and default swaps surge. Welcome back to the programme, everybody. It's been a busy morning already. We've got a U-turn on part of the agenda fiscally from the UK government. That's part of the story. That's been driving where the pound is. This is the futures picture then. We're half an hour away from the start of the European trading day, and futures in London, in Frankfurt and in Paris all point lower. This is a bit of a throwback to Friday, though, perhaps, because we saw US equity markets sort of losing their nerve, whilst European equity markets closed actually in the green on Friday. So as a result, we're going to catch up with the US moves. Looking ahead to US futures, they look fairly mixed, actually. Dow futures up 0.3, NASDAQ futures down 0.3%. So that's what we're looking at in the broader market picture. 30 minutes, as I say, to go until the start of the equity trading session. Let's dive into some charts and get the thoughts of our markets editor, Valerie Teitel. Valerie, very good to have you on the programme. Perhaps we've talked a lot about what's been spooking markets of late, and people are starting to ask, are we heading for some kind of credit crisis? Maybe not a full-blown credit crisis, but maybe some areas where liquidity looks a little bit stretched. Take us through your thoughts on bond market liquidity.
Yeah, that's right. And there's been a lot of comments lately that things like U.S. credit spreads have really yet to react to the economic slowdown we're expecting in the U.S. But there's one thing I want to talk about, and it's the liquidity cracks that we're seeing in U.S. Treasuries. So this is a chart of the month-on-month change of the Fed's balance sheet. Now, in 2018, 2019, what you saw here, it caused some cracks in the repo market in Treasuries, which made the Fed pivot. Now, we're yet to get to that kind of pace here. This is just month-on-month. Over the past 3 months, it's down $300 billion. We're yet to get to that kind of pace in 2018, 2019, but we are already seeing cracks in liquidity.
Right, already seeing cracks in liquidity. So this seems to be, well, this is obviously a focus for bond markets then. So where are those cracks in liquidity showing? If they're not showing in corporate credit spreads in the US, where else should we look?
Yes. So essentially, we can look at the Fed's balance sheet in one way, whereas it's moving the balance sheet from the from the public market, from the government, from the Treasury sector into the private sector. So that kind of crowding out of balance sheet is causing a huge balance sheet constraint for the private market. Now, as you can see with this blue line here, this is a measure of Treasury liquidity, and what that is showing is that essentially off-the-run Treasuries are so out of whack to the curve, but there is not enough balance sheet for traders to kind of hold RV positions in that part of the curve, right? At the moment, there's kind of a glut of too many bonds. Traders are stepping away. There's a lack of balance sheet. And at the same time, we're having Asian central banks intervene in their currency markets. Now, we know that essentially is a net selling of treasuries when they intervene. All this kind of pressure is now showing up in the funding market. This is the FRA-OIS spread, essentially the difference between overnight funding versus funding for 3 months. Now, I drew this red arrow here. This was where we had the Russia sanctions. There was a huge confusion over dollar funding at that time. We are now back to those levels, which is really, really interesting because the Fed cannot afford to blink and do a liquidity operation. It's still fighting inflation at home, and essentially any liquidity operations are stimulative. So this is going to be an increasingly focused thing that the market is going to have their eye on as to how the market encapsulates worsening liquidity when they know that the Fed might not be there to help.
OK, interesting stuff. Thanks, Valerie, for bringing those charts to our attention. Certainly something to watch as we look for cracks, as we look for places to be concerned about when it comes to these big changes in liquidity levels. Thanks to Valerie for her input. Let's get to the emerging market story this morning. Brazil's presidential election will go to a second round after neither leading candidate was able to secure a simple majority. The frontrunner, former President Lula da Silva, fell just short with 48% of the vote. Incumbent Jair Bolsonaro did better than expected, winning 43%. For more, we're joined by Bloomberg's Rodrigo Orihuela, who's been watching all of these developments overnight. Rodrigo, very nice to have you with us. So what does this mean for Latin America's largest economy, the fact that we go to a runoff here?
Well, the first thing is that we will look at some uncertainty over the next month. Lula was expected to have a bit of a stronger show, even though he wasn't widely expected to win in the first round. But the big surprise was that Bolsonaro's support was higher than the polls had shown. And the question there is how much more he can gain from other voters now that it'll be only him against Lula. The other thing that stands out is that his candidates for the Senate and for the House did really well. The showing was much better than expected, especially in the main districts like Rio de Janeiro and Sao Paulo. So going in, we have to see what happens to those two. Then Bolsonaro is probably going to stick to his rhetoric and his rather radical stance. With Lula, the expectation is that he will have to swerve even more to the center to get more support from voters who aren't typical supporters of his.
And how can we expect Brazilian assets to react to this, Rodrigo? Run us through how the setup looked in markets and how we're expecting them to respond.
So the expectation is that this is good for markets, this is good for investors. There were a few analysts, including JP Morgan, who had said that a tight first round would likely lead to a rally in equities and other assets, because the expectation is that with both of them having to fight in a very tight race, none of them will go for a radical agenda. So that's the expectation initially. The first kind of index everybody looks at is a Tokyo ETF, a Tokyo traded ETF, which is the first one that starts trading after election day because of the time difference. And it was initially up about 5% today. It's up about 2.7% now. We also have several listed securities in Europe which are about to open, including Petrobras and Brazilian government bonds. But the general expectation, as I say, is that this will be welcomed by the markets.
OK, so perhaps a little bit risk positive, and we wait for the second round. Thanks very much, Rodrigo, Bloomberg's Rodrigo Orejuela, joining us there with the latest on Brazil. Coming up on this programme, Prime Minister Liz Truss scrapping her top-rate tax cut as she looks to stem a party rebellion. We're live at the Tory party conference. The Chancellor speaking now, saying he has not considered resigning, speaking to domestic radio here in the UK. That is next. This is Bloomberg.
Most of the large Chinese technology companies, let's say Alibaba, Baidu, Tencent, they have gigantic market values and they're very prominent in China, not as prominent outside of China as obviously in China, and certainly not that prominent in the United States. TikTok, by contrast, is not in China, but it's gigantic outside of China, of the United States and everywhere. What did TikTok do that enabled a Chinese-based company, parent company at least, to do so well outside of China?
We think it's challenging to build a global company in general. But the best ones we've seen so far are ones that take very consistent global learnings and adapt them to the local countries that they are operating in. So you need to be global and local at the same time.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to Bloomberg Markets Europe. We still have 20 minutes to go until the start of cash equities trading. The futures picture looks negative. Ongoing concerns about global growth, of course, and the pace at which we're seeing global interest rate rise. That's been the narrative over recent months, weeks and months, hasn't it? And it certainly seems to still be present in the markets today. US futures, for what it's worth, though, either side of the flat line. E-mini is pretty flat. Dow futures higher by 0.25%. Nasdaq futures down by around 0.33%. So that's the sort of divided picture that we see for global equities right now. Let's get a Bloomberg Business Flash. Top corporate stories that could suggest some stocks that might be active today. Here's Alice Atkins.
Hi, Anna. Credit Suisse's CEO has asked investors for less than 100 days to deliver a new turnaround strategy, saying the bank is at a critical moment. In a memo to staff, Ulrich Kohner says the bank has a strong capital base and liquidity position and promises regular updates ahead of a new strategic plan at the end of the month. The cost of insuring the firm's bonds against default climbed about 15% last week to levels not seen since 2009 as the shares touched a new record low. A surge in IPOs in China has propelled CITIC Securities to the top spot in the global league table for equity issues. Data compiled by Bloomberg shows Goldman Sachs dropping to second place in the year to date. It's said to be the first time since 2009 that the top position at the end of a quarter isn't held by a big Wall Street bank. Tesla's worldwide deliveries missed estimates in the third quarter, with the company blaming challenges in securing vehicle transportation capacity. It delivered a record number of cars in the third quarter, but still fell short of the 358,000 the market was expecting. CEO Elon Musk says Tesla is aiming to smooth out deliveries away from an end-of-quarter rush. That's your Bloomberg Business Flash. Anna?
Alice, thanks very much. Alice Atkins with a Business Flash this morning. Let's just recap some of the lines we have coming through from the UK this morning. So around an hour ago, other media in the UK carrying the story that we were expecting to see a U-turn on the 45% tax rate here in the UK. And yes, lo and behold, earlier this hour, that U-turn was delivered. So the UK Chancellor Kwasi Kwarteng deciding to scrapping the cut that they were going to bring in on the highest tax rate. So that's a big change. It's not the whole thing that the markets were worried about, of course. Markets were worried about something else, but it has led led to traders being able to pair their bets on the amount of hiking we're going to see from the Bank of England. And that went hand in hand with a rally in the pound. Now we see that coming off a little bit. And those in the FX market saying, well, that's partly because the market had already, at the end of last week, started to factor in the possibility, strong possibility the market saw, of some sort of U-turn. And we have some sort of U-turn now. Let us talk to Lizzie Burden, who is at the Conservative Party conference. Lizzie, we have some sort of U-turn because it is only a U-turn in part of what spooked the market last week.
Exactly, Anna. The pressure cooker just got far too hot in Birmingham for the government to handle. The Chancellor's actually just over my shoulder giving a round of interviews. We'll hope to hear from him ourselves. He said that the 45p rate cut was becoming a huge distraction from a set of what he said were strong policies. Of course, the government had also announced this massive energy bailout, so it was desperately trying to cling back to the political credit for that. He was asked what changed. He said, we listened to people, we get it. He was asked, has he considered resigning? He said, not at all. But really, this had started to look inevitable. The Prime Minister had thrown him under a bus yesterday, blamed him for this top rate of tax cut. And there was so much pressure from Michael Gove, the former Cabinet Minister, saying that it was not a display of Tory values. And so the question now is how much of the rest of the package can survive, because this may dampen the political concerns. But really, for markets, there are a lot of other concerns because, of course, this is funded by borrowing. The OBR was effectively gagged and not allowed to give a forecast, and we're not expecting to hear from it until November the 23rd. So the concerns for investors still very much remain, even though the pound has been boosted by this news.
OK, Lizzie, thanks very much for the rundown. Bloomberg's Lizzie Burden at the Conservative Party conference in Birmingham. More from Lizzie shortly. Let's go to the stocks to watch, though. Some really interesting stories dominating, certainly financial services. Let's get to Tom McKenzie, who's got a rundown for us. Tom, let's start with Credit Suisse.
Yeah, real concerns, of course, about this lender for a long time, many a month. We have a new CEO coming out on Friday with this memo to try and reassure staff at the Swiss lender, but investors as well, that indeed their capital base and their liquidity position is still solid. That was the key message from that memo on Friday. The backdrop, of course, being that the shares for Credit Suisse have fallen to a record low, below 4 Swiss francs per share. Credit default swaps have jumped as well. And you have estimates from the analysts at KBW, for example, suggesting that this bank is going to have to do a capital raise of about $4 billion even after they've gone through some asset sales. October the 27th, that's when the restructuring plan is going to be announced by the CEO, but clearly an attempt here to reassure staff and investors as pressure on this lender continues.
OK, and then the story around RWE, and this is fascinating because it's met with some interesting commentary, hasn't it, from those in the energy markets asking whether, you know, what has got us to a place where a German company is spending its money on doing this kind of deal, but they've got their reasons. Tell us about RWE.
Yeah, indeed, from their own investors, they've faced some pushback over this deal. It's an $8.6 billion deal for Consolidated Edison's renewable business in the US, the biggest renewable deal in the United States on some measures. The pushback coming, of course, because RWE has profited from these high energy prices as a result of the ruptures and all the volatility within European energy, but they're using that dividend, they're using that money and that spending to build out their portfolio of renewable businesses in the US. One investor in particular saying, why are you not spending that money back in Germany? But it's a sizable deal, and RWE saying that they are very bullish and positive about the prospects of renewable energy in the US, partly financed, by the way, by the Qatari Investment Authority.
OK, and then let's keep an eye on anything to do with oil, I suppose, given what we're expecting in the middle of this week.
Yeah, so the news that OPEC Plus, come Wednesday, may cut output by more than 1 million barrels per day. That would be the biggest cut since the pandemic. Of course, you've seen oil on the back of this rallying, whether it's Brent or WTI. So the focus then, the read across to some of the big oil majors. We're looking at BP. They could get a bump on the back of this. You could also look at Shell and others as well in this space. That on the back of that reporting. We'll see what happens, of course, when they meet in Vienna on Wednesday.
Tom, thanks so much. Bloomberg's Tom McKenzie with a look at the stocks in focus, from financial services to the energy space to big oil and indeed to power generation. So lots to talk about this morning. UK politics very much in the mix as well. We're back at the Tory party conference next as the UK government scraps its plans to abolish the top 45% tax rate. The political pressure just got too hot. We will get back to that story shortly with a guest. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
We will never break, we will never break. Build on a foundation strong enough to stay. We will never.
Welcome back to Bloomberg Markets Europe. 10 minutes until the start of cash equities trading, things look negative on futures. The UK government has scrapped its plans to abolish the top 45% income tax rate. Let's get back to our colleague Lizzie Burden, who's at the Conservative Party conference with a guest who's influential on recent Conservative Party policy. Lizzie.
Thanks, Anna. I'm joined in Birmingham by Mark Littlewood, the Director General of the Institute for Economic Affairs. Mark, thank you so much for joining me. It's a busy morning, I'm sure. The government has just confirmed that it's going to U-turn on this policy to scrap the top rate of income tax. It's the first big U-turn of Liz Truss's premiership. It's boosted the pound. Is it the right decision?
Politically, I can totally understand why they've done this, Lizzie. In fact, just yesterday, a senior Tory MP came up to me and he said, Mark, I understand your job. Your job is to be an economics purist. But he said, I'm a Conservative MP and my job is to get elected. And there were quite a lot of Conservative MPs who just thought this looked bad. In economic terms, it's actually a rounding error pretty much within the overall package. But I think a lot of people thought it sent the wrong message. Now, I don't need to worry about getting elected. I run a think tank. But the Chancellor and the Prime Minister have clearly decided they were spending too much political capital on this. They're going to hope they can kill it, move on and focus on the rest of the package. That's a political judgment.
So, Mark, you say they've headed off the political concern. Economically, though, it's all right. But economically, markets are still going to be concerned about how much borrowing the rest of the package will necessitate. Is borrowing for growth on this scale really the free market economics that you advocate?
No, absolutely not. I mean, I think actually the real reason the markets got spooked was not because of this particular tax rate. Some people said that was the last straw that broke the camel's back. I don't really believe that. The problem the government's got to front up is how are they going to display spending constraint? And of course, at the time of the mini-budget, they didn't actually get an OBR report, the Office for Budget Responsibility. They didn't really produce any strong numbers themselves. So I think the markets are going to ask whether or not you've got a 45p top rate, as I say, a rounding error. How is the government going to show it's going to balance the books in the medium term? That's the next big challenge for Liz Truss and Kwasi Kwarteng. They're saying they're going to wait till November the 23rd before it's quite some time away before they sketch out that plan. But they're going to have to find areas where they can make spending reductions.
And where should those spending cuts come? Because you'd assume they can't touch health or defence. They've said they're not going to touch pensions. Surely they can't touch benefits in a cost of living crisis or infrastructure when they're going for growth.
Really interesting. I mean, it's always the difficult question. I can say, let's find some spending cuts in the abstract, but when you actually dig down into what you're going to do, I would hope they would tackle what I would call middle-class welfare. When we talk about benefits, we always think of the poor who are reliant on that to stay alive, but do we really need to give winter fuel allowances to millionaire pensioners and the like? I'd actually like to see them find areas of the welfare bill that isn't really targeted on poverty, perhaps make savings there. They'll obviously try to make efficiency savings. Every government does, but they're going to have to be some pretty robust numbers here. Otherwise, the markets will continue to be spooked.
And Kwarteng says that more tax cuts are in the pipeline. You're very close with Liz Truss. You've known her since Oxford. What do you reckon is coming?
I think that the trend you should look for is actually on the basic rate of income tax. They've already cut that from 20% to 19% as of April. If they have any room for further fiscal manoeuvre, and that's in doubt unless they can find some spending constraint, maybe they'll get that down to 18% before the next general election. That would be my prediction.
And should the Prime Minister keep the Chancellor in his position?
Oh, I think they're joined at the hip. I know that she said yesterday, I think this idea came from the Treasury. She might have been right on that, but that was the first indication that maybe the Prime Minister was not going to robustly support this. But I think having done this, they're going to hope that that actually stems the bleeding. They lost a lot of political capital. But it's an inauspicious start. I mean, the last government was criticised of sort of announcing something, marching its troops halfway up the hill, only to then tell them to retreat. Well, that's exactly what Liz Truss and Kwasi Kwarteng have done now. They're going to hope that this is the last retreat they make, because if this becomes a habit, that spooks the markets more than anything else. Was the next Liz Truss Kwasi Kwarteng announcement going to stick, or could it unravel if they run into political problems with their own party? They're going to hope to be able to guillotine this and move on. That's their political plan. They've wasted an awful lot of time and political capital on trying to push water uphill on this, and they failed.
As I say, you've known Liz Truss for a very long time. She's given more speeches at your think tank, I think, over the past 12 years than any other politician. Would she have enacted these policies regardless of the economic context, the inflation crisis, for example? Is that perhaps what's really gone wrong here?
I think actually what went wrong here was that she wanted to send a message that the government was going to cut taxes across the board, and in her words, we're not that worried about the distributional effects. As long as you cut taxes across the board, you didn't have to ensure that the poorest two decile cohorts made more cash than the richest decile cohorts. She was determined to get away from that and almost abolishing this top rate of tax, which is an obscurity, really, in the British tax system. I mean, to have a marginal rate that moves from 40% to then 45%, it's more about performative politics than economics. And I think they wanted to signal, we're going to simplify the tax system. We're going to make it easier to understand the tax system. We're going to encourage higher earners to earn more, perhaps you might even get more revenue by abolishing this rate. That was very much a kind of Liz Truss ideological sort of position, if you like. But she's come unstuck because her own party, or a good wing of her own party, just says the optics of this, look back. That was your first move. We don't look. So this is all about how it looks, really, rather than the economics of it. Politics has beaten economics, in my view, as part of this U-turn.
Mark Littlewood, Director General of the Institute for Economic Affairs, thank you so much for joining me. It's going to be a busy day, Anna. We're going to hear from the Chancellor Kwasi Kwarteng, the Business Secretary Jacob Rees-Mogg, and the Trade Secretary Kemi Badenoch. So watch out for the pound and gilt today.
Yeah, absolutely. The pound then gained on that U-turn from the government. Partial U-turn, of course. Lizzie, thanks very much. Thanks to Lizzie Burden and Mark Littlewood from the IEA. The pound gained, but then lost some of that gain. So now trades at 111.94 as we head towards the start of the European trading day. Coming up on the programme, it is the market open. Futures point lower. This is Bloomberg.
A digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's
I'm doing
weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. The lady is for turning. Liz Truss's government scraps a cut to the top rate of income tax a day after backing the plan. We are live at the Conservative Party conference in Birmingham. OPEC Plus will consider cutting output by more than 1 million barrels a day. Crude's price surge saps sentiment. Plus, fighting the naysayers, Credit Suisse seeks to reassure investors it can surmount markets turbulence as its shares fall to a record low and default swaps surge.
Tom, a lot going on in the future. So we look at the FTSE futures down 1%, but of course the big story is that reversal of the 45% tax, of course scrapping that. Treasury is actually also signaling a bit of unease with general market anxiousness, but actually I'm looking at traders and they're definitely pairing the BOE rate hike bets after that reversal. So interesting to look at sterling as well.
Yeah, it was 125 basis points or less come November from the BOE. Absolutely to your point that market traders are starting to ease those bets on that decision then to reverse course on the 45% top rate of tax. We're waiting, of course, more details and more reaction from Birmingham. We'll bring that to you. Currently, the FTSE 100 500 is down around 1%. The context, of course, globally is that you've seen 3 straight quarters for the S&P 500 US stocks, 3 straight quarters now of losses. That's the first time we've seen that since the 2008-2009 recession. Today, additional concerns about the inflationary impact then of OPEC Plus's plans. They haven't been finalised. We'll get those on Wednesday, but the reporting suggests they could cut by at least 1 million barrels per day. That would be the most since the pandemic. Again, feeding into those recession fears on higher inflation once again. The FTSE 100 now down 1.3%, a drop of 90 points. Over in France, the CAC current lower by 1.2%. The Spanish IBEX, a drop there of 50 basis points, 50 points or 0.6%. Switch it over to see how things are playing out across the currency space then. The focus once again on the pound, given this U-turn from the UK government, the government of Liz Truss. So the pound currently trading at 1.11. You saw a bigger bump. That's come off slightly. It's range bound now, in fact. Sterling, after gaining as much as 0.8%, come back down to 1.11, having crossed 1.12. Futures in the US, no change there. Again, after 3 straight quarters of declines, 3 straight quarters of declines for US equities. There is a little bit of move into the yield space in the US, 4.20 in terms of the 2-year at the front end, and Brent trading at $87 a barrel. That's again, look at that, a 3%. We're watching the big oil companies on the back of this again. They're reporting that OPEC Plus could be cutting production by as much as 1 million barrels per day, at least, according to the reporting. The meeting is on Wednesday. Francine, we also had the inflation data crossing out of Turkey. Yep. You've got the lines on that.
Yeah, so the Turkey September consumer price rising some 83.5%. Talk about unconventional policy, Tom. This is something that we've been really keeping a very close eye on. It's very clear that Erdogan will not back down. He's insisted on even lower rates, saying that they'll help reduce inflation. This is not what the textbooks of inflation and economics tell you. It's really an argument that contradicts conventional economic theory. So far, it hasn't been validated by real-world experience, least of all in Turkey. So you can see that annual inflation rising 83.5% in September, and you can see more pressure on Turkish lira. Now, if you look at the sectors on the move, certainly here in Europe, a huge day, as Tom was saying, because of the UK. Also a huge day because we now start worrying, and there's Credit Suisse, but also a couple of things on the other side about just some of the bond refinancing, the huge amount of bond refinancing that we would need. And if you look at the sectors, they're pretty much all under pressure. Again, maybe they move on the back of, Liz Truss turning and reversing some of the policies put in place, but I have to say it's pretty ugly out there as we have another week of possible economic volatility, and we look at liquidity in the markets.
Yeah, and let's check back in on UK assets and the back of this U-turn from the government of Liz Truss, the scrapping of that plan to scrap 45% tax at the 45% tax level. So the pound currently, you are looking at the pound trading at 111.87. So just a gain of a little over 0.1% for sterling. Gilts, there's a little bit of move in at the front end. So 4.14, yields down 9 basis points. The 10-year 4.01. That's a yield move lower of 8 basis points. The 30-year, so the longer dated maturity, also 3.74, a move lower by 8 basis points. And as Francine was saying, markets and traders starting to ease that bet in terms of the aggressiveness of the BOE and their rate hikes that they'll need to push through come November.
Yep, 122 basis points of BOE rate hikes. It's what's currently priced in the markets. Now, Liz Truss's government has scrapped, as we were saying, a cut to the top rate of income tax in the UK. Now, the move is a major reversal for the Prime Minister of the UK, which has been in office. She's been in office for just a month, having spent days defending the measure. Now, let's bring in Wei Li, Global Chief Investment Strategist at BlackRock. Wei, good morning. First of all, I mean, we're all kind of, following this frantic news. It's huge news because we thought that she wouldn't reverse on that. Does it actually mean that you can see opportunity for the markets if suddenly they listen to the markets on what they should be done?
Well, this seems to be a step in the right direction, thinking about the previously unfunded tax cuts and fiscal spend. And now the numbers may get closer to adding up, although they still don't add up. But if I look at last week, there are a few things that I learned. First is markets can actually impose discipline again, and fiscal credibility matters again. And also that when it comes to push comes to shove, central banks actually would prioritize market stability in the case of the BOE. So all of that reinforces our conviction that, in this world of great moderation coming to an end, and in this world of new regime shaped by a supply constraint, actually soft landing is not on the table. In the near term, we expect central banks to be even more focused on fighting inflation so that they are not in the same position as the Bank of England. But in the longer term, we expect them not to go all the way to fight inflation, to bring it down to their targets because it's shaped by supply.
Wei, one of the lines that stood out from your most recent commentary when it comes to the UK, just keeping the focus there for the moment, the UK now faces different challenges that change fundamentally how we look at UK assets. Of course, you and the team at BlackRock. Does the announcement today change that view? And on the question of gilts, have we seen the upside now for these yields?
I think it's not black and white. It's not either 0 or 100. So what last week also taught us is that fiscal credibility really matters when it comes to evaluating the growth outlook as well as the asset return outlook of the country. So when we are worried about fiscal credibility, when we are worried about balance of payment crises, then the numbers need to be stressed a lot more, right? So currently we are underweight UK equities, we're underweight gilts market, but we have identified the front end of the gilts market as a place that we we would want to receive because of the very high rate hikes expectations.
Wait, when you look at what happened in the UK, so scrapping this tax cuts for top earners, is it really a warning signal to other markets, to Italy, to other new governments, to make sure that they keep the markets on side? And what does that mean for your portfolio?
Well, it does mean that when it comes to fiscal policy, it needs to be quite a lot more thought through, quite a lot more targeted, as well as quite a lot more coordinated with the monetary side of things. So again, taking the UK as a case in point, we had the government pressing on the accelerator, and the Bank of England, in order to bring down inflation, will have to engineer a recession to do that. So they are pressing on the brakes. That's not coordinated policy, right? So as a result of the fiscal announcement, we're not expecting higher growth forecasts, but we're expecting higher rate hike expectations. So you can see how when policies are not coordinated and well thought through, it doesn't achieve the desired outcome, and that's definitely a lesson for European counterparts.
And you're making the argument as well, Wei, that markets have not yet priced in the extent of any recession that would come about as a result of this stronger reaction from central banks globally. That hasn't yet been priced in to these markets, is your view?
Not at this juncture. So if you look at earnings expectations for developed market equities, we're still talking about mid-single-digit growth for next year and high single-digit growth for mid-single-digit growth for this year and high single-digit for next year, which in the context of us entering a recession in the UK, in Europe this year, and in the US next year, there is still a significant disconnect, which is why we're underweight developed market equities at this juncture.
Wait, there's a couple of things, of course, in emerging markets. So there's, for example, elections in Brazil, and it does seem that the right, even if Jair Bolsonaro does not get elected, is taking a lot of the parliaments. Is there any prescription for what you do with emerging markets right now if the dollar goes ever higher?
While the dollar has been really a key kind of sentiment bellwether in terms of global risk on and risk off, and also from an interest rate differential perspective, it has been reacting to the fact that the Fed is moving ahead quite aggressively. So that definitely has been a bit of a headwind for emerging markets. But in the context of commodity exporters and in the context of global growth currently holding up okay, emerging markets have been performing on a relative basis not too bad. So we currently have a neutral allocation to emerging markets versus developed market sizable underweight at this juncture, and we are keeping that at this moment. But obviously, eyes on global growth slowdown, what that means for emerging market, China slowdown, what that means for emerging market, as well as the strength of the dollar feeding through to emerging market complex as well.
Okay, neutral emerging markets, underweight developed markets. The Bloomberg Dollar Index currently range bound at 13.37. Just briefly checking on the pound, 111 on the pound, again of just 0.1%. Wei Li, Global Chief Investment Strategist at BlackRock. We're going to get more calls from Wei Li after the break. Coming up, Credit Suisse drops as the new CEO, the memo on Friday, fails to calm markets ahead of another new turnaround strategy. We get more on that evolving story next. This is Bloomberg.
There is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what
Some locals were also offered jobs during construction. In fact, it was the community that requested the panels to be shaped as flowers to look more appealing. South Korea still relies heavily on imported fossil fuels, but will need to change that to reach its goal of becoming carbon neutral by 2050. Solar plants like this one may help the country reach its net zero goals.
We will never break. We will never break. Build on a foundation strong enough to stay. We will never.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. A lady is for turning. Liz Truss's government scraps a cut to the top rate of income tax a day after backing the plan. We're live in Birmingham at the Conservative Party conference. OPEC Plus will consider cutting output by more than 1 million barrels a day. Crude prices surge while sap sentiment. Plus, not reassured, Credit Suisse drops to fresh lows as a new chief executive fails to calm the markets. Tom, I have to say, everything's going on in the markets. You have crude, you have worries about recession because of inflation, and then, of course, you have the UK story on life of its own.
Big day for these markets. Credit Suisse, I know you're fascinated by this story and what it may mean about risks within these markets as Credit Suisse gets back down to a record low. Not reassured by that memo, as we said in the headlines from the CEO on Friday. That is its own idiosyncratic story, but the read across more broadly for markets could be significant. The context, 3 straight quarters now where global stocks have declined, the longest streak of losses we've seen since 2009. Of course, the global financial crisis, and the start of this quarter not looking good either. Down 0.8% across the benchmark. The DAX in Germany lower by 0.9%. Porsche, remember that IPO last week? Back below the IPO price. The FTSE 100, a drop of 44 points. That U-turn, of course, from the UK government. Yes, sterling is higher. There's a move into gilts. Stocks, though, lower by 0.6%. Energy will part of the mix, certainly when it comes to what's happening sector by sector, because, of course, oil is higher. Let's switch it on and see how things are shaping out across these sectors. That is another big story for these markets. OPEC Plus considering the biggest cuts to production since the pandemic. Oil up, of course, recession fears increasing on the back of what this will do to inflation, of course, remains persistent and stubbornly high. Gains then of 0.9, almost 1% across the energy space. Utilities that move into safe havens gaining 0.3%. Just 3 sectors in the green, everything else in the red this morning. Bottom of the list is technology, followed by financial services, autos and parts. And I talked about the Porsche IPO, part of that mix, certainly. Francine.
Yeah, now in the next hour, we'll also be talking about the markets with the chairman of Société Générale, Lorenzo Bini Smaghi, exclusive interview. It'll be interesting, of course, to get his take on the chief executive of Société Générale, what he'll bring forward, but also in general some of the anxiousness that some of the banks are feeling because volatility, liquidity, and what's happening with Credit Suisse. Now, the UK Chancellor, Kwasi Kwarteng, has confirmed that the government has scrapped a cut to the top rate of income tax. The move is a major reversal for Prime Minister Liz Truss's government, which has been in office for just a month. Now, it comes after the PM spent days defending the measure. Now, for more, Bloomberg's Lizzie Burden is live from the Conservative Party conference. Lizzie, wow. What a day for the Tories. What can you tell us about the U-turn?
Well, Francine, the pressure just got too much here in Birmingham for the Prime Minister. We've just heard from the Chancellor. He's done a round of interviews. He said that the 45p rate cut was becoming a huge distraction from what he said were a strong set of policies. Of course, the government wants to take political credit for all the money it's spent on the energy bailout, and that wasn't proving possible. He was asked what changed. He said, we listened to people, we get it, kind of admitting that they weren't listening to people and they didn't get it for 10 days. He was asked, would he consider resigning? He said, not at all, but he refused to rule out any further U-turns. Really, a U-turn had started to look inevitable. Yesterday, we heard from the Prime Minister, Liz Truss. She threw Kwarteng under the bus, blaming him specifically for this top-rate tax scrapping. And then we heard from Michael Gove, the former Cabinet Minister, saying that this decision was not in line with Tory values. So the pressure really got to the Prime Minister here. Really, she had been desperately trying to imitate her political hero, Margaret Thatcher, and not be for turning. But what she's proved here is that market and political realities have got to her. It seems like to many, she'll have revealed her true colours, that she's had to flip-flop, she's blamed a colleague, and as we know, credibility is so hard to rebuild once you've lost it, both in politics and in financial markets.
And that's what's really interesting, isn't it, Lizzie? There's the credibility of the UK, the government, and our ability to borrow, and then there's the credibility of the Prime Minister herself. Where does she go from here?
Well, there's first of all the question of how much of the rest of this package can survive. And looking at the market reaction, yes, it's boosted the pound. Traders have pared back bets of a big jumbo hike from the Bank of England at its next meeting. They're now pricing less than 125 basis points versus 140 basis points on Friday. But, it wasn't just this that was concerning. It was also the amount of borrowing that would be required. And of course, we didn't have an OBR forecast with this fiscal announcement. We're not expecting one until November the 23rd. Then to the bigger question of whether Truss can survive. Already some Tory MPs are talking about changing the party rules to take away her immunity from a vote of confidence. She's meant to have a shielding for a year, but there are already people asking Graham Brady, the chairman of the 1922 committee, if they can change that so that MPs can hold on to their seats. So really, it's not just a question of whether these policies will survive, but whether the Prime Minister can survive.
Turbulence for the country, turbulence for Prime Minister Liz Truss. Lizzie Burden on the ground in Birmingham. Thank you very much indeed. Just briefly touching on UK assets. They are bid this morning on back of that U-turn, and 112 on the pound. That's a gain of 0.3%. Gilts also bid, yields lower. We are joined now by Sian Waitata, senior European economist at Vanguard. Sian, thank you for joining us in the studio. Your reaction then to this U-turn, does it change fundamentally your views on the UK economy?
Not so much. I mean, the actual funny thing is the market reaction hasn't been too large today. As you said, sterling's only up 0.3%. And that's because the U-turn on the 45p rate of tax actually is a very small part of the overall package that was announced a week on Friday. And actually, I think the main story here is even before today, sterling was trading pretty close to the level it was at before the budget was announced. And I think there's now an element that the concerns about debt sustainability are now overblown. So they were perceived to be overblown, right? And we saw that with a lot of volatility last week, but now starting trading pretty close to where it was before. And that is because, you know, the UK does have a high debt level, but it's not so high. And also the maturity of the debt is quite large. It's quite long at around 14 years.
We have a great chart, actually, that our Valerie Teitel put together looking at the gilt market since the budget. I mean, it's incredible also to think what the BOE had to do and step in, largely because of the mini budget. What does it mean going forward for what gilts will do? So if you think it's not as bad as maybe the markets were trying to test, what does the government do?
I think there's a big divergence here now between what the currency market is saying and what the bond market is saying, right? And bond markets are still 50 to 100 basis points higher as a result of the mini budget. And I think that is key, is actually it is a fiscal easing package on top of already high inflationary pressures that the Bank of England are trying to get a lid on. And that's why you've seen that move in market pricing. And we think at Vanguard that the terminal rate now has got to be closer to 5% rather than the 4% that we were saying beforehand as a consequence. And the bank probably, as you say, has to go at maybe at least 100 basis points at the November meeting.
OK, market's currently pricing in a little under 125 by November from 140, so reining that in. The terminal rate of 5% from the BOE, what does that do to your projections for the economy?
I think this is the really tough message, is actually the fiscal package is probably going to be positive in the short term, but arguably neutral or even negative in the longer term, because with a bank rate of 5%, that means mortgage rates are going to be 6, 7% plus, and business rates are also going to be at a similar level as well. It's very hard to see the economy doing very well in that environment, and arguably, you know, the benefits from tax cuts will be more than offset by higher mortgage payments and higher business costs. And so it's a pretty bleak outlook, I think, especially as you get into the second half of 2023.
Sean, what's your biggest concern now then about the UK economy? Is there a worry that, I guess, to counterbalance or to overdo this and give the markets a signal we go into austerity mode?
Yeah, I think ironically the biggest concern I have is growth, especially in the medium term, as you know, higher mortgage rates and higher interest rates start to weigh on the economy. I think austerity is maybe something that maybe is going to be pushed a bit further out. You know, in 2 or 3 years' time, that might become an issue as we approach the election. But at this moment in time, it's really about growth, and actually, you know, all this talk about growth has actually been counterproductive because it's come with an accompanying tightening in financial conditions.
But Sean, this is a government. They say they're going for growth. This is a growth mini budget. That would be their line. Interesting to see how that counteracts with your view longer term for the UK economy. Just broadening it out to Europe, and of course, energy is back in focus today, whether it's OPEC Plus or the meeting the Eurogroup. Is the energy crisis fully priced in by the ECB? Are they being realistic about the hit to growth from this energy crisis?
I think clearly this is a very uncertain environment, so they're trying to think in terms of scenarios, right? And I think the big risk factor at the moment for Europe is actually, funnily enough, the weather. And at the moment, it seems like we're going to get a colder than normal winter, which is going to be clearly very difficult to then replace the natural gas that they need to replace. And also, it's not only a colder winter, but also less rain and less wind, which means that renewable energy might not give you the buffer that we're kind of hoping for. So I think the real risk here is actually on the weather side, given all the other measures being put in place to try and bolster natural gas.
Sean, we have a great viewer question. We love when we actually hear from you guys listening in, so please keep sending your questions in. So this person's writing in, can this reversal in policy stem the emergency BOE gilt buying program possibility, because they were doing QT and then they said, actually, no, hold on, we need to buy some, to end earlier than scheduled?
I would say no. As we said before, the reversal is actually quite a very small part of the overall tax package. The BOE intervention last week was, as we know, mainly due to liquidity concerns and concerns about leverage with the pension market, and then the delay of quantitative tightening. But I think that actually is a big question here. Does the Bank of England continue with their intention to tighten QE in an environment where liquidity and pressure is on the gilt market? That's the open question for us.
So October the 14th is when it ends, in terms of the buying that they've been doing to add some kind of certainty to this market and offset the pressure on the pension funds. The question then is, they have to formulate a different response post-October the 14th. What should markets be watching for from the BOE after that date?
I think it really depends on market conditions and how calm the current market environment is, right? And they were very successful, I mean, to be fair, last week. They only bought, I think, 1 billion in bonds, and 30-year yields fell 100 basis points. So, you know, it was a very successful package. I think, I mean, you'd hope that over the next couple of weeks, market conditions remain relatively calm, and then that provides the ingredients to provide them the narrative to tighten QE further down the line. But, you know, given the gilt supply that is pretty under pressure at the moment, it might be a tough thing to get through.
Sean, thanks so much, as always, for coming on. Sean Raitata there, Senior European Economist at Vanguard, joining us on All Things UK. Now, coming up, EU finance ministers are also set to meet as the outlook for the European economy remains on edge. We'll be live in Luxembourg next. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by these flooding in Amazon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open, everyone. 44 minutes into the European trading day. It's messy. Tom and I have been talking off camera. It is messy. Treasury yields falling, U.S. stock futures struggling for direction, hawkish policies, reversal in the UK, and then oil going up.
Indeed, and we'll get over to what's
Happy
happening.
Monday.
Not so happy Monday if you're invested in Porsche or Credit Suisse or you're worried about these oil markets. Indeed, what a day for these markets with this U-turn, top of the agenda from the UK. But we get back to what's happening across the energy space then, because EU finance ministers are meeting in Luxembourg, Francie.
Yeah, they are, and this is, of course, the backdrop of high inflation and a fierce debate raging over how to tackle Europe's worsening energy crisis. Now, for more on this, we're joined by Bloomberg's Maria Tadeo in Luxembourg. So, Maria, finance ministers gathering, tough winter looms. I mean, is gas and energy top of the agenda?
Yes, it's the whole thing. And Francine, I heard you debating and talking about the weather, and it was just absolutely freezing here in Luxembourg. The fog in this place already from October the 2nd kind of feeds into the conversation here. You have an escalation in the energy war, clearly prices that are not coming down fast enough. You have double-digit inflation, the calls for a recession that are growing louder in the European Union, and you have finance ministers in a tough spot because they have to appease the social tension. They have to appease and bring down the cost of living, but they have to do it in a way that is coordinated among 27 different countries and 16 different countries part of the euro area that, of course, have different systems. So it is a tricky balance here to keep one eye domestically, but at the same time do a fiscal policy in particularly that works for all.
Maria, they could just look to the UK. We have the framework here in the UK for how to address this in a smooth and market confidence building kind of way. Ha ha. What is happening in terms of fiscal response then from countries like Germany?
Tom, way too cruel. I was not expecting that from you, but I mean, you basically just laid it out for me. I think we're going to hear from a lot of finance ministers say that there is a way to ease fiscal, but do it in a way that is responsible. It's interesting that we've heard already from the German finance minister, Christian Lindner, say our plan, which is 200 billion euros, has nothing to do with the plan of the UK. Of course, I've lost track because a number of U-turns this morning. I'm not really sure what's in it, but the Europeans have been trying at least to send a message that this is a different fiscal path. But the one thing that I would say, they have tensions of their own. And when I mention Germany, well, it goes back to this big plan. There's a number of countries here that say Germany has big pockets. They could go in with a big response, but not every country in the euro area has the same fiscal space. And there's already questions, to put it diplomatically, about whether or not this is respecting the level playing field.
Maria, today on the ground in Luxembourg, that important Eurogroup meeting as the euro is up about 0.1%. Yields also higher, though, in Germany and Italy. Thank you. Let's get the Bloomberg First Word News now with Alice Atkins. Alice.
Hi, Tom. Brazilian President Jair Bolsonaro is heading for a runoff election against leftist candidate Luiz Inácio Lula da Silva. Lula took 48% of the vote to Bolsonaro's 43%, falling short of the simple majority needed for victory. The outcome still puts the 76-year-old former president within reach of returning to the helm of Latin America's largest economy. The runoff election will take place on October 30th. Russia has suffered another operational defeat in eastern Ukraine, casting doubt on its plan for total annexation. Several thousand Russian troops withdrew from Lyman in Donetsk over the weekend after becoming surrounded by Kyiv's forces. The town was a key logistics hub for Moscow. It comes just days after the Kremlin announced it had annexed the region after holding referendums labelled a sham by the West. OPEC Plus delegates have told Bloomberg an output cut of more than 1 million barrels a day is on the table when they meet this week. A larger than expected reduction will reflect concern that the global economy is rapidly slowing. A 1 million barrel cut would be the biggest since the pandemic. A final decision won't be made until ministers meet in Vienna on Wednesday. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Alice, thanks so much. Alice Atkins in London. Now, coming up, Prime Minister Liz Truss has grabbed her top-rate tax cut as she looks to stem a party rebellion. So we'll discuss that next. And this is Bloomberg.
I'm here at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
We have to be able to give our customers vehicles, that are their primary vehicles that are EVs, and to be able to do that, we need to have range and infrastructure, and we need to remove the pain points. And so that's what we're doing.
Welcome back to the Open on this Monday, 52 minutes past 8. Of course, 52 minutes into the trading session, you're seeing losses of more than 1% across the benchmark. Futures in the US are range-bound. You have the UK story on the U-turn on the higher tax rate. The FTSE 100 currently down 0.8%. The selling more pronounced over in France and Germany. A couple of individual stories to bring to your attention as well. Top of the list, really, is what's happening with Credit Suisse. And the CEO putting out a memo on Friday, but not assuaging these investor concerns at a new record low now, the stock for Credit Suisse. Look at that, a drop of more than 8%. KBW estimates, by the way, that this bank may need to raise at least $4 billion of additional capital, even after selling their assets. We look ahead to that restructuring announcement on October the 27th, but very deep concerns about Credit Suisse as the credit default swaps on that bank jump as well. RWE, a big deal there, buying some assets in the renewable space in the US. That deal is worth about $6.8 billion, buying Consolidated Edison's renewable assets over in the US. And BP up 2.4% on the back of the reporting that OPEC Plus could be cutting output by at least 1 million barrels a day. That decision on Wednesday. Francine.
Now, the pound spiked after the UK Chancellor Kwasi Kwarteng announced a decision to drop a tax cuts for the highest earners just 10 days after announcing it. Now, for more on this and to dive deeper into the markets, let's bring in Bloomberg's Christine Aquino. Christine, what a Monday. You kind of wake up, you look at oil, you look at some of these, unknown unknowns. You have Credit Suisse, and then boom, reversal for the UK, and it's kind of repriced everything for a very small amount of time. And then it seems that the markets just don't believe that the government will reverse.
Yeah, Francine, I think really when it comes to the UK and the markets are reacting to this news, it really is a question of credibility here. I mean, we know that has suffered greatly in terms of the government and how it's being perceived by markets over the past week, given the mini budget and the havoc it really caused markets here. And so, this mini U-turn, we saw it in a pound, right? It was good for probably, maybe half an hour of upside in the pound, and then we're paring back a little bit now from those day highs. But I think moving forward, I think it would be really interesting to see whether the UK government, Liz Truss, Kwasi Kwarteng can really win back that investor trust that they have lost quite a bit of over the past week. Whether, is this going to be the last of the U-turns that we're going to see, or is this just the beginning? And whether markets will really believe that they're going to have a handle handle on the UK finances, despite the fact that they're trying to still push through fiscal help over the next few months.
Yeah, a lot of work still to do for these politicians and the leaders of this country to win back that trust. In terms of what's happening with Credit Suisse, this is a story that's remarkable. I know Francine is fascinated by what's happening here as well. The stock price now down 8%. Credit default swaps, of course, jumping on the back of concerns about this bank. Is there a broader systemic risk from what's happening with Credit Suisse?
Yeah, well, Tom, I think the good news, or the silver lining, at least from the Credit Suisse story, is that it does appear to be quite idiosyncratic to the bank itself. I mean, we are no stranger to the troubles of Credit Suisse over the past year, really, when it comes to just the various challenges that it has faced. But I think more broadly speaking, the banking sector doesn't seem to necessarily see this as a potential for any sort of contagion across the sector. Of course, banks generally, I think, are still primarily concerned about the broader interest rate environment and, of course, the trading volatility that a lot of what we're seeing now in the upheaval in markets is bringing about, of course, and quite a few conflicting forces here. Potentially good for business in terms of kind of the trading activity, but of course, the uncertainty over interest rates still looming over a lot of banks.
Yeah, and of course, we heard from the chief executive saying staff, look, remain disciplined and close to clients despite all the media attention. But is the media attention because of the banks, or could this snowball into something uglier for the banking sector?
Well, I think for now, it does appear to be contained to Credit Suisse in terms of the attention that's being paid. I mean, we haven't really seen any kind of questions of which bank is going to be next in terms of facing similar troubles. Again, I think that the challenges are quite unique to the bank itself, Credit Suisse itself, and so not necessarily something that we're seeing being replicated across other banks. But again, you know, the challenges broadly for the banking sector, we know what they are, right? It's this new era of interest rates and also a little bit of consumer weakness, particularly in Europe and the UK. How they're going to be navigating that, definitely something that investors will be paying attention to.
Christine, thanks so much. Christine Aquino there with the very latest on markets and, of course, the movers. Now, up next, we'll be speaking with the chairman of Société Générale. That's an exclusive conversation. He's Lorenzo Binismaghi. We'll talk, of course, about inflation, banks, Société Générale, and maybe, why not, we'll ask a question or two about Credit Suisse and that possible risk. This is Bloomberg.
A digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect. How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg. Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. The lady is returning. Liz Truss's government scraps a cut to the top rate of income tax a day after backing the plan. We're live in Birmingham at the Conservative Party conference. OPEC Plus will consider cutting output by more than 1 million barrels a day. Crude price surge saps sentiment. Plus, not reassured, Credit Suisse drops to fresh lows as the new chief executive fails to calm the markets. Now, we're getting a bit of breaking news, but I have to say the focus firmly on the pound, on gilts, and exactly what is happening with inflation fighting from central banks. But Euro area September manufacturing coming in at 48.4, so anything below 50 means a contraction, pretty much in line with the preliminary estimate. So the picture overall for European stocks down 1.3%. Treasury yields are falling again. Even U.S. stock future indices are seeing a bit of pressure. There's a lot of concern that some of the hawkish policies put up by central banks around the world are raising the risk of a recession and raising the risk of earnings contraction. The FTSE, now this is a different story. This partly, and I read a great line by Sebastian Boyd on our MLive team saying, look, given the pressure that we saw on UK stocks, maybe now is a buying opportunity. But this is also a story of credibility for the markets or for the government after they reversed that sapping of the 45% tax band. This had implications for pound at currently at 112.04. So it did move pound, but then again, markets are now trying to test the markets, the government's resolve to really pay for the rest of what they promised in that mini budget. And then crude oil, 83.01. We talk about OPEC plus. So the picture overall for the map, I don't think it makes a huge difference, given these are global concerns on whether you're in the UK or Germany. If we have it, there you go. You can see the FTSE down some 1%, the DAX over in Germany down 1.4%. So we're seeing similar moves really in the red across the board. Also this hour, we'll be speaking exclusively with the chairman of Societe Generale. He's Lorenzo Bini Smaghi. So we'll have a lot of questions for him on these markets. But really the main question, if you're a bank chairman, and I know they had a change of leadership at SocGen, is what does some of this volatility or also lack of liquidity mean for his banks? Tesla shares falling 5%. So we're seeing a little bit of the market pre-open moves. So Tesla down 5% after missed estimates for third quarter deliveries. Now back to our top story. The UK government has scrapped its plans to abolish the top 45% tax rate. This comes after Prime Minister Liz Truss spent the weekend defending her government's economic policies, which triggered a week of market turmoil.
Did you discuss scrapping the top rate with your whole cabinet?
No. No, we didn't. It was a decision that the Chancellor made.
When you have additional billions of pounds in play, to have as your principal decision the headline tax move, cutting tax for the wealthiest, that is a display of the wrong values.
Now we're joined by Elliot Hentoff. He's head of macro policy research at State Street Global Advisors. Elliot, I have a million questions on, we're hearing actually from the Chancellor also blaming market volatility on global events. I mean, there was something because of the mini budget that triggered, of course, these concerns of how they're going to fund it. Like, what does the government do next after this U-turn?
Well, first of all, I think the U-turn was expected, at least by many market participants. We thought the government could not hold out against the pressure of the volatility in the marketplace. I think it's important to remind viewers how bad the fundamentals are for the UK. And we're in a different world. We're in a world where rates are rising, things are getting tighter, borrowing costs are rising. So policy mistakes will be punished by markets. This is very different from the past decade.
So what does it mean for growth in the UK? I mean, this was meant to be their growth plan. It got lambasted. When you think back of how many gilts the BOE had to buy, this probably could have been avoided.
The growth outlook remains dire. That's the reality. The UK is, with the rest of Europe, is hit by an energy shock. That's going to hit growth. Obviously, it worsens the growth inflation mix. The budget was supposed to alleviate some of that pain, and the energy plan did that. It buffered households, it buffered some corporates in terms of the energy price shock. But there's basically, it's a limited fiscal impulse in terms of growth stimulus.
But Elliot, so you're looking at gilts doing one thing, and actually, sterling stabilizing a little bit. Who's right?
Well, this week, Sterling's certainly right. Sterling should stabilize. The only reason we had this mega crash was a loss of credibility. So some of that credibility is gradually being rebuilt this week. Yeah. We see some corrective measures in place by the Tory party conference now, kind of restoring some of the consensus as the policy direction. So for now, Sterling's right. But again, the fundamentals are poor. The Bank of England has only bad choices in front of it. So downward pressure will persist, and that means also still some upward pressure on gilts.
Elliot, thank you so much. We'll get back, of course, to Elliot Hentoff, head of macro policy research at State Street Global Advisors. The BOE, only bad choices ahead of it, and of course, it's correction course. So for more on all of this, let's get straight to Lizzie Burden, live from the Tory party conference in Birmingham with a guest.
Thank you, Francine. Well, I'm joined here by Chris Philp, the Chief Secretary to the Treasury. Minister, thank you so much for joining me on this very busy morning. The government has just U-turned on its decision to cut the top rate of income tax. The Chancellor says he's listened, that he gets it. Are we to understand that the government wasn't listening, that it didn't get it for 10 days?
Well, look, I think there's a clear economic rationale for removing the top rate to do with international competitiveness and making sure this is a jurisdiction, a country people want to locate in. But obviously there has been an adverse reaction from the public and from members of parliament, and we have listened to that. This is a listening government that is responsive, and we decided this became a distraction from the wider package of growth measures that, of course, see taxes reduced for 30 million working people by an average of £430 each. So we're going to concentrate on those 95% of measures that command widespread support and not let this one thing that was a relatively small part, less than 5% of the total measures by fiscal value, we're going to put that to one side so it's not a distraction and concentrate with on the other 95%.
Of course, and you want to take credit for the other measures in your package. But the Chancellor said it was the Prime Minister's decision to U-turn on the top rate. But other MPs are saying it was your idea to cut the top rate in the first place. Are they correct?
Well, decisions on taxation are made ultimately by the Chancellor and, of course, the Prime Minister and other ministers. Ideas get discussed by a huge number of people. What I think is important is this growth plan taken as a whole will see taxes reduced for everybody in the United Kingdom, rich and poor alike. They'll see infrastructure projects getting sped up. They'll see energy projects getting sped up, so we're not dependent on importing electricity anymore. We're going to see business regulations being reduced. These are measures that have been widely welcomed by businesses large and small, the British Chambers of Commerce, the Federation of Small Businesses, the CBI, all of whom can see these measures will help their members, British businesses, grow and create more jobs. And that growth will ultimately see higher wages being created, better jobs being created, and also, of course, pay taxes sustainably that will fund our public services into the future.
OK, but to pay for all that, to have any hope of restoring your party's reputation for fiscal credibility, you're going to have to make deep spending cuts. Our analysis at Bloomberg Economics suggests you're going to have to make cuts deeper than when George Osborne was the Chancellor under austerity. But in July, the Prime Minister said, and I'm quoting, "I'm very clear I'm not planning public spending reductions." This is going to be another major U-turn, isn't it?
Well, we've been clear that we are going to be actually sticking to the existing spending envelope. That's the spending review that was set out about a year ago, covering 3 financial years. We're currently in the first of those 3 financial years. We are going to be sticking to those spending plans.
But we've had double-digit inflation since a year ago, so that's a real-term spending cut, isn't it?
Well, it's not actually, because first of all, the old spending plans did involve, or the current spending plans, even on the old inflation figures, entailed fairly significant real terms increases. Secondly, the inflation which the public sector experiences is significantly lower than the general inflation figure. So the public sector inflation figure is a lot lower than the 10%, roughly 10% we see across the whole economy. And actually, even sticking to these spending plans, and even with the higher public sector inflation, across that 3-year period, there will still be real terms growth. We are going to need to find efficiencies in order to stick within those targets. We're going to do that. And besides enabling us to stick within those existing spending limits, we're also going to make sure we're prioritising public spending on frontline services, as you'd expect, and also particular projects like expediting road construction that will really help growth.
So if your job is to control departmental spending and you say that you're going to protect spending, assuming you're not going to cut health or defence or pensions, is it going to be benefits cut in a cost of living crisis? Is it going to be infrastructure when you're trying to go for growth?
No, I mean, the benefits question, there's a statutory, a legal process that the DWP Secretary and other ministers go through each year. That will just happen in the normal way. And we're going to be prioritising spending to make sure that we are directing taxpayers' hard-earned money towards frontline public services and towards projects that make growth, more likely and better. That's what we're going to. That prioritisation and efficiency exercise is one that we're going to be going through this autumn.
Now, the Chancellor's just blamed market volatility on the international context yet again. Minister, your government's credibility is on the line here. Our viewers have got Bloomberg terminals. They can see that the pound movements, the gilt movements, are tracking your government's announcements. The pound's risen this morning after this U-turn. Do you admit now that not only is your party's reputation for fiscal discipline on the line, but it's also the reputation for home ownership, because mortgage rates are going up because of your policies?
Well, I mean, you've already just made the observation yourself that sterling has gone down, it's gone up. On the question about home ownership, this package includes significant stamp duty cuts for first-time buyers to encourage them onto the housing market. On the kind of cost of living questions more generally, I mean, clearly mortgage interest payments or mortgage payments are one important part of the sort of wider cost of living headwinds that people across the Western world are facing. And what we're doing to try and alleviate those is firstly make sure the tax burden on families is as low as it can be. That's why we're obviously sticking with the broad-based tax cuts. Secondly, the most significant threat on the cost of living side is obviously the energy crisis caused by Putin's illegal invasion of Ukraine.
Yes.
And we've had an enormous intervention there to protect households. Just a few weeks ago, families and businesses were worried about average household bills going up to £5,000, £6,000, even £7,000 a year.
But of course, that's not what markets are concerned about.
And through the energy price guarantee, we've made sure households are protected from that. It won't be more than £2,500 on average, but that will, of course, have an effect on inflation, because independent analysis suggests that energy price guarantee intervention means that inflation will now be 5% lower than it otherwise would have been.
But, Minister, this pound tanked after this budget, not the energy bailout. Finally, for credibility reasons, this has to be the last U-turn from your government, doesn't it?
The Chancellor has been very clear this morning that he is the rest of the growth plan plan, which is, by the way, 95% of it by fiscal value. This announcement today is only less than 5% of the whole by fiscal value. The rest of it's going to be implemented in full. British businesses, big and small, have welcomed this. It'll help them grow. It'll help them see their employees get higher wages. It'll see new jobs being created. It'll see the tax revenues generated to fund public services. I'm very excited about delivering the rest of this growth plan, the 95% of it, and the Chancellor is committed to doing the same.
Chris Philp, Chief Secretary to the Treasury, thank you so much for joining us. Francine, it's going to be a very busy day here. It's all about the economy at Tory party conference today, but we've heard about the big plan for growth. Another question is whether the Office for Budget Responsibility will agree that these plans will actually boost the economy as much as the government thinks. Francine?
Yeah, it boils down to credibility. Thanks so much, Lizzie Burden, there at the Tory party conference in Birmingham. We'll get, of course, the expert reaction and some of the things that we heard there from the Secretary to Treasury. Now, coming up, oil surge, crude prices jump as OPEC Plus weighs by cutting output by more than 1 million barrels per day at Wednesday's meeting. More on that next, and this is Bloomberg.
There is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together.
Now I would have a much more experience about those who says I love you and then betrayed you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, OPEC Plus is said to be weighing output cuts of more than 1 million barrels a day when it meets in person later this week for the first time in more than 2 years. That would be the biggest cut since the start of the pandemic. Now, for more on this, we're joined by our energy markets reporter, Anthony Di Paola. Anthony, why now?
Good morning. Good morning, Francine. Why now? Because this is kind of a pivotal point for the market. We've seen prices come down, and we are seeing some of these OPEC countries becoming much more susceptible, much more attuned to this decrease in prices after they've been enjoying several months of really high prices. We're still averaging about $100 for the year, but we are considerably down below that in the 80s right now. And some of those countries are saying, look, we need the higher prices. We need that for the investment in our industry. We need that for our budgets. Why a in-person meeting right now? Well, the speculation is that it's a lot easier to talk about the tough decisions, meaning the cuts, when you're in person. The Saudis are kind of in the driving seat of this group, and they can kind of talk to those other members, twist some arms if they need to get people on board to make those cuts and to show people that there is kind of a collective need to support this market now. So that's why it looks like they're getting back together in Vienna right now, Francine.
Anthony, thank you so much for the update. Anthony Di Paola there with the very latest on OPEC Plus. Now, we have a lot of breaking news. We have the UK story, we have the OPEC story, we have the Credit Suisse story, and this, of course, is because of the CDSs. This is a picture overall. The gauge, credit risk rising to a record. This is a share price, 3.61. So we're back with Elliot Hentoff, head of macro policy research at State Street Global Advisors. Elliot, I have actually a million and one question about financial stability that derives from Credit Suisse. So I don't know whether this could be a turning point for something ugly happening in the markets, or whether you discount it, you don't spend too much time on it because it's basically a stock, specific event.
It is idiosyncratic. It's clearly related to the particulars of Credit Suisse, some of the legacy issues, some of the fines they've had to pay, some of the business models that no longer work in this era. I'm less worried about it because it's not clear how the domino will transmit. So even if we had an event, we know today central bankers will step in. The lender of last resort is there to backstop. So from a systemic risk point of view, I'm not that concerned big picture.
Okay, what are you most concerned about? So when you look at OPEC, when you look at the fight for inflation and what central banks will react, will we be in a recession?
Well, the OPEC news is very disturbing. There's two things that disturb me about it. One is, what are they seeing in the data that suggests to them that demand slowdown is so drastic that it justifies a 1 million barrel cut? So that's my first worry. The other worry is we've seen this buildup of disinflationary momentum in the U.S. underlying. There's a wave of disinflation coming, but a lot of it has drawn on the fact that energy prices have come down. If energy prices reverse, some of that effect will be delayed, and therefore the financial tightening will go on for longer than we're currently pricing, or even the market's pricing. So those two things worry me a lot.
So if there's a data point that you look at, and what is OPEC seeing that we're not? Is there a data point that you're looking at to give us an indication, like a canary in the coal mine type chart?
I suspect they're seeing something from Asian data, particularly around China, in terms of a lack of revival in oil demand growth there. I think the European data is pretty clear that that's going to come down pretty strongly. I'm just suspecting they must be seeing something even worse than what's on our dashboards to suspect, or it's an opening gambit that they're kind of a political play, say we'll put 1 million on the table and then we cut maybe by 200-300 initially.
Which one do you think it is?
I'm hoping it's the latter.
Okay, me too. Elliot, when you look at some of the inflation numbers that we're seeing in Europe, they seem to be actually much stickier than what we're seeing in the U.S. How complicated will that be for the ECB to reverse it?
Well, the ECB, I think they're running out of time. The issue is how much tightening can they get in before the recession settles in and really where the growth numbers start to contract at a pace where they have no room to maneuver. So it has to be as front-loaded as possible. I would even say by December, after December, it's going to get tough for them. Quantitative tightening, I think, by now is off the table. I know it's still being spoken about, but I do not see any realistic pathway for the ECB to do that.
Are you expecting a global recession, and of what depth?
Yes, basically we are expecting a global recession. I think that term is thrown around a lot, but we expect basically a contraction in most of the areas and a growth recession in emerging markets.
Elliot, thanks so much. Elliot Hentoff there, Head of Macro Policy Research at State Street Global Advisors, joining us to talk about the UK, to talk about oil, and of course to talk about also liquidity in the markets. Coming up later today, we speak to Lorenzo Binismaghi. He's chairman of Societe Generale, also a former ECB official. So it's an exclusive conversation you don't want to miss. It's coming up shortly, and this is Bloomberg.
Most of the large Chinese technology companies, let's say Alibaba, Baidu, Tencent, they have gigantic market values and they're very prominent in China, not as prominent outside of China as obviously in China, and certainly not that prominent in the United States. TikTok, by contrast, is not in China, but it's gigantic outside of China, the United States and everywhere. What did TikTok do that enabled a Chinese-based company, parent company at least, to do so well outside of China?
We think it's challenging to build a global company in general, but the best ones we have seen so far are ones that take very consistent global learnings and adapt them to the local countries that they are operating in. So you need to be global and local at the same time.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from business's most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Strong enough to stay, we will never.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. The UK government has dropped a controversial plan to cut taxes for the highest earners just 10 days after announcing it. Chancellor Kwasi Kwarteng said scrapping the 45% rate of income tax had become a distraction. This afternoon, he'll be speaking at the Conservative Party conference in Birmingham, defending his so-called mini-budget. Now, in Brazil, President Jair Bolsonaro is heading for a runoff election against leftist candidate Luiz Inácio Lula da Silva. Lula took 48% of the vote to Bolsonaro's 43%, falling short of the simple majority needed for a victory. The outcome still puts the 76-year-old former president within reach of returning to the helm of Latin America's largest economy. The runoff election will take place on the 30th of October. Now, Russia has suffered another operational defeat in eastern Ukraine, casting doubt on its plans for total annexation. Several thousand Russian troops withdrew from Lyman in Donetsk over the weekend after becoming surrounded by Kyiv's forces. The town was a key logistics hub for Moscow. It comes just days after the Kremlin announced it had annexed the region after holding referendums labelled a sham by the West. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Coming up, we speak to Lorenzo Bini-Smaghi, the chairman of Société Générale, as a French lender welcomes a new chief executive. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology.
Welcome.
Bloomberg, the lineup.
The lady is returning. Well, Liz Truss's government scraps a cut to the top rate of income tax a day after backing the plan. We're live in Birmingham at the Conservative Party conference. OPEC Plus will consider cutting output by more than 1 million barrels a day. Crude price surge saps sentiment. Plus, not reassured, Credit Suisse drops to fresh lows as the new chief executive fails to calm markets. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. Happy Monday. I feel like it's going to be a volatile week. We talk about the perfect storm of all of these confluence of events. I'm Francine Lacqua here in London. Now, French lender Société Générale has appointed investment bank chief Slawomir Krupa as chief executive to replace the outgoing boss Frédéric Oudéa. Finding a successor to Oudéa, the longest-serving chief executive of any major European bank, proved to be a months-long endeavor. Well, we're now joined by Lorenzo Bini-Smaghi. He's the chairman of Société Générale to talk us through the decision and actually what we can expect from the bank next. So, Lorenzo Bini-Smaghi, as always, a great pleasure to host you here in our London studio. Give me a sense, first of all, of what the plan for the new chief executive will be.
Well, the new chief executive will start his job in May, so it's going to be a transition with the new CEO who is in charge until May to prepare his team and to prepare his strategy, his Investor Day in the middle of next year. And the strategy is first to continue to do the things that we've been doing, the merger of the French retail, which is a very important endeavor, the acquisition of LeasePlan by ALD, the restructuring of the investment bank, the development of Boursorama, which is an online bank. So there are a lot of issues and a lot of work to be done, and then of course revalorize, revalue the share price, which is the key objective.
So what convinced you personally that he was the right man for the job? I know you...
No, we had a long process because we looked outside, we looked to people outside the bank, but in the end the final focus was on the two candidates, internal candidates, the very good internal candidates. It was a difficult job. We chose Slawomir, his experience in the bank. He joined the bank actually 25 years ago. He knows well the bank. He has done the restructuring of the investment bank. He knows well the U.S. Economy, the U.S. markets, the U.S. regulator, the European regulator. So it's a whole series of issues that led us to make this choice, so and we're very happy.
What do you think his biggest challenge will be going forward?
No, I mean, his challenge will be to make markets understand that the value of our share is much higher than the one that the markets are currently valuing. This is going to be his main job.
Why do they misunderstand it today?
Well, I think they want to see delivery. And for instance, his own work in restructuring the markets is delivering quarter after quarter. I think we need to do more probably, but and we need to convince the markets. And the same thing for the other areas. Like the fact that the restructuring of and the merger of the retail banks in France will deliver higher revenues, will enable us to cut costs more efficiently. So this it's not a one shot. It's going to be a long job.
Lorenzo, we also spoke to, of course, a lot of investors, and the fact that you chose the guy coming from the investment bank. What does it mean for the restructuring at the investment bank? Could you see that business grow under him?
Well, this business has been de-risked substantially, and so able to generate more stable returns. Cutting costs also, being more efficient through the cycle, and that we will have to see because we're entering interesting times, to be very frank. And so this is one of the key challenges. And also, of course, the investment bank is an important part of the bank, but within a broader base that is also more stable, I would say, than the investment bank revenue.
Do you think a European investment bank could ever rival some of the Wall Street banks?
I think it would be a pity if in Europe we don't have investment banks and we have to rely only on US banks. European clients want, in the end, stable counterparts that are there always, not only in good times, but also in bad times. And we've seen that, often when you have a crisis, there is a tendency to concentrate on your own market, and this is true for American banks also. So European banks, and Société Générale has proven to be there, even in difficult times. And so I think that's what clients want.
Give me a sense, actually, of what this means for the future of banks in general. You use that euphemism, we're going through interesting times. What does that mean for banks?
Well, I think interesting times means, the energy crisis, the geopolitical uncertainties, financial markets having to absorb the increase in interest rates. So I think actually the banking system is quite solid, much more solid than 2008. We don't know about the shadow banking system, how it will react. But I think banks today are better regulated, better managed, with higher capital. On average, I would say, overall, they are better equipped to address difficult times ahead, and better able to help the economy in these difficult times. So to help the clients, the successful clients, of course, to weather the storm.
I'm looking at the credit default swaps for Credit Suisse, and frankly, it's scary, right? Is this because of the concerns on the bank, or do you think it's something more symptomatic of European banks or banking sector?
No, to be frank, I think it's quite idiosyncratic. I mean, it's really, this has been something that has been going on for some time now. They haven't been able to address all issues. I hope this is going to be a bell that will be able to shake the bank. But overall, I would say that the rest of the banking system is solid. And I think during the pandemic crisis, actually banks have been part of the solution. Now, I think this has been recognized politically also. Yeah. So it's important to help the banks do their jobs in this difficult time, not to be an obstacle or to create problems for banks in this specific moment.
So you're talking about regulation. Don't over-regulate the bank. I mean, it is actually amazing that we haven't seen any big margin calls on either energy producers or nothing ugly, given what we lived through in the last 2-3 years.
Yeah, I mean, the problem is that regulation is often pro-cyclical. I mean, in bad times, they become tougher, and this creates problem for the ability of banks to support the economy. I'm thinking about macroprudential regulation. It's a bit paradoxical that we still have macroprudential buffers as the economy is slowing down. Frankly, it's difficult to understand. And I would ask regulators to look closely at all the levers to avoid that banks are not able to really support the economy in these difficult times.
You've mentioned shadow banking, and this is actually something that we used to focus a lot on, and maybe because of the crisis, we're focusing a little bit less on. Where do you worry about shadow banking? Is it the U.S., China, or even,
Well, I think a little bit everywhere. China we know very little about. In the U.S., the shadow banking is all the unregulated sectors, and the next crisis is going to be very different from the old crisis. And we have to look carefully at what is not appropriately regulated and not wait for the next crisis to regulate things. And in Europe, we need to move forward, not waiting again for the next crisis. It's a pity that we've been stuck with this banking union and capital market union. The political will to move forward has been insufficient, and everybody's looking at its own market, but that's not the solution for Europe to be competitive.
Lorenzo Bini Smaghi, thank you so much. The chairman of Societe Generale, he stays with us because we have a lot to talk about. We talk about inflation. He's, of course, a former ECB official, so we talk about inflation, central banks, and we'll talk about Italy. Coming up, EU finance ministers are set to meet as the outlook for the European economy remains on edge. So we'll continue the conversation with Lorenzo Bini Smaghi. That's coming up next, and this is Bloomberg.
A digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's
doing
weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
If you're not really in that space full time, I think it's very hard to run a successful crypto fund.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition on Francine Lacqua here in London. Now, EU finance ministers gather in Luxembourg today with the backdrop of high inflation, Europe's worsening energy crisis, as Gazprom, for example, halts supplies to Italy. Now, Lorenzo Bini Smaghi, chairman of Societe Generale, is still with us. He was, of course, a former ECB official. So you've seen it from all sides, from the market side, from also the ECB side. I mean, how difficult is it at the moment for the ECB to have an inflation policy that doesn't hurt growth too much, whilst at the same time dealing with inflation?
Well, the ECB has first to catch up because rates are still much below in inflation, so monetary policy is still quite expansionary. So they need to raise rates quickly, but not too much because we are going to face a downturn. So in the next couple of months, they will have to. They will hope that the economy is not slowing down too sharply and be able to catch up, and then wait and see because it could be risky to raise rates beyond a certain level.
How do they look at political risk? So I was in Italy. I mean, it was just 7 days ago, actually. A lot has happened since in global markets. So we were in Rome trying to figure out what the win of Giorgia Meloni means for markets and for the Italian economy.
Well, I think the experience in London, in the UK, has been quite useful, maybe for Giorgia Meloni to be, and she's careful. She wants to first look at and work with the old government to prepare the budget. So we have to wait and see also who will be the finance minister, how the organization of the cabinet will be, whether they will split the two ministries, treasury and taxes, which I think would be a mistake. But let's see how this develops. On the other hand, she will have to deliver some of its promises. I mean, her promises. She cannot just say, I forget everything. She has been cautious during the campaign, but still, on tax cuts, she has promised tax cuts, although gradual. the support of the economy, because households will be suffering this winter. Where will she find the money? Taxation of companies and so on and so forth. All these issues we'll have to see.
So do you think actually that what happened in the UK last week with that huge margin call on UK gilts, the Bank of England having to intervene because of the mini budget, brings in a new wave of what responsibility with European politicians, or how would you describe it?
Well, markets are there. The fact that central banks have withdrawn from the markets has created a new system, different from the last 10 years. No. Markets are working again, are assessing risk. No. And so you have to be very careful if you're a policymaker not to make the kind of mistakes, if I can say, that you make an announcement and you reverse, then you lose credibility. I don't think she wants to do that, so she will be very careful. And, unfortunately for Britain, but for Italy, it was certainly a good example not to follow. So I think this will produce prudence in Italy.
And we've also heard this, depending on the finance minister, we think that Giorgia Meloni will choose a finance minister that is respected by the markets, that has international credibility. I think I saw also your name actually on the list of candidates.
Well, personally, I think in the end, like in England, it has to be somebody who has a political link to the prime minister. It's not just somebody that is credible in the markets. You need in the end to deliver. I think markets want somebody that is able to decide and not just have to go around and think about what measures to take based on long discussions. He or she will have to have a clear link with Giorgia Meloni. I think that's important. So he has to be political to some extent.
The ECB, the main question is that they now have tools to, of course, make sure that the spread doesn't widen too much. But what if there's a political risk? Like, are the markets going to again test the ECB's resolve?
So far things have gone relatively well, I would say. The spreads have widened, but not to a level that is extreme. No. The conditions that ECB has set to activate its TPI are met by all countries, because all countries are in line with the conditions. So the ECB could decide to shoot its own bazooka. We will have to see, but the bazooka is there, and they will. The important thing is that the markets know that it can be used. Yeah. A little bit like whatever it takes.
The concern on the markets are so multiple, and we mentioned all of them. Is the Fed the biggest unknown? And at some point, do we need to rethink, what the dollar does, because of dollar strength, it's really repricing all markets?
We are in a structural change, and maybe it's a good change, because the fact that central banks were there all the time, taking away risk from the markets, was creating moral hazard. It's nice to expect central banks to be there, but then ultimately this creates distortions. So we have to be, of course, central banks have to be there in extreme cases to avoid the collapse of the system. But not all the time. I think markets have to step up, investors have to step up and take their own assessment, their own views of the risks. I think we are facing probably an uncertain period, but there will be a recovery at the end. And I think markets are just waiting to find the right timing, like 2 years ago when the vaccines were found, then the market started booming again. I think if there was a signal on the geopolitical side, on the war, unfortunately it's not obvious how this would happen, but there will be a recovery and markets will stabilize. I think the markets are in search of an element that would trigger an upward move.
But this is a brutal realization, right? When you realize that the central banks aren't all powerful, especially if you're a young trader and thought they were all powerful for the last 10 years, what does it mean for market dislocations?
Well, there could be some dislocation, but there's a lot of liquidity around, and the liquidity will be there. I think central banks will be much more careful to be there all the time, because what they have produced over the last 10 years is maybe more stability, but in the end, when the shock occurs, they are needed, and this is not the right way to manage financial markets and in the end the economy. So from that point of view, it's a good structural change, I think.
Lorenzo Bini Smaghi, as always, thank you so much for coming on. He's, of course, the chairman of Societe Generale. Now, let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Credit Suisse shares have hit a fresh record low after attempts to reassure markets on its financial stability only added to the sense of turmoil surrounding the troubled Swiss bank. In a memo to staff, the CEO said the bank has a strong capital base and liquidity position and promises regular updates ahead of a new strategic plan at the end of this month. A surge in IPOs in China has propelled Cytec Securities to the top spot in the global league table for equity issues. Data compiled by Bloomberg shows Goldman Sachs dropped to second place in the year to date. It is set to be the first time since 2009 that the top position at the end of a quarter isn't held by a big Wall Street bank. And Tesla's worldwide deliveries missed estimates in the third quarter, with the company blaming challenges in securing vehicle transportation capacity. It delivered a record number of cars in the third quarter, but still fell short of the 358,000 the market was actually expecting. Now, the CEO Elon Musk says Tesla is aiming to smooth out deliveries away from and end of the quarter rush. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Coming up, Brazil's presidential election heads, well, to a runoff after incumbent Jair Bolsonaro puts in a stronger than expected showing. More on that next. This is Bloomberg.
There is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together.
Now I would have a much more experience about for those who says I love you and then betrayed you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in Amazon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Brazil's presidential election will go to a second round after neither leading candidate was able to secure a simple majority. The frontrunner, former President Lula da Silva, fell just short with 48% of the vote. Now, the incumbent Jair Bolsonaro did better than expected, winning 43%. Now, for more on all of this, we're joined by Bloomberg's Rodrigo Orihuela. Rodrigo, thank you for joining us. So what does this mean for the largest economy in Latin America?
So what does this mean? Going forward, the expectation is whether Lula will be able to go a bit more to the center, because he was the one who underperformed slightly in this election on Sunday, whereas Bolsonaro did much better than expected. So now the big question is, how will Lula capture those additional votes, and especially try to convince voters who supported the third and fourth placed candidates, who came up with a total combined of about 8%. The other big question we have is whether Lula will or not say who he has in mind to be his economy minister. There have been reports that he was thinking of a central banker who served when he was president many years ago. This is Enrique Reyes, who's somebody the markets would probably like a lot to see as his candidate, because it would show that he has certain ideas about fiscal discipline in mind.
What does this tell us, of course, about how Brazilian assets will move?
So Brazilian assets, there was an expectation that if there was a tight race, and this came from several of the investment banks and the analysts, that a tight race would be good for equities and assets in general, because it would mean that none of the two candidates would opt to go for the radical kind of stance ahead of the runoff. So this was, in fact, the case. For example, JP Morgan made that 5% between the two candidates or less would be positive. So far, we have seen very little movement in assets, because there aren't that many traded in Europe. But we had an ETF that trades in Tokyo, which was up as much as 5% at one stage this morning, and it closed at about 2.5%. And some ETFs that trade in London and Paris are also roughly about 2 to 3% up.
Great, fabulous. Thank you so much for the update. Of course, we'll continue watching the election over in Brazil very closely. Bloomberg's Rodrigo Orihuela. Now, in the meantime, this is what the markets are doing. Quite a lot going on. Stocks are falling. U.S. futures are wobbling somewhat. So let's get that board up to see exactly what sterling is doing and what treasuries are doing. Global stocks falling to a 2-year low. U.S. indices, or certainly the futures, are struggling for direction as we speak. There's concern that there's some of these hawkish policies, of course, being implemented by central banks around the world will backfire at some point. That would spark a recession, and that would lead to a correction to many markets around the world. Now, markets are also taking focus about some of the earnings correction. The pound actually rising as the UK withdrew a plan to abolish the top income tax rates. Now, in general, global markets are in jitters over the impact of monetary tightening on the economy after banks, including central banks, including the Federal Reserve, reiterated their resolve to contain runaway inflation. Well, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kriti Gupta in New York, Anna Edwards here in London. And this is Bloomberg. AI is the chance of humankind to really understand itself. How much of that is true? How confident? Did you actually overachieve? Did you, back then realize that we would be using AI in many different jobs? Was it slower or faster than you thought at the time?
I think if I had a 35 or 40 year prediction task, I would have been more or less on track as to where we are today. But I would have predicted steady linear increase over time. But instead, the field had very minimal improvements until the last 5 or 10 years. Then it really took off. I think we ended up in the right place, but I was very wrong about the trajectory. To this date, we still know very little about how the brain works, but these machines are getting ever more powerful. And I feel in some sense, we did end up learning what human intelligence is by learning what it is not. If we exclude all the things machines can do better than us as what makes us unique in our human intelligence, then now we can rule out many, many things, because AI or machine learning has become so good at so many things that what's left must be the key aspects of human intelligence.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
We have to be able to give our customers vehicles, that are their primary vehicles that are EVs, and to be able to do that, we need to have range and infrastructure, and we need to remove the pain points, and so that's what we're doing.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I do certainly think we're living through a period of elevated risk.
Gradualism, I think, is back in fashion now. If you want to prevent major volatility, you better act gradually.
Obviously, this is not the first time we've seen these kind of movements, and they never seem to be fully priced in.
Yes, we are looking for a recession. It was sometime next year. The question is, exactly when.
The market was already worried about global growth. It was already worried about UK fundamentals, which, of course, is why the timing of this budget was so bad.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kayleigh Lyons.
It's 10 a.m. in London, 5 a.m. in New York and 5 p.m. in Hong Kong. Our top stories today. Liz Truss does a partial U-turn. The British Prime Minister tries to fend off a rebellion in her own party by dropping a plan to cut taxes for the highest earners. We're live at the Conservative Party conference in Birmingham. The price of oil rises on indications that OPEC and its allies may slash production by the most since before the pandemic. Energy ministers meet this week in Vienna. And shares of Credit Suisse hit a record low. Attempts to reassure markets about the Swiss bank's financial stability aren't working. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kriti Gupta in New York. Kaylee Lyons is off today. And higher energy prices, just one of the things that are weighing on risk appetite today then, Kriti.
Yeah, you have to add that to the wall of worry that you were seeing around the world, of course, in Asia. You do have several markets that are closed. China, Australia, South Korea as well, all closed for the day. China will be closed all week, though, Golden Holiday. That does not necessarily stop their currency market and the PBOC from intervening, though, so keep an eye on that. But check out what it did when you talk about the actual equity indexes. That risk-off momentum, Anna, it really did start in Asia overnight, as so did the currency weakness, and that's going to be a key story. That dollar strength that you see, once again, pushing the Japanese currency, dollar yen, to record weakness, 145, but it wasn't just dollar yen. You can see it across the board, across the region, in a lot of these countries, by the way, that are commodity exporting countries. Once again, that really impacts their bottom line and their exports. But take a look at what's happening in the bond space. You do see the bond, the JGBs, actually those yields and the 30-year down about 8 basis points. Something you want to keep an eye on, that kind of diversification or divergence, I should say, between what the currency is doing and what the JGB bond market is doing. And that's really where a lot of people are saying, this could be the moment. This could be the moment that things finally break. Of course, they have been saying that for months now, but of course, we'll have to keep an eye on things like that. Commodities, though, they are still higher. Take a look at this WTI crude at $83 a barrel, Brent crude 88. It's interesting that it hasn't crossed back up to 90, so you are seeing some of that momentum, Anna. Whether it actually continues throughout the day, whether it continues into the U.S. session, that's a completely different story, Matt.
Yeah, very interesting picture to kick off this week. We have futures that are really doing very little in terms of up or down movement. Right now, we see S&P futures at 35.94, so just off about 0.2%. And, of course, was a terrible, no-good quarter. In the last quarter, we had a drop of more than 9% on the S&P for the month of September alone. 10-year treasuries, the yield coming down a little bit as investors buy that debt. This is actually the price here, 91.17. But if you look at the yield, we're at about 3.78, I believe, on 10-year treasuries right now. So not near the 4% mark, or not terribly near it, but still very elevated compared to recent history. The same is true of the Bloomberg Dollar Index. Right now at 1336, we're not up at those 1350, 1360 elevated levels, but we're still well above where we've been for most of history of the Bloomberg Dollar Index. Obviously, dollar strength, a huge part of this market. And then WTI crude. Kriti talking a little bit about the crude trade. We'll be watching it very closely. Right now, we're looking at $83.09 a barrel for Texas Intermediate. But if we get a cut to production by more than 1 million barrels, analysts are saying you could see that price rise back to triple digits relatively quickly. And we're also keeping a very close eye on gold, because we had some interesting reports, Anna, out of some London bullion traders who said they're running out of the physical commodity as so many Brits seek safety in the perceived haven of gold.
Well, there's the thing. Let's have a look at, I wonder why. Let's have a look at what's going on European equities then. And we're seeing risk aversion to the fall, really, for European stocks, Matt. And interesting, you had the oil price there. And the rise that we're seeing in the oil price is generating one of the areas of positivity we have on European stocks. And that's not the norm today. Most sectors are in negative territory, but energy stocks are moving higher as a result of the higher oil price. To the downside, though, financial services really weighing on the Stoxx 600. Credit Suisse very much amongst them. We'll have an update on the Credit Suisse story shortly. We've got the German 10-year yield in here for you, and we've got the euro. Really, the focus today is, of course, on the UK assets around the pound. We saw the pound surge a little through the early part of the European trading day, late part of Asia, when we started to get reports that perhaps we see a partial U-turn from the UK government around its fiscal plans for the top rate of tax. That was then confirmed, and the pound dropped a little bit. So those gains came, but then were short-lived, it would seem. We're also seeing, though, that some of the moves in the fixed income markets, some gilt markets, are being held onto a little longer. So the market's now asking, are we going to see any further U-turns from the UK government, and will the Bank of England not necessarily need to do quite so much hiking as a result? That's being priced into certainly the short end of the curve. The Dutch natural gas futures often acts as a benchmark, of course, so higher oil prices. We do see a little bit of weakness, though, coming through on natural gas, which is a relief, probably, for anybody watching the commodity space and the role that has through the inflation story. More now on the UK government as it drops a plan to cut taxes for the highest earners just 10 days after announcing it. Bloomberg's Lizzie Burden joins us now from the Conservative Party conference in Birmingham. Lizzie, what can you tell us then about the U-turn?
Well, Anna, the pressure got to Liz Truss here in Birmingham, and it's a hugely embarrassing announcement to have to make that they're going to undo scrapping the top rate of income tax. Of course, it had been hugely politically controversial, but this move had started to look inevitable. Yesterday, the Prime Minister threw her Chancellor Kwasi Kwarteng under a bus and blamed him for this policy measure. Then the former Cabinet Minister Michael Gove was interviewed. He said that the policy was not in line with Tory values. That seems to have been the straw that broke the camel's back, because all the MPs that were going to rebel against this policy seemed to be led by him. And then today we've had a round of broadcast interviews with the Chancellor. He said that we understand, we get it. It implies that maybe they didn't get it, they didn't understand before. He says that what changed was they listened to people. He said the 45p rate cut was becoming a distraction from all their other policies. Of course, the energy bailout was hugely expensive, so they're going to want to take political credit for that. He says that he's not considered resigning, but he's refused to rule out further U-turns. So we're going to have to wait and see whether there'll be be any more rowing back to come. He's going to speak at 4 p.m. So investors, Anna, are going to be listening to every syllable from the Chancellor.
Yeah, absolutely. I mean, this is just one piece of the very controversial plan, which the market graded overall like an F-, right? We saw basically a crash in UK assets, including the pound sterling, after this mini budget came out. What can we expect from the Prime Minister from here?
Of course, because they may feel like they've removed the political toxicity, but the economic questions remain. That boost in the pound was only temporary. And what really offended markets in the first place was that this massive package of tax cuts is funded by borrowing. That remains. There was no forecast from the Office for Budget Responsibility. We're still going to have to wait for November the 23rd for that. And so are there going to be other U-turns? And bigger than that, will Liz Truss be able to survive? We're hearing that already some Conservative MPs have been trying to get the rules changed because, of course, she has a year protection from another vote of confidence like Boris Johnson faced. But the Tories want to stay in power, so many of them are now trying to get the head of the backbench committee of Tories to change the rules so that they can have a new leader and try to survive an election in 2024. So really the risk of Truss leaving office has been heightened this morning.
Bloomberg's Lizzie Burden covering all things of really the chaos in the United Kingdom right now. We thank you as always. Let's go over to the commodity space. The price of oil jumping on indications that OPEC Plus may slash production by more than 1 million barrels a day to revive those plunging prices. A cutback of that size would be the biggest since the pandemic. OPEC Plus meets Wednesday in Vienna. Anthony DiPaolo, energy markets reporter, joins us now from Dubai. Thank you as always for joining us. Walk us through the logic of another output cut.
Hi, good morning. Yeah, the issue is really price. The price has come down a lot over this last several months. We've had a monthly decline, several consecutive weekly declines, and that's really hurting some of the bottom lines of some of these producers, some of their income. We've still got prices roughly around the $100 average for this year after the Russian invasion of Ukraine caused prices to spike earlier this year. But we've seen this coming down. There's a lot of concern in the market about recession, about inflation, about how that's hurting the consuming countries. And so that's why OPEC is kind of trying to refocus minds on their ability really to impact the market. We've been talking about a cut of 1 million barrels a day or more. Again, we have to look at that and look at how some of those OPEC countries haven't really been making their quotas yet. So the market is undersupplied according to what OPEC should be giving the market. So we'll have to kind of discount that cut when it does come to see who are the countries that are actually cutting there.
Anthony, how has this price, I mean, look, I'm looking at a Brent price of $88 a barrel. How has this $88 a barrel come to be seen by OPEC Plus as a low price for oil? Because certainly for consuming nations, it won't feel that way.
Yeah, exactly. Consuming nations will be seeing some relief. They'll be enjoying this price because we've got some big producers like India, for example. They are very price sensitive. They have been switching also their purchases to get the cheaper barrels there. You know, some things that are figuring into OPEC are potentially the December 5th European ban on seaborne Russian crude imports. The idea is that that will shift some crude into Asia. There is talk also of a price cap that the U.S. has been pushing and trying to get the Europeans come on board too. So if that were to bring effectively the cost of Russian oil down, if that were accepted, and that seems like a long shot, if that were accepted, that potentially brings the overall price down. So there's all these concerns about how the price is going to go forward. As I said, OPEC trying to kind of put a line under where the price is now and buttress the oil market because, you know, they get used to those prices that are 100 and above, and that helps the budgets. That helps some of these countries coming back from the years of the pandemic when production was really low there. So they want to defend that price about where it is now, Anna.
Right. It's a drop from $140 a barrel, but it's only recent history when oil went negative, remember. Lisa Abramowitz got paid to take 1 barrel. Anthony DiPaolo, thanks so much for joining us, reporting on the oil picture from Dubai. We'll be paying very close attention to that. But really, it's the banking news that took my breath away in terms of corporate stories. Credit Suisse shares hit a fresh record low. That's after attempts to reassure markets on its financial stability only added to the sense of turmoil surrounding the troubled Swiss bank. Marion Haltermeyer, our finance reporter out of Zurich, joins us now for more. So basically, Marion, the concern here is that insuring against a default is getting more and more expensive, really back to crisis levels for Credit Suisse.
Yes, exactly, Matt. It's not a great sign for the market right now, but I think what we need to think about when we're looking at, the record low on the share price and also the highs on the credit default swap spreads is we need to think about, where is the bank headed? What will the strategy update look like at the end of the month? And are we really looking at a bank that is, as many of the rumors say, going bankrupt, or just one that's just in dire needs of proper leadership and proper overhaul? I think we're leaning towards the latter at the moment because the bank has said they have enough capital buffer, they are stable, they have liquidity. We're not looking at a financial crisis era situation.
Right, so yes, those capital buffers, those CET1 ratios, perhaps, Marion, comforting to some. The stock is down by 8.6%, though. Any sense that they might speed up telling the markets where the business goes from here, if that is the big sort of strategic question that hangs over the company?
Right, exactly. I mean, we are only weeks away from the big announcement, but I think every day is critical at this moment. So we'll have to see whether that does prompt them to be a little bit more forward-thinking and pre-announcing a few of the things that they may have already decided on. But at the moment, they keep reiterating, end of October is when we will inform the market on everything we plan to do.
All right, Marion, thanks very much. Marion Haltermeyer covering the Credit Suisse story for us out of Zurich. We'll be paying really close attention to that. And really banking in general today, among the top stories that Bloomberg clients are reading, a surge in China's IPOs propelled CITIC Securities to the top spot in global league tables for equity issues. CITIC edged out Goldman Sachs, and it's the first time since 2009 that the #1 position at the end of the quarter wasn't Goldman Sachs or another U.S. Wall Street firm, Critty. So it looks like CITIC is taking over the league tables for now.
Yeah, well, speaking of some of the top stories, we have to take our I want to say, weekly, daily check on Tesla. One stock, of course, that we're keeping an eye on pre-market trading. Shares falling after the electric car maker missed estimates with global deliveries in the third quarter. Tesla delivered almost 344,000 vehicles, roughly 14,000 fewer than estimates. Tesla warning that it's facing challenges in getting cars to customers, suggesting that those supply chain problems, well, they are still an issue. Those shares just down about, I want to say just shy about 5%, Anna.
Yeah, absolutely. It did seem to be quite Tesla-specific, didn't it, the drivers for that? But we'll certainly keep an eye on that stock and indeed the sector, autos and auto parts, a sector under pressure here in Europe as well today. Coming up, Pooja Kumra joins us, TD Senior European Rate Strategist. Get a great day to speak to her when it comes to gilt markets. We've seen a partial U-turn from the UK government on some of its fiscal plans. Does that materially change the outlook for gilts? Charlie Morris also joins us, Crypto Composite CIO of Bytetree Asset Management. We'll talk crypto a little bit later on. Plus, Brazil heads to a runoff. How yesterday's vote changed the landscape of the election. More ahead. This is Bloomberg. Rodrigo Orejuela, who joins us with an update. Rodrigo, what does this mean then for Brazil? What can we expect to see for the next month? How does this play out?
So the key here is that Bolsonaro did better than was expected. Lula did roughly within the margin of error, but towards the lower end. And so now the big expectation is, will Lula try to get more and more votes from the center, which means his rhetoric will also go down. There are two candidates who came in third and fourth, and he may try to get the votes from those two. Bolsonaro doesn't seem to have that need, but obviously he has to do well to get over Lula. The surprising thing for Bolsonaro as well was that his candidates for the Senate and the lower house did really, really well, and that is giving him a boost. The other big question is, will Lula come out and say who he expects to name or who he plans to name as economy minister? The expectation is that it will be Enrique May Reyes, who served as central bank governor under him when he was president 10 years ago or more, and that would probably be a good sign for the markets. That's somebody the markets would likely welcome.
Because the idea is, and explain to us how they would differ, Rodrigo, these two leaders would have massively different effects on Brazil's economic policy.
They would have a lot, on some aspects they would, but both are trying to show certain fiscal, both need to show that they will be disciplined on the fiscal front. No, there aren't any expectations that either one of them will be extremely fiscally disciplined. However, there are big differences, and one of the keys is privatization. Bolsonaro has said he wants to do more. The key there, the crown jewel, is Petrobras, the oil company. Lula, on the other hand, does not want to privatize Petrobras, and he wants to use it to do more investments in refineries and so on, and also control fuel prices. So there are some key differences there, without a doubt, yes. And then how they will work with the central bank. Lula has said that he doesn't think the central bank should only intervene through interest rates. There are other things he believes the central bank should be doing.
Rodrigo, thank you so much. Bloomberg's Rodrigo Orejuela with an update on what we've learned about Brazil and what is still to play out in the Brazilian presidential election. Thanks to Rodrigo for joining us. European equity markets then on the back foot today, down by 0.9%. Higher oil prices, delivering stronger share prices for energy players. So that particular sector moves higher today, up by 1.9%. So watch how that translates into the US session when it starts in a few hours' time. But elsewhere, we see a lot of pressure on the share price of Credit Suisse. That particular stock down by 7.5% as the management fails to reassure about the company's future. That is it for Early Edition. More surveillance is ahead. This is Bloomberg.
Should we anticipate that you will have regulations clarifying what the SEC is going to do on cryptocurrencies and related kinds of things in the near future?
It's pretty clear that many of these tokens may be securities. What we've asked the trading platforms, the lending platforms, the other various venues to come in, to work with us, to get registered under the securities laws, because if a platform has 50 or some of them 500 tokens on their platform, probabilities are they're not all non-securities.
Now, there's another issue that has arisen, which is called gamification, which is to say people are making a game out of trying to buy stocks. Are you worried about this phenomenon?
We live in the 2020s in a new digital age where applications on our phones can use massive amount of data and then predict our behavior. What do we do when the digital algorithms are maximizing for the company's revenues rather than our returns? And so we're trying to think that through. It's not just gamification, it's a little bit more than that. It's whether there's a conflict between the app and our investment returns.
We will never break, we will never break. Build on a foundation strong enough to stay. We will never.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
The market was already worried about global growth. It was already worried about UK fundamentals.
Things are pretty unsustainable at the moment, and it's all tied to policy officials raising rates.
I would love for Powell or someone to come out and say, hey, we're just cleaning up the mess made by fiscal policy.
This is not the first time we've seen these kind of movements, and they never seem to be fully priced in. And we have a bear market rally? Sure, absolutely. 8 to 10% in this kind of environment is not unheard of.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
We get it, and we have listened. Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. We get it, and we have listened. We're not talking about the audience feedback and sitting around a desktop.
No,
we're talking about the Chancellor in the UK.
I got up at 1:17 to watch history made in a fractured Great Britain, John, and all I can say is the excitement of last week folds right into this week. Can I just say, around all the present news, it's a huge week of US data.
Couldn't agree more. Bramo, I think we call the UK a U-turn. I think that was a U-turn.
That was a U-turn that is really not a very face-saving measure. I mean, how much does this actually give credibility to an administration that already has caused incredible turmoil in the markets? The question now is, how do they follow that up with some sense of consistency, some sense of stability, some sense of unity among conservative policy members?
I'm so pleased you led with a market reaction. For me, how the market responded last week is so much more interesting than the policy that was announced the week before, Tom. So much more interesting.
Well, some of it is real simple. I'm going to do Jan later. Let's do 10-year gilt right now. And yes, it's improved a little bit for Prime Minister Truss, John, but it's right at, on a yield basis, at support. There's been very little makeup off this U-turn.
I don't want to get into the weeds too much too quickly,
sure.
But the number the Bank of England has spent so far in the gilt market operation, 65 billion is the total of the package. I spoke to David Goodman over in the UK in our London team. 3 to 4 billion sterling is the number so far. They haven't actually had to spend that much, Tom, to calm this market down.
Same with the intervention in Japan going through to 145. But on the Britain LDI pension crisis, every adult I talk to says, beware, there could be more.
And pretty much every note I read over the weekend, Lisa, said the same thing. Fragility,
yeah.
Financial market instability.
Everyone seems to feel like there's this whack-a-mole playing right now, where there are nodes of instability, and policymakers come in and try to, just basically bandage over that for the time being, and then everyone seems to look for the next band-aid, the next problem, the next node of potential contagion.
Question to John: where's the Labour Party in all this?
I think they let this play out, Tom. That's what you do.
Just bite your lip.
You just give them some more rope. Give them another shovel to keep on digging. That's what you do when something like this plays out.
And this is Civics 101, but we have a schedule of elections. Do you have a schedule of elections in the United States?
Nothing on the calendar right now. We know that it's got to take place by a certain time, Tom, and it could happen before then, but nothing on the calendar right now.
Okay, absolutely fascinating. I'm learning as I go, folks, and what we're going to do is follow the markets here. John, to start the data, what do you got?
I think we've got to start with Credit Suisse. Lisa, front and centre, you're talking about all these little files we've got to put out. Credit Suisse is down by 8%. In Swiss trading. We're getting absolutely hammered.
Yeah, and this comes as the CEO says, just wait enough time for us to be able to give you some sort of plan. And the market isn't waiting. So what happens? How do they address this more quickly? And how do they come up with something that's comprehensive, John, at a time when the market's pushing back and they have a lot of issues?
We were talking about whether this market could wait for the Bank of England on November 3rd. You're going to have to wait for the Credit Suisse CEO until October 27th, Tom. October 27th.
First thing I looked at, John, you can do this on the BQ screen in the terminal for those with a terminal. Price to book, 0.21. Okay, it's trading, I'm going to guess, at 1/7, 1/8 of JP Morgan. This is at a point where in America this gets solved by regulators, and the mystery to me, and I'm uncertain, is it the Swiss regulators? Is it regulators in London? I just don't know. But we're at a delicate point where it was in the news. Everybody knows is in the news. Credit default swaps, which I'm not a big believer in, blow out. But where are the regulators this morning? Did they do a cash call?
Are they going to raise capital? That's been part of the story. The story has been they might have to raise capital to install the new strategic plan. Whether they can wait until the end of October.
We're looking for $10,000.
I think it's going to be a lot more than 10K if they do need to raise capital. Credit Suisse is down by about 8%. I'll whip through the rest of the market for you. Equity futures look a little something like this on the S&P 500. Futures are just about flat this morning on the S&P. We are positive 5 or 6 points, up 0.1%. Yields are lower by 5 basis points on a 10-year to 377.45. Bramo, euro dollar, 97.63.
Yeah, right now we are watching what happens in Europe, especially as you get a slew of different finance ministers and leaders meeting in Luxembourg for the European Union to discuss what's going on with inflation, what's going on heading into this winter with energy prices. We're going to catch up a little later in the show with Maria Tadeo and one of the members of that EU group. I've been watching inflation, and we did see year over year, if you take a look at the overall Eurozone, this is just showing Spain, but if you look at the overall Eurozone inflation, it has reached 10%, the highest level in the bloc's history. How do they counter this at a time when they're dealing with a very politically fraught issue, which we'll also talk about later in the show? Wednesday, I am so interested in how this is going to play out. OPEC Plus is going to meet for the first time in person since the pandemic, potentially deciding to cut oil production by the most going back also to the heart of the pandemic. How will this play politically at a time when you've got President Biden saying, please do more, please produce more, we need to lower these prices in order to reduce inflation? Oh, and by the way, guess who may come? The Russian oil minister. And how much does that sort of play into the alliance there and create friction between OPEC Plus and the United States and Western allies? And also on Friday, this really is the big event, U.S. non-farm payrolls. The high expectation, the high analyst projection is for 389,000 jobs created. The low is about 200,000 jobs. I'm watching the nature of those jobs. Are they part-time? Are they full-time? Are we seeing a greater number of people coming into the market at a time when a lot of people are saying we need to see the unemployment rate go up to about 4.5%, that's the Fed's target, in order to reduce some of the inflationary pressures? John, is a good number, bad number for the markets?
Are we starting that early?
I mean, honestly, how much are we looking for some sort of deceleration in the labor market to say to the Fed, okay, maybe you don't have to go quite as quickly, and maybe you can just hike and then wait?
Lisa, thank you. It's good news, bad news, Tom. Payrolls Friday. I know you're excited for that.
That's
Bad
a long
news,
way.
good news, good
Come
news,
on,
bad news.
you taught me, John, that Monday, ISM Monday matters.
ISM Monday.
Today matters.
I agree with you.
We got all this other stuff going on, but you know what, folks? We'll bring you the data and the econo-babble through the morning.
Looking forward to that. Cable right now, sterling against the US dollar, 111.71. Joining us from Birmingham is Bloomberg's Lizzie Burden out of the UK. Morning, Lizzie.
Morning, John. Well, I'm at Conservative Party conference and I'm sat here with Chloe Smith, the Secretary of State for Work and Pensions. Chloe, thank you so much for making time for me. It's a wild morning here in Birmingham. This budget that the Chancellor had announced was described as reverse Robin Hood. At the one end, you were cutting the top rate of income tax. That has now been reversed. But at the other end, the Chancellor said he'd cut the benefits of people who were not trying hard enough to get a job. Are you not going to U-turn on that as well when it's equally politically toxic?
I think the key point about the growth package that the Chancellor set out is that it is all about getting more people into jobs and getting higher wages. And in fact, you can see that around us as a slogan here at the conference. It's painted on the stairs just over there that we want to be able to deliver more jobs and higher wages. Now, the majority of the growth package set out was to be able to do that. For example, including putting money straight back into people's pockets through the adjustment to the lower rate of income tax. And of course, that builds on the cost of living package and the energy price guarantee. Now, my role is then to be able to help people into those jobs that growth package will create. And that to me is a real priority.
So to pay for all your tax cuts, to have any credibility in markets, you're going to have to cut spending. The one thing that the Prime Minister promised yesterday was that she was going to raise pensions in line with inflation. We're in a cost of living crisis. Has the Chancellor asked you to look at cutting benefits?
The Prime Minister was right to talk about the triple lock on pensions. That's been a commitment of ours for a while, and that's been a clear public commitment already. Now, naturally, there is then also the decision to be taken about benefits uprating. This is one for me to take in my role. I can't tell you here and now what that will be and what the data that goes inside it will be, because I have to wait for that data to come to me. Now, the key principle, though, that I want to take in approaching that decision is how we can best protect the most vulnerable in our society. And for me, this builds on those elements of the cost of living support that we have already been doing and delivering. My department has been making payments to people, and there'll be more coming out very shortly, that are supporting people at that time of real need.
But why is it fair to guarantee pensions, not benefits, in a cost of living crisis? People need to plan now.
And one of the other principles that I really want to look at here is how we protect those who can't perhaps work to raise their own earnings. So, for example, that would usually include pensioners, and it may well include others as well. These are the principles that I'm thinking about very carefully as part of that decision. But let me also say this. As a party, we are about helping more people into work. We shouldn't be writing people off and saying that they can't work. We should instead be looking at what people can do rather than what they cannot do. So that's what the growth package is all about. And that's the golden thread that you see going through the rest of the work of my department, helping people into work and ensuring that there is an incentive to work.
OK, so you mentioned pensions. Last week, the Bank of England had to step in to bail out the pensions industry from a systemic crash that was triggered by your government. Are you having emergency meetings with the pensions regulator and asset managers? And if so, what proposals are being discussed?
Well, colleagues are having the right meetings, of course, with the pensions regulator, with the Treasury, and across my department as well. I can't give you further details than that, but I'm glad that the Bank of England was able to take the action that they did last week. And naturally, we are keeping a very close eye on this situation because we want there to be a thriving pension industry in this country. That is an essential part of supporting people in their retirement.
Chloe Smith, Secretary of State for the Department of Work and Pensions, thank you very much for joining me. John, the question remains then, what happens when the Bank of England's rescue package ends on October the 14th? Unclear if we're going to have the same issues for LDIs.
Hey, Lizzie, thank you. Looking forward to catching up with you through the next couple of days. Lizzie Burden there out of the United Kingdom. A lot of people describing that October 14th line in the sand, Lisa, as somewhat of a cliff edge for this gilt market and perhaps even for this Bank of England and the government too.
Yeah, how much is this going to have to be a response that we see from policymakers, from Liz Truss's administration? We just saw a response from them. How much is it going to have to be that as the trigger breaker at a time when they're dealing with inflation and the Bank of England is kind of caught between a rock and a hard place?
The City had this to say this morning, Tom. Vasilios Giannakis, walking back on a top rate tax cut will mean 2 billion sterling less out of the total 45 billion cost for the next 2 years.
I thought his note was brilliant over the uproar of this politically, but the market pros are watching a lot of other data, including the recent inflation we've seen, John. It's higher. Is it going to be higher? It's going to print higher in the United Kingdom.
Live from New York City this morning. Good morning. This is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. British Prime Minister Liz Truss has done a U-turn. She's dropped a plan to cut taxes for the highest earners just 10 days after it was announced. It's an attempt for Truss to fend off from a rebellion from her lawmakers in her own Conservative Party. Chancellor of the Exchequer, Kwasi Kwarteng, says the tax cut had become a distraction. Truss and Kwarteng will be hoping to end days of market turmoil that followed his fiscal package. The price of oil jumped today. There are indications that the OPEC Plus alliance may slash production by more than 1 million barrels a day to revive plunging prices. A cutback of that size would be the biggest since the pandemic. OPEC Plus meets Wednesday in Vienna. Another defeat for Russian forces in Ukraine. Several thousand Russian troops withdrew from the strategic town of Liman over the weekend. They were outnumbered and increasingly encircled by Ukrainian forces. Liman is in the Donbas region, one of 4 annexed by President Vladimir Putin. In Brazil, the presidential election is headed for a runoff. On October 30th, voters will choose between President Jair Bolsonaro and his leftist rival, former President Luiz Inácio Lula da Silva. Lula had the bigger share of votes on Sunday, but fell short of the absolute majority he needed to win. And shares of Credit Suisse fell to a record low today, and the cost of insuring the bank's bonds against default climbed to a new high. In a memo to employees, new CEO Ulrich Korner said Credit Suisse has a strong capital base and liquidity position. He will announce a turnaround on a plan October 27th. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
I'm going to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leni Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer On Bloomberg.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Jobs were right on target.
Pretty much in line with what Wall Street expected.
A Goldilocks jobs report.
This Friday, the surveillance team brings you the crucial jobs data and expert analysis at terminal speed.
Does this imply that central banks will blink?
They want to see a little bit more slack in this labor market.
I don't think the Fed wants to see unhappy people.
There is a lot of monetary contraction and austerity coming down the pike.
The September Jobs Report, Friday on Bloomberg Television and Radio.
All of you who are looking for a pivot, be careful what you wish for, because this pivot only happens if you have an economic accident or financial accident. And the journey to an economic and financial accident is a very painful journey.
Mohamed El-Erian, just absolutely fantastic through last week, guiding us through some of this market carnage over the last couple of quarters as well. Live from New York City this morning. Good morning. The price action shaping up as follows on the S&P 500, relatively unchanged after 3 consecutive quarters of losses on the S&P. The longest quarterly losing streak going back to 2009. Futures right now up 1/10%. Yields lower by 4 or 5 basis points, 378. I make it about 9 straight weeks, 9 consecutive weeks of 10-year yields climbing, TK. 9 weeks, yields up.
And this is the underplayed story this morning. There's lots of other distractions, including what Lizzie Burden just talked about in Birmingham. But you're absolutely right. It's about the technical construction of yields here, there, and everywhere. As an aside, including in Japan, with a 145 yen, John, we're almost back to that intervention point. And again, that's linked into their yield manipulation. A lot of that going on.
We're going to nail this. Birmingham. You've got this.
Birmingham. Which teams are from there?
Birmingham. Aston Villa and Birmingham.
Aston Villa, I did not
Birmingham
know.
City, yeah.
Would you rather
instead of Birmingham,
Which
Alabama?
Beatle is from Birmingham?
That doesn't really help.
Birmingham.
Which Beatle is from Birmingham?
We can do Brummie accents in the next commercial break as well. We'll practice
Is that what
too.
Lizzie has?
That's not what Lizzie
I
has.
can't even understand.
That's
like,
closer to what
3 words.
I might have had if I'd stayed there a little bit longer.
But you've become posh.
My cousins, I wouldn't say I've become posh. My cousins have a bit of a Brummie accent too.
Okay.
There you go.
Are we done?
That was the clinic, the
I
education.
want to talk to you, John, right now before we get to Lori Calvasina. A decade per year return. SPX way outdoes Russell 2000, John. SPX up 12% per year. Russell 2000 up 9%. The small caps underperform.
Do you think the return assumptions need to shift lower for the next 10 years?
Maybe they're shifting right now. Let's do that right now with Calvasina of RBC Capital Markets. Lori, is it small caps time?
Hi, thanks for having me, Tom. And I think it is. If you look at small cap relative to large cap, just pull up the RTY against the SPX on your Bloomberg. We've been in sort of a trading range all year on the relative trade. And if you look at small caps, we're basically at historic valuations on both an absolute and relative valuation. We've already priced in a big spike in jobless claims. And typically you want to buy small caps when the unemployment rate starts to tick up. So you want to keep that in mind as we look ahead to Friday. But I will just say this, small caps have really been orphaned for quite some time.
Yes.
They are more domestic, and we are hearing a lot of interest in small caps, even from people who are very bearish on the market overall. So
Right.
we're overweight, and we feel very good about that call.
In the turmoil we're in, including low GDP, will there be transactions and combinations that combine small caps into mid caps?
It's interesting, Tom. I mean, we have been combing the transcripts among the big cap companies for commentary about M&A, and we're not seeing it pick up yet, so I wouldn't say it's necessarily imminent. But I do think that when you're in a sluggish growth environment, and I think that's the price we have to pay for a short, shallow recession, if indeed that's what we end up getting, I do think companies will try to go out and buy growth. And we find that a lot of small cap companies are also much better run than they were in the past, much cleaner balance sheets, much higher quality management teams. So we think the asset base is more attractive than it may have been in past cycles as well.
Lori, is overweighting small caps a fight to lose less or actually to get returns that are bigger than some of the negative returns that we're seeing across the board on broad indexes?
I think it's a great question, Lisa, and I think that depends on your time horizon. In the short term, as stocks search for a bottom, I do think it's unlikely that small caps will start going up while everything else is still going down. So it may simply just be that you lose less on the way down to kind of find that absolute bottom. But at the same time, I will tell you, Lisa, when you talk to people who have done small cap for a very long time, and you go back and look at the history, the pivots back into small cap tend to be pretty sharp. So I do think it's an area where if you really kind of wait around and try to pick the bottom in the market, you're going to miss the turn. And you do tend to make a lot of that outperformance in those early days in the trade.
Right now, we're looking at 35.85 and close on Friday for the S&P 500. Your target for your end is 4,200. What's the trigger? What's the pivot point that gets us up there? Is it just the bear market rally that we heard about from a number of analysts?
I think that's one thing you can look at. I mean, we actually found if you look at the S&P 500 this year in 2022, it's got about a 72% correlation with how stocks were trading back in 2002, which was another period of kind of painful normalization after a big market shock and initial rally. And so if you sort of go through that playbook, there was a fierce 4Q rally, and then you gave most of it back in the first quarter. That seems like a plausible way for things to turn out this time around as well. I think also, Lisa, we're about a month out from the midterm elections. Go back to the summer, I started really getting an earful from a lot of investors about how that would be a potentially positive catalyst for markets. So we do think that's something on investors' radar. And if you look at the generic congressional ballot, after several weeks of seeing the polling data kind of shift back in Democrats' favor, we actually saw the Republicans pull ahead of Democrats in the generic congressional ballot data last week. So things are starting to shift a little bit in a more market-friendly way in the latest data there.
Laurie, just wanted to squeeze this in. Nike, FedEx, Apple, Tesla missing this morning. What are you learning from corporations about how quickly this downturn is coming around?
Well, look, I think what we are learning, John, is that we are starting to see some companies rip off the earnings Band-Aid. And if you go back to the summer, that is something investors were telling me they really needed to see happen to get comfortable with buying markets. People said, we want to buy stocks around 15 times PE, the market around 15, 16 times PE, but we just need a little bit of certainty on that E. We need to see the numbers come down. We'll see if the early reporters turn out to be a harbinger of what's to come in the actual reporting season. But I do think, kind of getting those earnings expectations down is something that we really need to see.
Hey, Laurie, thank you. Awesome as always. Laurie Cavacina there of RBC Capital Markets. Earnings season unofficially kicking off with JP Morgan, as you guys know, October 14th. So, Lisa, a lot happening on October 14th.
I was about to say, is that sort of correlation or causation that the Bank of England is going to possibly end their intervention on the same day that JP Morgan reports earnings? I don't know. You decided
for yourself. You think the stage was set deliberately that way?
No, I'm just playing around. I'm just playing around. But it is going to be really pivotal. I don't know how much JP Morgan is necessarily going to be the harbinger of what's to come, and if Nike and Tesla might be even more of a harbinger at a time when people are looking at the on-the-ground supply chain disruptions of making stuff, not just financial markets and the engineering.
As you would say, the physical world.
Yes,
the
correct.
Physical world. Tom, third quarter deliveries of Mr. Tesla. And that statement, I think, could have happened maybe 12 months ago, maybe before that. We're still talking about the same thing, supply chain disruptions. And here we are at the end of 22.
It's really important to take this supply chain thing and pull it out farther on the x-axis. And it gives you more uncertainty, and particularly in the United Kingdom, where they're hugely constrained by supply and demand dynamics, and it folds into Brexit and all that. John, I'm just saying the x-axis goes out, and this is data October this week.
So we're pushing out the supply chain problems and bringing forward the earnings issues. That's not great for earnings season going into that next month.
What did Mike Wilson say? That light at the end of the tunnel is really a freight train?
Oh, that's deep.
Yeah, coming
Super
for
deep.
earnings.
Oh, great. Thank you, Lisa.
Yeah, that was a CFA case study.
Whack-a-mole playing right now, where there are nodes of instability and policymakers come in and try to, just basically bandage over that for the time being. And then everyone seems to look for the next band-aid, the next problem, the next node of potential contagion.
Question to John. Where's the Labour Party in all this?
I think they let this play out, Tom. That's what you do.
Just bite your lip and
you just give them some more rope. Give them another shovel to keep on digging. That's what you do when something like this plays out.
And this is Civics 101, but we have a schedule of elections. Do you have a schedule of elections in the United States?
Nothing on the calendar right now. We know that it's got to take place by a certain time, Tom, and it could happen before then, but nothing on the calendar right now.
Okay, absolutely fascinating. I'm learning as I go, folks, and what we're going to do is follow the markets here. John, to start the data, what do you got?
I think we've got to start with Credit Suisse. Lisa, front and centre, you're talking about all these little files we've got to put out. Credit Suisse is down by 8% in Swiss trading. We're getting absolutely hammered.
Yeah, and this comes as the CEO says, just wait enough time for us to be able to give you some sort of plan. And the market isn't waiting. So what happens? How do they address this more quickly? And how do they come up with something that's comprehensive, John, at a time when the market's pushing back and they have a lot of issues?
We were talking about whether this market could wait for the Bank of England on November 3rd. You're going to have to wait for the Credit Suisse CEO until October 27th, Tom. October 27th.
First thing I looked at, John, you can do this on the BQ screen in the terminal for those with a terminal. Price to book, 0.21. Okay, it's trading, I'm going to guess, at 1/7, 1/8 of JP Morgan. This is at a point where in America this gets solved by regulators, and the mystery to me, and I'm uncertain, is it the Swiss regulators? Is it regulators in London? I just don't know. But we're at a delicate point where it was in the news. Everybody knows is in the news. Credit default swaps, which I'm not a big believer in, blow out. But where are the regulators this morning? Did they do a cash call?
Are they going to raise capital? That's been part of the story. The story has been they might have to raise capital to install the new strategic plan. Whether they can wait until the end of October.
We're looking for $10,000.
I think it's going to be a lot more than 10K if they do need to raise capital. Credit Suisse is down by about 8%. I'll whip through the rest of the market for you. Equity futures look a little something like this on the S&P 500. Futures are just about flat this morning on the S&P. We are positive 5 or 6 points, up 0.1%. Yields are lower by 5 basis points on a 10-year to 377.45. Bramo, euro dollar, 97.63.
Yeah, right now we are watching what happens in Europe, especially as you get a slew of different finance ministers and leaders meeting in Luxembourg for the European Union to discuss what's going on with inflation, what's going on heading into this winter with energy prices. We're going to catch up a little later in the show with Maria Tadeo and one of the members of that EU group. I've been watching inflation, and we did see year over year, if you take a look at the overall Eurozone, this is just showing Spain, but if you look at the overall Eurozone inflation, it has reached 10%, the highest level in the bloc's history. How do they counter this at a time when they're dealing with a very politically fraught issue, which we'll also talk about later in the show? Wednesday, I am so interested in how this is going to play out. OPEC Plus is going to meet for the first time in person since the pandemic, potentially deciding to cut oil production by the most going back also to the heart of the pandemic. How will this play politically at a time when you've got President Biden saying, please do more, please produce more, we need to lower these prices in order to reduce inflation? Oh, and by the way, guess who may come? The Russian oil minister. And how much does that sort of play into the alliance there and create friction between OPEC Plus and the United States and Western allies? And also on Friday, this really is the big event, U.S. non-farm payrolls. The high expectation, the high analyst projection is for 389,000 jobs created. The low is about 200,000 jobs. I'm watching the nature of those jobs. Are they part-time? Are they full-time? Are we seeing a greater number of people coming into the market at a time when a lot of people are saying we need to see the unemployment rate go up to about 4.5%, that's the Fed's target, in order to reduce some of the inflationary pressures? John, is a good number, bad number for the markets?
Are we starting that early?
I mean, honestly, how much are we looking for some sort of deceleration in the labor market to say to the Fed, okay, maybe you don't have to go quite as quickly, and maybe you can just hike and then wait?
Lisa, thank you. It's good news, bad news, Tom. Payrolls Friday. I know you're excited for that.
That's a long way. Come on, you taught me, John, that Monday, ISM Monday matters.
ISM Monday.
Today matters.
I agree with you.
We got all this other stuff going on, but you know what, folks? We'll bring you the data and the econo babble through the morning.
Looking forward to that. Cable right now, sterling against the US dollar, 111.71. Joining us from Birmingham is Bloomberg's Lizzie Burden out of the UK. Morning, Lizzie.
Morning, John. Well, I'm at Conservative Party conference and I'm sat here with Chloe Smith, the Secretary of State for Work and Pensions. Chloe, thank you so much for making time for me. It's a wild morning here in Birmingham. This budget that the Chancellor had announced was described as reverse Robin Hood. At the one end, you were cutting the top rate of income tax. That has now been reversed. But at the other end, the Chancellor said he'd cut the benefits of people who were not trying hard enough to get a job. Are you not going to U-turn on that as well when it's equally politically toxic?
I think the key point about the growth package that the Chancellor set out is that it is all about getting more people into jobs and getting higher wages. And in fact, you can see that around us as a slogan here at the conference. It's painted on the stairs just over there that we want to be able to deliver more jobs and higher wages. Now, the majority of the growth package set out was to be able to do that. For example, including putting money straight back into people's pockets through the adjustment to the lower rate of income tax. And of course, that builds on the cost of living package and the energy price guarantee. Now, my role is then to be able to help people into those jobs that growth package will create. And that, to me, is a real priority.
So to pay for all your tax cuts, to have any credibility in markets, you're going to have to cut spending. The one thing that the Prime Minister promised yesterday was that she was going to raise pensions in line with inflation. We're in a cost of living crisis. Has the Chancellor asked you to look at cutting benefits?
The Prime Minister was right to talk about the triple lock on pensions. That's been a commitment of ours for a while, and that's been a clear public commitment already. Now, naturally, there is then also the decision to be taken about benefit separating. This is one for me to take in my role. I can't tell you here and now what that will be and what the data that goes inside it will be, because I have to wait for that data to come to me. Now, the key principle, though, that I want to take in approaching that decision is how we can best protect the most vulnerable in our society. And for me, this builds on those elements of the cost of living support that we have already been doing and delivering. My department has been making payments to people, and there'll be more coming out very shortly, that are supporting supporting people at that time of real need.
But why is it fair to guarantee pensions, not benefits, in a cost of living crisis? People need to plan now.
And one of the other principles that I really want to look at here is how we protect those who can't perhaps work to raise their own earnings. So, for example, that would usually include pensioners, and it may well include others as well. These are the principles that I'm thinking about very carefully as part of that decision. But let me also say this. As a party, we are about helping more people into work. We shouldn't be writing people off and saying that they can't work. We should instead be looking at what people can do rather than what they cannot do. So that's what the growth package is all about. And that's the golden thread that you see going through the rest of the work of my department, helping people into work and ensuring that there is an incentive to work.
OK, so you mentioned pensions. Last week, the Bank of England had to step in to bail out the pensions industry from a systemic crash that was triggered by your government. Are you having emergency meetings with the pensions regulator and asset managers? And if so, what proposals are being discussed?
Well, colleagues are having the right meetings, of course, with the pensions regulator, with the Treasury, and across my department as well. I can't give you further details than that, but I'm glad that the Bank of England was able to take the action that they did last week. And naturally, we are keeping a very close eye on this situation because we want there to be a thriving pension industry in this country. That is an essential part of supporting people in their retirement.
Chloe Smith, Secretary of State for the Department of Work and Pensions, thank you very much for joining me. John, the question remains then, what happens when the Bank of England's rescue package ends on October the 14th? Unclear if we're going to have the same issues for LDIs.
Hey, Lizzie, thank you. Looking forward to catching up with you through the next couple of days. Lizzie Burden there out of the United Kingdom. A lot of people describing that October 14th line in the sand, Lisa, as somewhat of a cliff edge for the gilt market and perhaps even for this Bank of England and the government too.
Yeah, how much is this going to have to be a response that we see from policymakers, from Liz Truss's administration? We just saw a response from them. How much is it going to have to be that as the trigger breaker at a time when they're dealing with inflation and the Bank of England is kind of caught between a rock and a hard place?
The City had this to say this morning, Tom. Vasilios Giannakis, walking back on a top-rate tax cut will mean 2 billion sterling less out of the total 45 billion cost for the next 2 years.
I thought his note was brilliant over the uproar of this politically, but the market pros are watching a lot of other data, including the recent inflation we've seen, John. It's higher. Is it going to be higher? It's going to print higher in the United Kingdom.
Live from New York City this morning. Good morning. This is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. British Prime Minister Liz Truss has done a U-turn. She's dropped a plan to cut taxes for the highest earners just 10 days after it was announced. It's an attempt for Truss to fend off from a rebellion from her lawmakers in her own Conservative Party. Chancellor of the Exchequer, Kwasi Kwarteng, says the tax cut had become a distraction. Truss and Kwarteng will be hoping to end days of market turmoil that followed his fiscal package. The price of oil jumped today. There are indications that the OPEC Plus alliance may slash production by more than 1 million barrels a day to revive plunging prices. A cutback of that size would be the biggest since the pandemic. OPEC Plus meets Wednesday in Vienna. Another defeat for Russian forces in Ukraine. Several thousand Russian troops withdrew from the strategic town of Liman over the weekend. They were outnumbered and increasingly encircled by Ukrainian forces. Liman is in the Donbas region, one of 4 annexed by President Vladimir Putin. In Brazil, the presidential election is headed for a runoff. On October 30th, voters will choose between President Jair Bolsonaro and his leftist rival, former President Luiz Inácio Lula da Silva. Lula had the bigger share of votes on Sunday, but fell short of the absolute majority he needed to win. And shares of Credit Suisse fell to a record low today, and the cost of insuring the bank's bond against default climbed to a new high. In a memo to employees, new CEO Ulrich Körner said Credit Suisse has a strong capital base and liquidity position. He will announce a turnaround and a plan October 27th. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
I'm going to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but you know, some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It's the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leanie Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Jobs were right on target.
Very much in line with what Wall Street expected.
A Goldilocks jobs report.
This Friday, the surveillance team brings you the crucial jobs data and expert analysis at terminal speed.
Does this imply that central banks will blink?
They want to see a little bit more slack in this labor market.
I don't think the Fed wants to see unhappy people.
There is a lot of monetary contraction and austerity coming down the pipe.
The September Jobs Report, Friday on Bloomberg Television and Radio.
All of you who are looking for a pivot, be careful what you wish for, because this pivot only happens if you have an economic accident or financial accident. And the journey to an economic and financial accident is a very painful journey.
Mohamed El-Erian, just absolutely fantastic through last week, guiding us through some of this market carnage over the last couple of quarters as well. Live from New York City this morning. Good morning. The price action shaping up as follows on the S&P 500, relatively unchanged after 3 consecutive quarters of losses on the S&P. The longest quarterly losing streak going back to 2009. Futures right now up 1/10%. Yields lower by 4 or 5 basis points, 378. I make it about 9 straight weeks, 9 consecutive weeks of 10-year yields climbing TK. 9 weeks, yields up.
This is the underplayed story this morning. There's lots of other distractions, including what Lizzie Burden just talked about in Birmingham. But you're absolutely right. It's about the technical construction of yields here, there, and everywhere. It is an aside, including in Japan, where the 145 yen, John, we're almost back to that intervention point. And again, that's linked into their yield manipulation. A lot of that going on.
We're going to nail this. Birmingham. You've got this.
Birmingham. Which teams are from there?
Birmingham. Aston Villa and Birmingham.
Aston Villa, I did not know.
Birmingham City, yeah.
Would you rather
Instead of Birmingham,
Which
Alabama.
Beatle is from Birmingham?
That doesn't really help.
Birmingham.
Which Beatle is from Birmingham?
We can do Birmingham accents in the next commercial break as well. We'll practice
Is that what
too.
Lizzie has?
That's not what Lizzie has.
I can't even understand.
That's
like,
closer to what I
words.
might have had. By 4 or 5 basis points, 378. I make it about 9 straight weeks, 9 consecutive weeks of 10-year yields climbing TK. 9 weeks, yields up.
And this is the underplayed story this morning. There's lots of other distractions, including what Lizzie Burden just talked about in Birmingham. But you're absolutely right. It's about the technical construction of yields here, there, and everywhere. It is an aside, including in Japan, where the 145 yen, John, we're almost back to that intervention point. And again, that's linked into their yield manipulation. A lot of that going on.
We're going to nail this. Birmingham. You've got this.
Birmingham. Which teams are from there?
Birmingham. Aston Villa and Birmingham.
Aston Villa, I did not know.
Birmingham City, yeah.
Would you rather
Instead of Birmingham,
Which
Alabama.
Beatle is from Birmingham?
That doesn't really help.
Birmingham.
Which Beatle is from Birmingham?
We can do Birmingham accents in the next commercial break as well. We'll practice
Is that what
too.
Lizzie has?
That's not what Lizzie has.
I can't even understand.
That's
like,
closer to what I
words.
might have had if I'd stayed there a little bit longer.
But you've become posh.
My cousins, I wouldn't say I've become posh. My cousins have a bit of a Birmingham accent too.
Okay.
There you go.
Are we done?
That was the clinic.
I want to talk to you, John, right now before we get to Lori Calvasina. A decade per year return. SPX way outdoes Russell 2000, John. SPX up 12% per year. Russell 2000 up 9%. The small caps underperform.
Do you think the return assumptions need to shift lower for the next 10 years?
Maybe they're shifting right now. Let's do that right now with Calvasina of RBC Capital Markets. Lori, is it small caps time?
Hi, thanks for having me, Tom. And I think it is. If you look at small cap relative to large cap, just pull up the RTY against the SPX on your Bloomberg. We've been in sort of a trading range all year on the relative trade. And if you look at small caps, we're basically at historic valuations on both an absolute and relative valuation. We've already priced in a big spike in jobless claims. And typically you want to buy small caps when the unemployment rate starts to tick up. So you want to keep that in mind as we look ahead to Friday. But I will just say this, small caps have really been orphaned for quite some time.
Yes.
They are more domestic, and we are hearing a lot of interest in small caps, even from people who are very bearish on the market overall. So
Right.
we're overweight, and we feel very good about that call.
In the turmoil we're in, including low GDP, will there be transactions and combinations that combine small caps into mid caps?
It's interesting, Tom. I mean, we have been combing the transcripts among the big cap companies for commentary about M&A, and we're not seeing it pick up yet, so I wouldn't say it's necessarily imminent. But I do think that when you're in a sluggish growth environment, and I think that's the price we have to pay for a short, shallow recession, if indeed that's what we end up getting, I do think companies will try to go out and buy growth. And you know, we find that a lot of small cap companies are also much better run than they were in the past, much cleaner balance sheets, much higher quality management teams. So we think the asset base is more attractive than it may have been in past cycles as well.
Lori, is overweighting small caps a fight to lose less or actually to get returns that are bigger than some of the negative returns that we're seeing across the board on broad indexes?
I think it's a great question, Lisa, and I think that depends on your time horizon. In the short term, as stocks search for a bottom, I do think it's unlikely that small caps will start going up while everything else is still going down. So it may simply just be that you lose less on the way down to kind of find that absolute bottom. But at the same time, I will tell you, Lisa, when you talk to people who have done small cap for a very long time, and you go back and look at the history, the pivots back into small cap tend to be pretty sharp. So I do think it's an area where if you really kind of wait around and try to pick the bottom in the market, you're going to miss the turn. And you do tend to make a lot of that outperformance in those early days in the trade.
Right now, we're looking at 35.85 and close on Friday for the S&P 500. Your target for your end is 4,200. What's the trigger? What's the pivot point that gets us up there? Is it just the bear market rally that we heard about from a number of analysts?
I think that's one thing you can look at. I mean, we actually found if you look at the S&P 500 this year in 2022, it's got about a 72% correlation with how stocks were trading back in 2002, which was another period of kind of painful normalization after a big market shock and initial rally. And so if you sort of go through that playbook, there was a fierce 4Q rally, and then you gave most of it back in the first quarter. That seems like a plausible way for things to turn out this time around as well. I think also, Lisa, we're about a month out from the midterm elections. Go back to the summer, I started really getting an earful from a lot of investors about how that would be a potentially positive catalyst for markets. So we do think that's something on investors' radar. And if you look at the generic congressional ballot, after several weeks of seeing the polling data kind of shift back in Democrats' favor, we actually saw the Republicans pull ahead of Democrats in the generic congressional ballot data last week. So things are starting to shift a little bit in a more market-friendly way in the latest data there.
Laurie, just wanted to squeeze this in. Nike, FedEx, Apple, Tesla missing this morning. What are you learning from corporations about how quickly this downturn is coming around?
Well, look, I think what we are learning, John, is that we are starting to see some companies rip off the earnings Band-Aid. And if you go back to the summer, that is something investors were telling me they really needed to see happen to get comfortable with buying markets. People said, we want to buy stocks around 15 times PE, the market around 15, 16 times PE, but we just need a little bit of certainty on that E. We need to see the numbers come down. We'll see if the early reporters turn out to be a harbinger of what's to come in the actual reporting season. But I do think, kind of getting those earnings expectations down is something that we really need to see.
Hey, Laurie, thank you. Awesome as always. Laurie Cavacina there of RBC Capital Markets. Earnings season unofficially kicking off with JP Morgan, as you guys know, October 14th. So, Lisa, a lot happening on October 14th.
I was about to say, is that sort of correlation or causation that the Bank of England is going to possibly end their intervention on the same day that JP Morgan reports earnings? I don't know. You decide.
You think the stage was set deliberately that way?
No, I'm just playing around.
Implying?
I'm just playing around. But it is going to be really pivotal. I don't know how much JP Morgan is necessarily going to be the harbinger of what's to come, and if Nike and Tesla might be even more of a harbinger at a time when people are looking at the on-the-ground supply chain disruptions of making stuff, not just financial markets and the engineering.
As you would say, the physical world.
Yes,
the physical world. Tom, third quarter deliveries a miss at Tesla. And that statement, I think, could have happened maybe 12 months ago, maybe before that. We're still talking about the same thing, supply chain disruptions. And here we are at the end of 22.
It's really important to take this supply chain thing and pull it out farther on the x-axis. And it gives you more uncertainty, and particularly in the United Kingdom, where they're hugely constrained by supply and demand dynamics, and it folds into Brexit and all that. John, I'm just saying the x-axis goes out, and this is data October this week.
So we're pushing out the supply chain problems and bringing forward the earnings issues. That's not great for earnings season. Going into that next month.
What did Mike Wilson say? That light at the end of the tunnel is really a freight train?
Oh, that's deep.
Yeah, coming
Super
for
deep.
earnings.
Oh, great. Thank you, Lisa.
Yeah, that was a CFA case study. contribution. I want to make note that he was 10 years out front on the collapse of American education and the struggle of two Americas. But Jeff, I must digress to your take on the war in Ukraine and on the Russia you knew so well under Yeltsin. You're in the Atlantic this week, and they're equating you with Mearsheimer of Chicago as the realist out there. What should be our response to Mr. Putin with your thoughts on war and aggression after the human atrocities that are reported?
Yeah, I was attacked in the Atlantic for being on the side of peace. And I confess I'm on the side of peace. I am very worried that we are on a path of escalation to nuclear war, nothing less than that. We have essentially a war in which Russia feels that this war is at the core of its security interests. The United States insists that it will do anything to support Ukraine's defeat of Russia. Russia views this as a proxy war with the United States. And whatever one thinks about this, this is a path of extraordinarily dangerous escalation. And I am very fearful.
Right. You lived this with Yeltsin. You were there for Gorbachev and Yeltsin and the rest. I remember when you got off the airplane at JFK, essentially shattered over the collapse of that first experiment. Do you have a feeling that Mr. Putin is alone? Is his military in support of him?
A lot of the world is watching the events in horror, and a lot of the world doesn't like this NATO expansion, which they interpret as at the core of this. They want to see compromise between the U.S. and Russia. In vote after vote in the United Nations, basically it's been the Western countries that have been voting for sanctions and denunciations and other actions, whereas most of the world, certainly most of the world counted by population, is on the sidelines. They just view this as a horrible clash between Russia and the United States. They don't view this as we describe it in the media as an unprovoked attack by Russia on Ukraine. That's, anyone in the United States, they'd say, well, what else is it? But that's because the way that our media have been reporting this. This conflict goes back a long time. It didn't start on February 24th, 2022. In fact, the war itself started in 2014, not in 2022. And even that had antecedents. And so most of the world doesn't see it the way we describe it, but most of the world's just terrified right now, frankly, because it's unbelievable to be hearing on one side, well, we'll use nuclear weapons if we need to, and the other side saying, you can't frighten us.
Well, and Professor Sachs, I share the concern, and I'll be honest, I spent the weekend also reading articles about the U.S. coming up with counterattacks and proposals of what they would do in response to some of these attacks. It's definitely a big concern. It's also an issue as you see the sea change in the economic trajectory in Europe and beyond. And some of this does come from the energy crisis. But suddenly we're talking about inflation that we have not seen since World War II, since potentially another time of incredible distress and military intervention. How close are we to some sort of, I don't want to say hyperinflation, but persistent inflationary impulse well above target in Germany, in the euro area, as they look to these alternative ways to suppress the peripheral region from getting out of control as they raise rates in the front end?
Well, Europe is in a very, very sharp economic downturn. The sharp decline of output and living standards also shows up as a rise of prices. But the main fact is that the European economy is getting hammered by this, by the sudden cutoff of energy. And now, to make it definitive, the destruction of the Nord Stream pipeline, which I would bet was a U.S. action, perhaps U.S. and Poland. This is
Jeff, we got to stop there. That's quite a statement as well. Why do you feel that was a U.S. action? What evidence do you have of that?
Well, first of all, there's direct radar evidence that U.S. helicopters, military helicopters that are normally based in Gdansk, were circling over this area. We also had the threats from the United States earlier in this year that one way or another, we are going to end Nord Stream. We also have a remarkable statement by Secretary Blinken last Friday in a press conference. He says, this is also a tremendous opportunity. It's a strange way to, it's a strange way to talk if you're worried about the piracy on international infrastructure of vital significance. So I know this runs counter to our narrative. You're not allowed to say these things in the West. But the fact of the matter is, all over the world, when I talk to people, they think the U.S. did it. And just to tell you, and by the way, even reporters on our papers that are involved tell me privately, yeah, well, of course, but it doesn't show up in our media.
when you've got OPEC Plus saying they need to support the integrity of pricing that has actually helped the United States and helped many other nations with lower inflation.
Futures up 22 this morning. The heart of Bloomberg surveillance is the quality of our guests, always in every case. And as we spoke to Dr. Yardeni moments ago, we speak now to Jeffrey Sachs. To say he's economic professor at Columbia University barely describes his contribution. I want to make note that he was 10 years out front on the collapse of American education and the struggle of two Americas. But Jeff, I must digress to your take on the war in Ukraine and on the Russia you knew so well under Yeltsin. You're in the Atlantic this week, and they're equating you with Mearsheimer of Chicago as the realist out there. What should be our response to Mr. Putin with your thoughts on war and aggression after the human atrocities that are reported?
Yeah, I was attacked in the Atlantic for being on the side of peace. And I confess I'm on the side of peace. I am very worried that we are on a path of escalation to nuclear war, nothing less than that. We have essentially a war in which Russia feels that this war is at the core of its security interests. The United States insists that it will do anything to support Ukraine's defeat of Russia. Russia views this as a proxy war with the United States. And whatever one thinks about this, this is a path of extraordinarily dangerous escalation. And I am very fearful.
Right. You lived this with Yeltsin. You were there for Gorbachev and Yeltsin and the rest. I remember when you got off the airplane at JFK, essentially shattered over the collapse of that first experiment. Do you have a feeling that Mr. Putin is alone? Is his military in support of him?
A lot of the world is watching the events in horror, and a lot of the world doesn't like this NATO expansion, which they interpret as at the core of this. They want to see compromise between the U.S. and Russia. In vote after vote in the United Nations, basically it's been the Western countries that have been voting for sanctions and denunciations and other actions, whereas most of the world, certainly most of the world counted by population, is on the sidelines. They just view this as a horrible clash between Russia and the United States. They don't view this as we describe it in the media as an unprovoked attack by Russia on Ukraine. That's, anyone in the United States, they'd say, well, what else is it? But that's because the way that our media have been reporting this. This conflict goes back a long time. It didn't start on February 24th, 2022. In fact, the war itself started in 2014, not in 2022. And even that had antecedents. And so most of the world doesn't see it the way we describe it, but most of the world's just terrified right now, frankly, because it's unbelievable to be hearing on one side, well, we'll use nuclear weapons if we need to, and the other side saying, you can't frighten us.
Well, and Professor Sachs, I share the concern, and I'll be honest, I spent the weekend also reading articles about the U.S. coming up with counterattacks and proposals of what they would do in response to some of these attacks. It's definitely a big concern. It's also an issue as you see the sea change in the economic trajectory in Europe and beyond. And some of this does come from the energy crisis. But suddenly we're talking about inflation that we have not seen since World War II, since potentially another time of incredible distress and military intervention. How close are we to some sort of, I don't want to say hyperinflation, but persistent inflationary impulse well above target in Germany, in the euro area, as they look to these alternative ways to suppress the peripheral region from getting out of control as they raise rates in the front end?
Well, Europe is in a very, very sharp economic downturn. The sharp decline of output and living standards also shows up as a rise of prices. But the main fact is that the European economy is getting hammered by this, by the sudden cutoff of energy. And now, to make it definitive, the destruction of the Nord Stream pipeline, which I would bet was a U.S. action, perhaps U.S. and Poland. This is
Jeff, we got to stop there. That's quite a statement as well. Why do you feel that was a U.S. action? What evidence do you have of that?
Well, first of all, there's direct radar evidence that U.S. helicopters, military helicopters that are normally based in Gdansk, were circling over this area. We also had the threats from the United States earlier in this year that one way or another, we are going to end Nord Stream. We also have a remarkable statement by Secretary Blinken last Friday in a press conference. He says, this is also a tremendous opportunity. It's a strange way to, it's a strange way to talk if you're worried about the piracy on international infrastructure of vital significance. So I know this runs counter to our narrative. You're not allowed to say these things in the West. But the fact of the matter is, all over the world, when I talk to people, they think the U.S. did it. And just to tell you, and by the way, even reporters on our papers that are involved tell me privately, yeah, well, of course, but it doesn't show up in our media.
Professor, I don't want to get into the tit for tat about what did or did not happen with Nord Stream, because I don't have the evidence and we don't have a counterbalance to this. There is an issue, though, that's at the heart of what you're saying, which is a lack of trust in the United States, a lack of cohesion in allies in the midst of incredible political as well as economic strife. I mean, do you see the likelihood of working together at a time when there are such disparate interests and feelings of distrust?
The biggest problem is that we have major geopolitical conflict, not only U.S. and Russia, but also U.S. and China. So, and again, with a tremendous amount of provocation coming from the U.S. side as well. So we're breaking any sense of stability